Independence Day. As you know, today is the Independence Day, the 15th August, and we have organized a special marathon class for all of you. As you know, that the JAB exam is scheduled in the month of November, and for that, now the question practice becomes very, very important. And that is the reason why we have this particular session, the Independence Day special. As you know that India is now been independent since 1947. More or less, we have completed 79 years and now moving towards the 80th year of independence. So one nation, one goal, and the theme talks about the JAB success as well. Stay till the end of this session. You will definitely find it useful. So let's start. Let's begin with IE and IFS. Then subsequently, the lectures, the session for PPB, AFM, and RBWM will also come in. So the idea is to give you the best questions here, best type of MCQs, and ultimately via those MCQs, you should be able to understand that what kind of questions IIBF is asking. So I will highly encourage everyone to reply to answer in the comment section, because only then we will be able to gauge the level of our preparation. Right. So first question in front of us, it is in the form of case study only. The RBI uses different measures to monitor the total stock of money in the economy. The measures being labeled M1 through M4. So starting from M1 till M4, we have the measures of money supply. These are classified based on their liquidity, how easily they can be spent. The most liquid part is M1, least liquid is M4, and whether they are considered narrow or broad money. So the narrow money stands at M1, broad money you can call M3. An economist is analyzing the financial health of a specific region. He gathers the following data from the local banking along with the post office systems as well. So the components are given here. Currency with public is given as 5,000 crore. Demand deposit with the banks, it is given as 4,000 crore. Other deposits with RBI mentioned as 500 crore. Saving deposits with the post office 1,200 crore. Time deposit, also called as fixed deposit with the banks, it is 8,000 crores. Lastly, you also have the total post office deposits excluding national savings certificates amounting to 2,500 crore. So this is the information, this is the case which you have to analyze. And now, based on that case, try to answer the questions. What is the value of M3 in rupees crores? When you talk about M3, it is simply equal to what? It will be equal to M1 plus the time deposit. And what is M1? M1 is simply currency with public plus demand deposit plus other deposits with the RBI. This is the ultimate formula for M1. So simply in all the three components, add the time deposit, you will get the M3 as the right answer. So currency with public, it is mentioned as 5,000 crore. Add demand deposit. This will come out to be what? 9,000 CR. Along with that, you also have to add the other deposits with RBI. That is rupees 500. So add the 500 rupee 9,000, you will get 9,500 crore as the M1. You have to find M3. Simply in M1, add the time deposit, which is 8,000. So 8,000 plus 9,500. What will be the right answer here? You will get 17,500 crore as the correct answer. So the right answer stands at option A. Right? I hope that everyone will arrive at this right answer as option A. Right? Simple question if you know the formula. Consider the following statements. M1 excludes all the post office deposits. So here, not only you have to know the formula, but also certain kind of analysis also is required. Whenever we talk about analysis part, this is where you should hit. The application part is started by the IIBF now. You should not be at ease with the formula only, but also you must analyze that how we are arriving at a particular formula. So M1 excludes all the post office deposits. In M1, we do not have any kind of post office deposit. So this is a correct statement. M2 is always greater than M3 in the given data. So it is not true. Fine. You cannot just correlate two terms, M2 and M3, when they have different components. M2 has the component of M1 plus the post office savings part. M3 has M1 plus the time deposit. So although both these have M1 as a one component, but ultimately there is a difference between the post office saving component and the time deposit. So you cannot relate these two as such and cannot arrive at such conclusion that M2 is always greater than M3. This is a wrong statement. M3 does not include any post office deposits. Yes, nothing of that sort is mentioned in the M3. No component has post office as one of its parameter. So this is again a correct statement. M4 includes components that are less liquid than those in M1. In the first initial reaction only we have given you that M1 is the most liquid one, M4 is the least liquid of all. So what will be the correct answer here? 1, 3 and 4. Second is a wrong statement. Correct answer comes out to be option B. Yes, B is the right answer. Then if 2000 rupees, 2000 crore rupees is shifted from currency with public to demand deposits, what will be the impact? So when you talk about currency with public and demand deposit, you have two different components. Currency with public is a different component altogether. Demand deposit is again a different component, and both these components are a part of M1, right? So not only you will have to remember the formula, but also tend to analyze the formula. If you can analyze, then only things will change. Then only you will be in a position to answer correctly. What will be the impact? M1 increases. If we talk about M1, both of these are in M1 only. So whenever we talk about shifting the currency from currency with public to demand deposit, do you think so that any change will happen to M1? M1 is what? Currency with the public plus demand deposit plus other deposits with the RBI. If I add 2000 here or 2000 here, wherever I am adding, ultimately the cumulative aspect is that M1 is rising, right? M1 will rise, but it does not matter that whether I am putting 2000 here or here. If initially, let's suppose 2000 was in the currency with the public, now I eliminate this component and move the 2000 here in the demand deposit, which is mentioned in the question. So the net change is zero. Nil change will be there. So M1 will increase? No. M1 will decrease? No. M1 will remain unchanged. C is the right answer. Fine. Then which among the following statements is the most accurate? Try to answer this question, the most accurate one. All the components of M2 are included in M3. So do you think that M2 and M3 components, they are having some overlap, right? All the components of M2 and M3, they are having some commonality. So no, M3 has M1 plus your time deposit. M2 is having M1 plus the post office saving deposit. So all the components of M2 are included in M3? No, we have a difference of post office saving and time deposit. So this is a wrong statement. M3 is independent of M1. Again, no, M1 is indeed a part when we calculate the M3. So this is a wrong statement. M4 includes saving deposits twice. No, M4 is equal to M3 plus all the deposits under the post office. So it is not having doubly deposit of your savings deposits in the post office. So this is again wrong. M2 includes a component not present in M3. So M3, yes, we have the component as time deposit, which is not there in the post office saving deposit. So correct answer, the most accurate one is option D. D is the right one. Then M1 is the most liquid measure of money that everybody knows. It excludes the time deposit and post office deposit. Yes, when you talk about the liquidity, you will find that why M1 is the most liquid of all, because it's not having time deposit, not having the post office deposit. There is no long term deposit included in the M1. So definitely the reason is correct, the assertion is also correct, and reason is explaining correctly the particular assertion. So the right answer will be what? Both A and R are true, and R indeed explains A. Correct answer, option A. Fine. Okay, so I hope that this particular question is clear to everyone. It is very important to understand all these nitty-gritties around the money supply. We have seen in the past that many a times IIBF asks direct questions from formula, but sometimes you will witness such questions as well where you have to understand not only the formula but theory also. Now, this is a case, try to read it out, try to go through this particular case, and then we will be moving on to the answers. Try to read it out. Yes, so that's the speed which you should maintain. At least try to go through this entire passage within 1 minute, right? So this passage is all about law of demand, and law of demand we have seen that the law holds true whenever the prices goes up, the demand falls. That is what is law of demand. And we have two exception to this law of demand. Exception 1, whenever we are talking about the inferior goods. Exception 2, whenever we discuss the luxury items. So scenario A and scenario B, two scenarios are given. One talks about the iPhone 16 and the second one talks about onion and bajra crisis. iPhone 16 considered as a luxury item, bajra onion considered as the staple diet. So whenever the prices of Apple products go up, we find that more and more demand is there. So long queues will be formed. On the other hand, scenario B, whenever there is a sudden spike in the staple diet prices, you will find that slowly and gradually people will shift from the bajra onions to consuming more bajra and onions because they want to have all their essential calories maintained. Now, when you talk about the luxury items like milk or meat for those people who cannot afford the milk or meat on daily basis, you have to acknowledge this fact that all these low income households will be shifting more and more towards onion and bajra despite of the fact the prices are high. So just imagine that onion prices move up by 2 rupees And simultaneously, since it's the inflationary trend, the milk prices are also moving up. That's by 3 rupees. So what will happen? Already the milk is expensive for these people who are living in the rural Rajasthan in this particular case. And ultimately, they will fall for the more and more consumption of onion as well as bajra. They will stop consuming the milk altogether. Right? So, despite of the fact that the price of iPhone is moving up, still there are long queues to buy the iPhone. Despite of the fact the onion and bajra prices are moving up, still their demand is picking up. So this law of demand, that price and demand, they are not having any kind of correlation. But in order to maintain the law of demand, there must be an inverse relationship between price and the demand. So we are looking at scenario A and B as the exception to law of demand. And in this exception, scenario A talks about the Veblen goods. This kind of exception for the luxury items is given by Thorstein Veblen. And in scenario B, you have the Giffen goods being described. And this type of exception is given by Robert Giffen. So two economists providing you with two different perspectives about the law of demand. Now let's just try to answer the questions here. Based on scenario A, why did the price, the demand of iPhones increase despite of the price hike? So the demand for iPhones, it rose definitely, but we also saw that there is a price hike. Why this happened? Because of substitution effect? No, substitution effect is indeed for law of demand. It is not for the exception to law of demand, because it is perceived as a Veblen good representing the social status. So Veblen good, more or less, yes, we talk about the iPhones as Veblen commodities or Veblen goods only, representing the social status. So correct answer will be option B. Then scenario B, the behavior of rural households buying more staples as prices rise is a classic example of what? So whenever there is price hike, and the staples are in demand, still they are in demand. It is the example of law of supply, law of diminishing marginal utility, Giffen paradox, or consumer equilibrium. The correct answer is option C. That is Giffen paradox, because the prices of some staple are moving up. And this study was done by Sir Robert Giffen. Law of supply simply talks about the supply side of the money. It is not having any connotation, any relation, direct relation in this case. Law of diminishing marginal utility, it talks about the demand. Whenever you are using or consuming, let's suppose, one apple, when you are hungry, you find it very much attractive. Right? So when you talk about the apple, you are hungry, somebody feeds you with one apple, you are satisfied. Two apple, again satisfaction is there. As you consume three apple or more, you will find that it is not at all proper diet for you. You will not find the utility you were looking for. So as the consumption increases, the utility falls. That is what we are talking about in the law of diminishing marginal utility, which calculates the level of satisfaction. That is the law of marginal utility. Consumer equilibrium, more or less, it talks about the equilibrium when the supply and demand forces are in tandem. The market equilibrium talks about the supply and demand forces. Only the demand forces, if you consider, they are for the consumer equilibrium. So it has no relation as such in the scenario B. Correct answer, the simple one, Giffen paradox. C is the right answer here. And you will find C as the correct answer. Then, which of the following best describes conspicuous consumption as mentioned in the case study? Conspicuous consumption, more or less, we are talking about a noticeable consumption. And noticeable consumption is what? The one which you can easily notice, right? So noticeable consumption, what do you think? That when somebody is buying bread, butter, wheat, then somebody will notice? Or for that matter, when somebody is buying the luxury cars, that becomes a noticeable consumption. Yes, so we are talking about the luxury items. So buying goods secretly to avoid taxes, nothing of that sort is happening in the conspicuous consumption. Buying goods specifically because their high price displays the wealth. So wealth is being displayed here. Yes, we can call it that more and more pricier the products are, you are buying that product. Ultimately, it showcases your wealth. Correct answer is option B only. Right? B is the right answer. We are talking about Veblen commodities. Veblen commodities. Right? Then, according to the income effect, why would a petrol price hike normally reduce the demand? So, demand will be reduced only when you have something else to purchase as compared to the original product. And that's what we analyze in the law of demand. That yes, I want to buy wheat, but its prices are really high. So I can directly buy rice and consume it. So I have a substitute of wheat in the form of rice. That's why the demand of wheat will be lowered. If I don't have any substitute, if I have to compulsorily eat wheat only, no matter what the price hike is, I will be demanding it again and again. Right? So law of demand will hold only when you have some substitute known as substitution effect. Then we have the second effect also, which is the income effect. As and when the prices of a product are rising. So what is your initial reaction? You will try to balance out your savings level, the level of savings. And ultimately, these savings are very much essential for the entire consumption. If you are having, let's suppose, rupees 100 as the consumption for the petroleum, and suddenly the prices rise to 110. So you have two options. One, start using the public transport, look for the alternate, look for the substitute, or for that matter, try to save more by curbing your other needs like shopping. Right? You want to save the rupees 10, so you can do what? Do less of shopping this month, or for that matter, do less of consumption which is not required. Right? So, like that, the income effect is being explained under the law of demand. So according to the income effect, why would a petroleum hike normally reduce the demand? It makes the consumer feel richer. The consumer feels rich that yes, now I am having more money. It reduces the consumer's real income or the purchasing power. The real income is being reduced. Yes, that's what we are talking about. Actually, the income is what? Monthly income is same. You have the monthly income as, let's suppose, XYZ amount in this month. Next month also XYZ amount is there. But what is the difference? The difference is rupees 10, which has increased in the petroleum price. So your real income will get a hit of rupees 10. And in order to curb this, you will be resorting to some alternate. Correct answer is option B. Right? So income effect, you either resort to the substitute and go for the substitution effect, or try to save so that your effective income stays the same. Then If the Indian government wanted to stabilize the situation in scenario B, what would be the most effective economic move? Just imagine a scenario wherein the Bajra, scenario B, the Bajra is the only staple diet. Right? Bajra is the only staple diet. You do not have any kind of alternate. Then what the government has to do? Government has to resort to provide the subsidies, or the second option will be provide some alternate food if possible. These two things are there. So try to answer the question. Increasing the price of staple more and more, that is just the opposite thing. Providing subsidies or cheaper alternatives to lower the financial burden on the poor. Exactly, that's what the government will be doing. Option B is the right answer. Fine. So law of demand we have seen, as the prices move up, demand falls. As the demand picks up, you will find that it is because the prices have fallen. So price and demand, they share an inverse relationship. Two types of you can say reasons are there. One is substitution effect, another is income effect. Then exceptions to law of demand, yes, they also hold true in two cases. In the staple diet, you have given goods. For the luxury items, we have Veblen commodities. And these Veblen commodities ultimately are very much noticeable. Commonly, this type of consumption is known as conspicuous consumption. So we have Hermes bag, iPhone, Ferrari, all these are what? The luxury items. Whereas when you talk about potato, bread, butter, these are the staples. Fine. So this is the table where you can read out loud for yourself the M1, M2, M3, and M4, the formula which we have seen in the question number 1. Now let's move on to the module D. Try to answer this question. It is a 1 marker question, a very interesting one if you have any idea of the lease part. Yes. So what will be the right answer here? Quickly. So what is the difference between sale and lease back and the direct lease or leverage lease? The question statement itself explains it. So you will be selling some property and then leasing it back. Sale and lease back. So you are owning one property, you are the owner of one property. Then you need money, you sell it off, but you also have to use this asset, so you lease it back. So you are having what? Let's suppose you have a building and you have your office here in the building only, but you need money for your business. So you sell off this property at 20 crore for 20 crore. But you need the office space. You cannot just have another office space just like that. So what you do now, since the owner is somebody else, XYZ, you simply lease this property from that owner and you use it for the time you require. So you have this 20 crore with you because you have sold it to XYZ, and also you are using it based on the lease agreement. That is your sale and lease back. Then how it is different from direct lease and leveraged lease? Two types of leases are there. Direct lease, simple like your lease agreement for the house accommodation which the bank provides. Leveraged lease, more or less, you have a third party involved. So you are the owner of a particular asset, then only you can give it on lease, right? And being an owner, let's just suppose that you have bought a property, but that is on loan, right? So you are the owner of one property, but that property is on loan and you are leasing the property while it is still on loan. So this type of setup where the bank is also involved, the creditors are also involved, that is known as leveraged lease. Try to answer what is the difference, point of difference among these. So in sale and lease back, the lessee acquires a new asset after the lease period. Once the lease period is over, the lessee will acquire a new asset. Where this is correct? Just like in a direct lease agreement. So when you talk about the lessee will acquire a new asset, or the sale and lease back, the lessee is already the owner of the asset, sells it to the lessor, who then leases it back for use. Yes, that's what we have seen in this example. You have the property of 20 crore, sell it off to XYZ. Now you lease it back for usage. Correct answer, option B. A very direct question if you know the types of lease. Fine. So quickly, let's just go through the different concepts. Direct lease, the lessor directly buys asset and leases it to the lessee. Leverage lease, three parties are involved, lessor, lessee, and the creditor, lender, or the bank. Sale and lease back, the owner first sells the asset and then leases it back for the usage. So that's how the entire lease works for the three different types. Now, try to answer this question, which is based on the options. It is based on the derivatives. In options A, B, C, no. We are talking about the options contract here. So what will be the correct answer? So the options, when you talk about derivative options, contract options, majorly this question revolves around two types of options. One is European option, another is American option. In the European option, you will find that the right to buy or sell is restricted to be exercised on the last day only. The expiry date is mentioned, and on that expiry date only, supposingly today is 15th of August, from 15th of August you enter into a contract, the derivatives contract, and you can exercise the right to sell or buy an asset on the expiry only. Expiry is, let's suppose, on 15th of October. So this type of option contract is known as European option, wherein you cannot just buy or sell the derivative in between. You have to wait till the last date. On the other hand, when we talk about the American option, in the American option, you can buy or sell. You can use your right to buy or sell the derivatives in between the time period as well. You need not to wait till the last day. That is the American option. Right? So now let's try to answer the question. Which inference most accurately identifies the type and features of Amit's contract? Amit Khanna entered into a derivatives agreement arrangement linked to equity shares after paying an upfront amount. So one upfront amount is paid. And now Amit has entered into the derivatives arrangement. The contract specified a strike price, the price at which the buying or selling will happen, and an expiry date. Expiry date, the date at which the contract will lapse, but did not mandate the execution of this particular contract. When this right will be exercised, that's what is not mentioned. Fine. So when you talk about such kind of scenario, what do you think of this as? As the market price fluctuated, Amit considered whether early action was possible or if he had to wait until the final day. So the possible scenario will be that Amit wants to sell it off or wants to buy something out of this contract. And Amit is trying to exercise all the options. The counterparty with which Amit has the contract remained bound to honor Amit's decision whenever permitted under the contract. So such kind of options contract is there. The nature of exercise timing and contractual obligation became the central issue. Now you have to decide that according to this situation, what is the type of option contract, right? Everything is given here. Just you have to decide via reading the options that which contract will suit this entire case. The contract must be a European option because execution depends on a fixed expiry date. European option, when you talk about it, is what? You have the foundation of the expiry date. The contract is an American option if it permits exercise at any time before expiry, regardless of market conditions. Or the contract cannot be an option since early execution would eliminate the price certainty. The price certainty, if we talk about derivatives, there is no certainty as such. But if you are holding the option, holding the right to use this option, then definitely price certainty will be there. The contract is a futures contract because one party remains continuously exposed, whether it is for the futures. What is the right answer? See, such kind of questions, such type of tricky questions, definitely IIBF will be asking you in the actual exam. The correct answer is option B. It will be an American option if it permits to exercise the right to sell or buy at any time before the expiry. Right. Okay. So when we talk about option B or option 2, you can say right, 2 or B, that is the correct one. Then what are the description of both these options? American option allows the holder to exercise the right to buy or sell, right? European option restricts the exercise to the expiry date itself, right? Directly to the expiry date only. Now, the next question on the commercial papers, CPs. So when you talk about the following statements, which are the following best reflects the money market character of commercial papers? Just give me a moment. Yes, I think that it is visible. Fine. This we have seen now. Commercial paper. Try to answer this question. You have 10 seconds for this particular question. Yes, so what will be the right answer? Commercial papers, the CPs as we call them. They are issued for a period ranging from 5 to 10 years. No, they are for the money market, and money market is short term market within 1 year. This is a wrong statement. They are redeemable at a premium, carry the floating interest rate. Yes, you will be having a particular premium, redeem it at a premium with the floating, or you can say flexible variable rate of interest. They are the perpetual instruments without any fixed maturity date. No maturity date whatsoever is mentioned. Or they have short maturities ranging minimum of 7 days to maximum of 1 year. The correct answer, option D. We are talking about the CPs, the commercial papers, as the product or the financial instrument in the money market. Right answer is option D. Fine. So minimum of 7 days, maximum of 1 year. And when we talk about the overall criteria, who issues these CPs? So the companies, the big corporates, NBFCs, all India financial institutions, including some of the DFIs also, like we have NAB Fed with us. Then you have the issuance is on the standalone basis also, on behalf of a company, on behalf of a corporate. If somebody wants to issue, they also can if they hold that right. RBI launched it in 1990, and they are issued as promissory note at a particular discount. The credit rating is important, particularly if your corporate is having a minimum AAA rating, then only you will be able to issue the CPs. For issue greater than 1000 crore, rating from 2 CRAs must be taken. What is the term duration? It is between 7 days to 1 year. And when we talk about the overall limit, what is the limit up to which the CPs can be issued? Limit of the amount. It is 100% of the company's net owned fund. What is net owned fund? NOF is net owned fund. And what is this net owned fund? The actual money which you use to run a business, right? It is not your net worth, the company's net worth, nor it is about the authorized capital. No, net owned fund, simply just have this thing in your mind. The money which you have, which you hold after the regulatory requirements are given by the RBI to run your business, right? Who are the holders of the CP? We have individuals, banking companies, registered bodies, and NRIs as well as FIIs also. So when you talk about the CP, yes, it is important. Now see the factoring system. One question based on factoring system. Let's just try to solve this. There is one Global Textiles Limited based in India. So this is again one case which we will be solving today. And such kind of cases, yes, they can ask you in the exam. Try to answer this question again. You have 2 minutes for that. Fine, 2 minutes. So Global Textiles, it is a company based in India. So we have one Indian company. It has entered into the factoring agreement, right? The factoring agreement is with FinEdge Export Finance. So Indian company, entering into the factoring agreement with the FinEdge Export Finance. So who will be the factor here? FinEdge Export. Let's just mark it as the factor. This is your factor. Okay. Global Textiles ships large consignment of organic cotton to Urban Threads Inc. What is this Urban Thread Inc? This is again one party involved in the factoring arrangement, which is situated in New York. So Indian party is the supplier, New York party is the buyer. And up till now, we have a factor which is FinEdge Export Finance. Under the agreement, the Global Textiles receives immediate funding from FinEdge. So what is the role of factor? To provide the money to the seller. And who is the seller here? The seller is Indian party, that is Global Textiles Limited. Urban Threads, which is what? The New York company, the importer or the buyer, is instructed to pay FinEdge directly within 90 days. So the factor has given money to the seller. Now the factor will be approaching this Urban Threads, the New York company, and get their payment within 90 days. But since both are situated in different location of the world, the factor is in India and the buyer is in New York. So what to do? To mitigate the risk of non-payment by the American buyer. So the American buyer, the buyer in the New York, FinEdge coordinates with the NYC Credit Services. So what this factor FinEdge Export will do? It will have a tie-up coordination with another factor which is located in New York. In this specific arrangement, 90 days pass and Urban Threads Inc. fails to make the payment due to temporary insolvency. So now the buyer is insolvent and ultimately the onus of recovery lies on the coordinated factor. What will be the right answer? Which of the following actions will be taken next to resolve this default? Global Textiles must immediately refund the funding which they have received to the uh, export factor or the FinEdge. The Indian party, Global Textile Limited, should it directly pay back the money which it has received from the factor? Answer is no. The onus will lie on the export factor, right? And it has the contract with whom? It has the contract with the foreign factor as well, the import factor. The export factor recovers the amount from NYC Credit Services. Exactly. This particular NYC Credit Services was involved as the import factor. And this import factor then bears the responsibility of recovering from the buyer. Correct answer is option B. Fine. So I hope that it is clear to everyone why we have selected B as the right answer. Okay. So we have the solution in front of us. Single factor system is there, wherein there is one supplier. In our example, the supplier was the Indian party. There is one buyer situated in New York. Export factor again in India, and the import factor was in New York. So what happens exactly? The supplier and the export factor, they have one factoring agreement at step 1. The supplier will be delivering the goods to the buyer, to the New York party. The second step is completed. And once the goods are delivered, supplier will approach export factor and ultimately the bill will be submitted. And the same bill, the copy of that bill will be forwarded by this export factor to the import factor. and immediately the export factor will be providing the funding to the supplier. The funding, which is roughly around 80 to 85% of the amount which was promised by the buyer to be paid after, let's suppose, 90 days. So not the entire amount, but the export factor will provide 80 to 85%. Then when you talk about the next step, now the buyer will be having direct obligation towards export factor. Supplier is now out of picture. So the fifth step, payment will be done by the buyer to the export factor directly. But what if the buyer fails or defaults? What will happen then? So at that moment, for that particular purpose, we have the import factor. In case the buyer does not pay in 90 days, the buyer defaults and does not pay in the upcoming 90 days, this import factor will be paying to the export factor. So the money will be paid by the import factor to the export factor. And once the complete payment is received by the export factor, the remaining 20 to 15% of the supplier will be paid by the export factor after deducting some kind of service charges or fee. Now export factor and supplier both are out of picture. We are left with the import factor and buyer. So the buyer now has the obligation to provide the money to the import factor, and this import factor will keep on pushing for recovery of the money from this buyer, right? So that's how the entire single factor system works. A very important system, factoring system, from where direct questions have been asked. Chances are really high that this time around also the question will be asked. Next, let's talk about the CP, the commercial papers again, because it is very important, right? The CDs, CPs, they are very important. So, which conclusion best explains the investor's response to Ramesh's CP issuance? So, Ramesh, individual, issued the CP, yes, standalone basis, they can do. Ramesh Iyer, a senior treasury manager of a large corporate group, observed that even though his company was eligible to issue commercial papers, investors demand higher discounts when overall market liquidity tightens up. So when you talk about the commercial paper, you have to look for the ultimate rating, the credit rating. And this credit rating, overall credit rating, it is not an issue for Ramesh's CP because it is for a large corporate group. Still, you will find that the investors are demanding higher discounts. Normally, the investors want higher discount only when the company is not doing good. But here the company is doing decent job. Ramesh noted that the company's fundamentals, credit rating, that remained unchanged, no issues. Yet the market appetite has weakened. Nobody wants to invest. What happened? He wondered whether this reaction reflects issuer specific concern, that is the corporate group's concern, or broader market behavior, whether it is about my company or overall the market is down. So the options are: option A, market wide liquidity conditions influence the commercial paper pricing irrespective of the issuer credit strength, where this is correct, because when we talk about market wide liquidity, it is also one of the very important part. It plays a very important role in deciding whether the CP will be given at a price, will go at a price which is being desired by the corporate or not. The CP discounts increase only when the issuer's credit rating is under review. So you will find that the discounts will be only when the issuer's credit rating is under review. There is some issue in the company. Yes, that happens. But here it is having no change. This is a wrong statement then. Investors are required to demand higher discount by RBI during liquidity stress. RBI has said such kind of things. Answer is no. The corporate CPs, it loses their unsecured status automatically in the tight liquidity periods. Well, this will be the correct answer. The simple answer is option A. The market liquidity is at helm. The market behavior will decide that whether a commercial paper will be accepted by the market or not. Correct answer is option A. Fine. The CP pricing depends not only on the issuer creditworthiness, but also an overall liquidity conditions in the money market. Fine. So yes, that's it for the first half. Now we will be having a break of 5 minutes. Fine. Let's have a break of 5 minutes and then we will reassemble for the upcoming questions. Fine. So now let's just move ahead with the questions. We have the next question in front of us, and ultimately you have to tell me the right answer. So overall, the question is around one important aspect which tells us regarding the insurance, right? So insurance sector, you must have learned there are two topics: insurance companies in module C, insurance products in module D. This is from module D. Mr. Khanna owns a warehouse worth rupees 50 lakh, insures the property against fire for 40 lakh. Short circuit causes a fire that results in partial loss. Damage assessed at 10 lakh. Assuming the policy contains an average clause, what is the maximum amount of compensation Mr. Khanna will receive? Now, this question or such kind of questions, we can answer via two methods. One, if for sure you know the formula, you put the formula and arrive at the correct answer. This is a formula based question, right? Another one is common sense. Just see here, the warehouse is worth rupees 50 lakh. The insurance taken is for 40 lakh. The insurance coverage is 10 lakh less than the actual amount of the property. And when we go by the percentage method, 50 lakh multiply by X percent will give you 40%, right? So here you will find that the coverage, the percentage coverage is somewhat 80%, isn't it? It goes here 40 lakh divided by 50 lakh multiply by 100. We will get what? 80% as the coverage amount, right? If there is loss, it will be covered up to 80% of the amount only. So directly the loss here is given as 10 lakh. What will be the 80% of 10 lakh? Simply give the right answer as 80% of 10 lakh, which is 8 lakh. Simple. Correct answer is option B only. Right. So like that also, you can easily answer such questions. Okay. Actual value of property 50 lakh. Sum insured is 40 lakh, which is 80% of the actual property. So the loss, whatever the loss is there, it will be borne by the insurance company. It will be 80% of the actual loss. Fine. So 80% of 10 lakh, answer is option B. If you don't want to go through common sense, simply remember the formula. Sum insured divided by value of property multiply by actual loss. The loss which has been incurred by the claimant, by the person, by the customer. So sum insured is 40 lakh divided by the value of property, which is 50 lakh, multiply by the actual loss, which is 10 lakh. Simply, the claim amount will be what? 40 lakh divided by 50 lakh, multiply by 10 lakh, it comes out to be 8 lakh. So the claim amount will be equal to 8 lakh. So either you can remember the formula or just go by the common sense also. Here, if you go by the common sense, it won't be detrimental. Fine. Directly you can answer all the questions. Let me just tell you it. Fine. Next question. Suppose the central bank of a country sets the cash reserve ratio, the CRR, at 8%. The current reserve money M naught in the economy estimated to be 50 lakh crore. So CRR is mentioned as 8%, the reserve ratio as we call it. Reserve money M naught is 50 lakh crore. These two are very, very important. Calculate the potential broad money or M3 that can be generated in this economy, assuming no leakages into the cash or excess reserves. There is no leakage. You have to calculate the actual money which will be made using this initial reserve money of M naught. So we are doing what? We are trying to observe that how this M naught will be multiplied within the economy to form M3. The automatic multiplication of money will happen in the economy. And we have studied it in which phenomena? Money multiplier. In money multiplier, you have two formulas. One formula talks about M3 divided by M naught. Another formula is for the reciprocal of the reserve ratio. M3 by M naught, more or less, you have to calculate M3 in this case, divided by M naught, which is given as 50 lakh crore. And the another formula, both are equal, right? Because both are the formula of money multiplier. 1 divided by CRR. CRR is 8%. The reserve ratio is 8%. You have to remove the sign of percentage. This will be equal to 1 divided by 8 divided by 100, which comes out to be what? 2 divided by 25. And this, once it cancels out, it will be 1 divided by 12.5. So you can write this as 1 divided by 1 divided by 12.5. So reciprocal of the reciprocal, you will have this number going up. It will be 12.5. Fine. So you have the money multiplier as 12.5. This will be multiplied in the M naught. So directly you can multiply and have the answer. After equating these two, what will be the correct answer? M3 divided by 50 lakh crore is equal to 12.5. Simply multiply 12.5 with 50 lakh crore. You will get the correct answer as what? 50 into 10, it will be 500 plus 25, 125. So 500 plus 125, B is the correct answer. 625 lakh crore. B is the right answer here. Okay. So I would highly recommend everyone to either do the calculation manually but with speed, or best case scenario will be use the calculator. You have the option of using the calculator. Why not to use that? Okay. So calculator is very, very important. Right. Now, for all of you who missed this particular explanation, just go for this explanation, which is again the same thing. First step will be convert the CRR into decimal. 8 divided by 100, it will be 0.08, or you can write it as money multiplier is equal to what? 1 divided by reserve ratio. So 1 divided by 0.08, which will be 12.5. M3 is equal to money multiplier, which is 12.5, multiply by the reserve money, which is M naught. And ultimately 12.5 multiplied by 50 lakh crore, you get 625 lakh crore as the right answer for the broad money which is being created by the economy. Fine. Now let's move on to the next question. Again, formula based question. See, in IIFS, you won't find very difficult questions in case of the formulas. The formula based questions are fairly simple. Like in AFM or PPB, you have some tricky questions. In IE and IFS, they are fairly direct. So try to answer this question where you have to calculate the personal income. Again, one of the important concept in the GDP chapter. See, everybody should answer. Then only this session will mean something. Even if you get it wrong, there is no issue, right? Okay, so how you will be calculating the personal income? First of all, you must know the private income. The formula, personal income, this is equal to what? The private income minus everything, minus the undistributed profits, UDP as we call them. Then you have to subtract other terms also. So what you can do, either you add all these and subtract once and for all, or subtract separately. It's up to you. So private income minus the summation of all these. So UDP plus the corporate profits plus your retained earnings of the foreign companies plus the taxes which are being paid. And why we are subtracting it from the private income? Because these are what we have in case of the personal income earning. These parameters, these four parameters, they are not directly being given to the private or the corporate companies. So once you subtract these from the private income, you receive the personal income. A very simple formula, right? It's only that you should remember the formula. So personal income will be equal to 8,000 billion, which is the private income, right here 8,000. Then subtract the summation of all these. Add these 700 plus 300, 1,000. 1,000 plus 1,200, 2,200. 2,200 plus 600, it will be 2,800. Right. So personal income comes out to be what? It will be 5,200 billion. This is the answer for the personal income. Fine. So the right answer is 5,200 billion US, 5,200 billion rupees. Correct answer, option A. Right. Fine. This is the formula: private income minus undistributed profit minus corporate profits minus retained earnings of the foreign companies minus the taxes. So either you can remember like this, or I would suggest just remember like this: private income minus the summation of all these four components. It is much easier to calculate that way. So what is personal income? It is simply the income which is actually received by the individuals, the households in the country. So when we talk about the overall income in a country, that is the national income, right? From the national income, you will be first calculating private income. And then from the private income, you move towards the personal income. So the income actually received by individuals, households in a country during one accounting year, but undistributed profits of enterprises and taxes are deducted from private income as they are not distributed. These undistributed profits, the corporate profits, the retained earnings of the foreign companies, and the taxes, these cannot be part of a personal income. So whatever the private income is there, you have to subtract all this because these are the actual part of the corporates, not the individual household. Fine. So this is the formula which you need to remember. Next question: which of the following best summarizes Keynes' overall criticism of classical theory of interest? So classical theory, more or less, whether it explains something peculiar or not, yes, it talks about the rate of interest, right? How the rate of interest is defined in an economy. But what was the major criticism of J.M. Keynes? Keynes will criticize, right? He will criticize the classical theory based on the liquidity preference. That the classical economists are not talking about the liquidity preference at all. So J.M. Keynes will come and say, from where are you receiving the income? What about the level of income in the economy? What about the liquidity preference of the people? And that is the best critique of the classical economists. So the classical theory correctly explains saving but fails to explain investment, the supply of saving, demand of saving. So J.M. Keynes initially will not say anything about this demand for saving and supply of savings until and unless he proves the theory wrong that people are moving towards liquidity preference as well. So this entire theory will go on a toss thanks to Keynes' observation. So this is a wrong statement. Fine, Keynes won't say that this theory is correctly explaining saving and just do some changes in the investment. No, the entire theory is not in the line which we should have in the economy. Classical theory applies only to developing economies, nothing like that, nothing of that sort given by J.M. Keynes. Classical theory assumes interest rates are fixed by the government. So classical theory will say one thing: we do not need any kind of government participation. So how you can say that it will assume the interest rates are fixed by government? It is again a false statement. The classical theory overemphasizes the role of interest rates, ignoring the income, the level of income, expectations of people, and the liquidity preference. So these two terms, level of income, liquidity preference, wherever you find these two terms, just tick that particular option, because that was the classical criticism of the classical economists by J.M. Keynes. Right? So D is the correct answer. Okay. Then now let's move on to the DFI, Development Financial Institutions. Let's just go through some of the rote learning as well. No concepts involved, simply either you know this question or you don't. What kind of services did IFCI offer to businesses? IFCI is one of the DFI, in fact, the first DFI of our country. What kind of services is IFCI offering to the businesses? Only advice on how to save money and cut the costs. That yes, how you should save the money. Basic banking services like checking and saving accounts. No. When we talk about the basic banking services, the services provided by the banks, whether those same services are provided by IFCI also, answer is no. Then why we are talking about DFI if the same services are to be provided? Tailored financial products, financial support like loans for buying the equipment, services like guarantees. Yes, we are talking about industrial finance. Right? Industrial finance will be at the helm of IFCI. The correct answer stands at option C. Right? C is the right answer. Next question based on the World Bank Group. Try to answer this question. Take your time. It is for 1 marks. Right? 1 marker question. Try to answer within 10 seconds. Fine. That should be the timer. So we are talking about the World Bank Group. The World Bank Group has 4 institutions. 4 institutions are there, and one more institute, which is the arbitrator, the settler for this dispute settlement. Core 4 institutions plus one. So ICSID, International Center for Settlement of Investment Disputes, it was established in 1966 to mediate, resolve the legal disputes between international investors and states. Yes, when you talk about the mediator, the ultimate arbitrator, it was and it is in fact ICSID only, established in 1966. MIGA, Multilateral Investment Guarantee Agency, created to protect the investors against non-commercial political risks in the developing countries. Yes, so the developing countries are there, and ultimately MIGA will direct the governments of these developing countries how to attract FDI. And once they raise the FDI, the foreign investors' interest will also be protected by the MEGA. This is also absolutely right. A and B are correct. International Finance Corporation IFC, it is the largest multilateral source of loan and equity financing for private sector initiatives in the developing world. IFC is all about taking the initiatives for private sector. So yes, C is also correct. The last statement, India is one of the founding member of ICSID, International Center for Settlement of Investment Disputes. This is a wrong statement. India is not a member, right? Till date, it has not become the member. This is wrong. Correct answer will be A, B, and C only. So A is the right answer. Right? Option A is correct. Then, how do infrastructure asset owners primarily benefit from using the invites as a financing vehicles? So, infrastructure investment trusts, the infrastructure asset owners, they will be benefiting from these trusts. But how? What is the primary benefit? See, the owners will be receiving the earnings, isn't it? You are the owner of one investment trust, right? And this investment trust will earn something. So you will also get the portion from this earning. The remaining portion goes to the investors who have invested in your investment trust, right? So that is the ultimate benefit for the holders, or for that matter, asset owners, that they are also earning the money. So by completely transferring the ownership and management of infrastructure assets to investors permanently, you are just simply providing the ownership and management of infrastructure asset to the investors only permanently. That yes, we will be shifting our focus to the permanent investors. We will be providing the earning only to these investors. Raising the funds from a diverse group of investors, distributing the cash flows generated by assets on periodic basis. Indeed, B is the right answer. You will be earning, raising the funds from various group of investors, and ultimately you will find that the funds which are generated, they are not only for your earning but also for the disbursement to the investors according to their shares, right? Whatever the shareholding they are having in this investment, right? The units, not shares, you can call them as units, right? So yes, that's how you should define the benefit for the asset owners. B is the right answer. Now, which definition of economics most closely aligns with the neutral value free approach observed by Miss Neelam Verma? Try to go through this particular case and answer the question. Very simple question. If you go by the definition of economics, there are primarily three definitions, right? And those three definitions are very, very important for our examination. Okay, so try to answer it. Miss Neelam Verma is a policy intern comparing how different economists define the scope of economics. Various economists are there, and different economists will be compared by Neelam Verma. And those economists have defined the scope of economics. Basically, we are talking about different definitions given by these economists. She notices that some definitions emphasize material wealth, only the wealth, like Adam Smith talks about welfare definition, no, wealth definition only. The others deliberately avoid judging whether the goals people pursue are good or bad. He finds one approach particularly useful for policy analysis. Now, as soon as you hear this term, policy analysis, one picture must come in your mind, that is of Lionel Robbins. Because Lionel Robbins will talk about the economic policy at stretch via his scarcity definition. because it treats economics as neutral with respect to ends and focuses only on how efficiently resources are allocated among the competing uses. So the allocation of resources will be done using this particular definition. So why the allocation needs to be done? Because the resources are scarce, right? The scarce resources are there, due to which you have to focus on the resource allocation, right? So which of the following definition is defined here? Now I hope everybody knows the answer. It is the scarcity based definition by Lionel Robbins. You will find Adam Smith's wealth centered definition of economics. Based on the wealth, you are defining the economics. Alfred Marshall will come and say not only wealth but also welfare. Lionel Robbins will say you must talk about the allocation of resources. Why? Because the resources themselves are scarce. Right? So the scarcity definition is what we are talking about here. Correct answer is option C. Then one formula based question again. GDP at factor cost via the income approach is to be analyzed here. So GDP at market price is given 20 lakh crore, indirect taxes 1.5 lakh crore, subsidy 60,000 crore. Calculate the GDP at factor cost. Simply GDP at factor cost will be equal to what? You have the GDP numbers at market price, right? Out of the particular GDP at market price, you have to do what? You have to subtract the taxes and add the subsidies, isn't it? So when you talk about the factor cost, we talk about the market price minus the taxes plus the subsidies. And the correct answer comes out to be option A. Minus taxes plus the subsidy, you have 20 lakh minus 1.5 lakh plus 60,000. 19 lakh 10,000 crore will be the right answer. Option A is correct. Why is private placement generally considered a faster route for raising the equity capital? Private placement, you are not placing it publicly. The shares are placed for some institutional investors only, some experienced group only. And why it is considered as the faster route for raising the capital? If you understand what is private placement, because right now I have told you that it is only about the institutional investors. So what will be the right answer? You can gather the funds quickly, right? You have experienced players with you, isn't it? So the experienced players will do what? They will quickly have the ultimate deciding points whether we should go for this particular investment or not. Simple, as simple as that. Okay, fine. So what will be the correct answer? Because it eliminates the need for issuing the shares at market determined prices, or because it is exempted from all the provisions of company law. Company law, more or less, it is applicable on those companies. It will be applicable on the companies who are providing for the investment, because it guarantees subscription of the entire issue by institutional investors, or it involves fewer investors. The experienced investors avoids extensive disclosure requirements of the public issues. Exactly, the correct answer is option D. So why it is quick? Because you have the experienced players with you. Next, in the context of shadow banking, try to answer the question as defined by the Financial Stability Board, FSB. Its interpretation in the Indian financial system. Which of the following statements are correct? Quickly, we have four options here. Shadow banking refers to credit intermediation conducted outside the regular banking system. Yes, that's why it is known as shadow banking. But whether it is for all the functions, no, it is only for bank like functions. It is not overshadowing the banks, it is simply having some commonality between the banking system and these financial institutions. Shadow banks in India include only the deposit accepting NBFCs, that only the NBFCDs are there, as they mimic the traditional banks in terms of their liability structure. Therefore, the main focus of the regulatory concern, whether this is correct or not. Activities such as securitization, securities lending, repo transactions, these are categorized as shadow banking. Yes, when you talk about securitization, securities lending, repo transactions, these are those transactions which are outside the purview of traditional banking. Entities like hedge funds, money market funds, credit investment funds are internationally considered part of shadow banking ecosystem due to their role in indirect financial intermediation. What is the correct answer here? Everybody? It's a much simpler question. Correct answer is option B, A, C, and D. A talks about the shadow banking, the credit intermediation. C talks about the securitization, securities lending, and repo transaction. And D talks about the hedge funds. Why not your option B, this statement B? Because only NBFCDs are not there. There are many NBFCs which are non-deposit taking, non-deposit accepting NBFCs also, and they are also part of shadow banking. That is the reason why statement B is wrong. Remaining three are correct. So B is the right answer. In India, shadow banking is not limited to the deposit accepting NBFCs. Includes a broader set of entities, including maturity transformation, credit risk transfer, and use of financial leverage. Fine. Then which of the following statements is correct regarding the establishment and initial objective of ICICI? What will be the correct answer here? Correct regarding the establishment, initial objective of ICICI. So it was established in 1994 primarily to offer the retail banking services, the RBS, to individual Indian citizens. Retail banking services, yes, they are now offered, but back in the establishment time of ICICI, it was established initially as DFI, Development Financial Institution only. It was formed in 1955 at the initiative of World Bank, Government of India, industry representatives to serve as the development financial institution. Yes, that's what we talk about here. So it was for the DFI only, as a DFI only. Correct answer is option B. ICICI, you will find that overall it was established at initiative of World Bank, Government of India, and the representatives of Indian industry back in 1955. Main objective simply to create DFI, providing medium and long term project financing, that to the Indian businesses. It has not only offered the role of DFI but also various products to its clients. And in case you are not having this information, kindly note down that ICICI was merged with the ICICI Bank to create the first universal bank in India back in March 2002. And following this merger, ICICI Limited will cease to exist as DFI. Fine. So yes, that's how you should remember the ICICI as an institution. Now, next question. Match the RBI Act sections in column A with their corresponding central banking functions in column B. So column A and column B, you have to match these two. Column A, we have the section 19, 22, 26 and 42. Column B talks about functions or the prohibitions, right? So what will be the correct answer? See, these sections are very important. In module C, direct questions will be asked from the sections only. Yes, what is the correct answer? Section 19, 22, 26 and 42. So when you talk about these four sections, A, B, what is the correct match? Section 42 talks about the maintenance of CRR, cash reserve ratio. Section 26 will be for bank notes, right? Bank notes has the legal tender guaranteed by the central government. Section 19, the business that RBI is prohibited from transacting. Section 22 talks about the sole right to issue bank notes in India. Right? So the correct answer is, for one we have B, then we have A, we have D, and lastly we have C. So B, A, D, C, B, A, D, C. First is the correct answer. Right? Option 1 is correct. Apart from this, what else you have to remember? Section 17, businesses that RBI can conduct. Section 18, the particular validity of loans granted by RBI. No question can be asked. Section 19, RBI cannot transact any kind of business like these. Section 20 and 21, RBI acts as banker to central and the state governments. Section 22, the sole right to issue the bank notes is with the RBI. 24 section talks about the denominations. See, do not get confused with these denominations and the present ones. The present denominations are different, but section 24 has all these denominations mentioned, right? So present denominations, what all denomination do you have? 2, 5, 10, 20, 50, 100, 500, 2000 is also there, but not in as fresh tender, right? It is although a legal tender, but not freshly circulated now. So maximum denomination right now it is 2000. Once the 2000 note is gone from the economy, it will be 500. But in section 24, you will find maximum denomination is written as 10,000. Do not get confused between the section 24 and the present scenario. Section 26, every bank note will be the legal tender guaranteed by central government. Lastly, section 42, the scheduled banks must maintain the CRR with the RBI. Right now, the CRR stands at 3%. Then, under section 5 of the NABFID Act, what is the total authorized capital of NABFID? National Bank for Financing Infrastructure Development. The initial authorized capital was 50,000 crore, 75,000 crore, 1 lakh crore, or 2 lakh crore. What will be the correct answer here? Try to answer. Yes. The correct answer stands at option C, 1 lakh crore. C is correct. NABFID, National Bank for Financing Infrastructure and Development, NABFID 2021. Here you will find that NABFID is simply one of the 5 AIFI, All India Financial Institution. And it is being regulated, supervised by RBI, Reserve Bank of India, under section 45L and 45N. And what all AIFIs are there? We have Exim Bank, NABARD, NHB, and SIDBI, apart from the NABFID. The NABFID Act, it will be established in 2021. And what was the aim? The aim was simply to provide support for the infrastructure development in our country. It may also borrow the money from Government of India. So borrowing powers, yes, it has. From scheduled banks as well as financial institutions or mutual funds as well. The NABFID Act 2021 divided into 7 chapters consisting of 48 sections. All these sections you need not to remember, just few important sections like section 3 and 4, section 5 and all. Then, as per dash of the NABFID Act, 3 is the maximum number of DMDs, Deputy Managing Directors, known as the DMDs. That can be part of Board of Directors and Management. So as per which section are we talking about? Section 6, 7, 8 or 9? Correct answer is option A, section 6. So section 6 talks about the composition of NABFID. And in the composition, section 6, we have 1 chairperson, 1 managing director, not more than 3 DMDs, 2 directors nominated by Government of India. Then we have the officials of Government of India also, who will be nominated by the government, 3 directors elected by shareholders, and maximum 3 independent directors as well. So the composition is 1 chairperson, 1 MD, 3 DMDs, 2 directors nominated by government, maximum 3 directors elected by shareholders, maximum 3 independent directors as well. Right. Then section 789 talks about the journal management, the delegation of powers and term of the office of board level functionaries. So that's how you should remember these sections. Then, which sections of NABFID Act govern prohibited functions and related party transactions? Whether we are talking about section 10 and 11, 15 and 16, 18, 19, or 21 and 22. So the sections in the NABFID Act we will be learning about for the related party transaction, prohibited functions, it is section 18 and 19. So C is the correct answer. Section 1819 deals with prohibited functions, related party transactions for NABFID. Chapter 6 deals with accounts, audit, and reporting aspects. And ultimately, we will be focusing upon the chapter 7, wherein we have the miscellaneous aspects. Now, let's try to answer this question based on the self-help group models. SHG models, what will be the correct answer here? Yes, self-help groups we are talking about. And these SHGs are more or less making way for the microfinance. So what kind of models? There are three models: model number one, model number two, and model number three. All these three models are under the SHG Bank Linkage Program, SBLP. So which of the following models in SHG Bank Borrowing Linkage Program considered the most popular, involving the NGOs as facilitating agency to link directly the financed SHGs with the banks? So you are trying to have the combination of banks, SHG, and the NGOs. Model 1, where we have NABARD, bank, and SHGs. Model 2, where we have NABARD, bank, SHGs, and NGOs being the intermediary. Or Model 3, where you have NABARD, bank, NGO, and then the SHGs. What is the correct answer? Maximum times you will see that Model 2 is implemented for the SHG setup in our country. The right answer is option B, Model 2. Right. So Model 1, NABARD Bank SHG. Model 2, NABARD Bank SHG with NGO as facilitating agency. Model 3, NABARD Bank NGO SHG with NGO as the financial intermediary. That is what we talk about whenever there is a discussion of SBLP models. Right. Next, which type of FDI, foreign direct investment, involves a multinational corporation, the MNC, buying the stock in an already established firm in the host country? So we have three types of investments. One, greenfield, we have brownfield, we have joint venture. Greenfield via subsidiaries, brownfield buying the stocks, joint venture sharing the profit. So when you talk about the corporation is buying a stock, what will be the type of FDI? It is brownfield. So B is the right answer. And B is correct. Then FDI limits also, they are very important. Last time insurance was asked in the exam. Then according to the World Bank, if there is a person living on dash or less, then he or she is living in extreme poverty. What will be the number here? Whether it is 2.90, whether it is 1.90, 2.15, or $3 per day. What will be the correct answer? So initially the World Bank used to classify the number as 1.90. Slowly and gradually it moved to 2.15. Now we have to remember $3 per day. So D is the correct answer. Fine. This is the number. Earlier it was 2.15 US dollar. Fine. So yes, this was it for today's session of IE and IFS. Now, when we talk about the overall structure of this session, we will be moving towards the PPB now. And after that, we have the other two subjects of AFM as well as RBWM to be covered by our respective faculties. And if you are wondering that from where I can have the access to the PDF, simply you can scan this QR and you will be redirected to our ADA 24/7 application. In this application, you will find virtual library, JAIIB virtual library. And this virtual library has every PDF of each session, right? So whether you are new to our channel or for that matter, you have already witnessed various products, various products. Now, once we are done with the IE and IFS subject, let's move on to the next subject, that is the principles and practices of banking. In continuity to our Independence Day special, let's just start with principles and practices of banking, that is PPB. So whenever we talk about PPB as a subject, you will find one or two important aspects that it is more inclined towards the concepts, at least in the module A and B. Right? But before moving on to PPB, let's just sort this thing out, that what are the offers available right now for this Independence Day sale. You have the lowest price ever for the JAIIB Mahapack 3.0. It is offered at rupees 5,892 only. Along with that, you will get 4x validity if you enroll right away. What is the discount code which you must use? It is Y1003. This discount code will give you the best deals out there on our website. So do grab the offer because it will end soon. Fine. Now, when this thing is sorted, let's move ahead with our discussion. The discussion around the subject of PPB. The first question in front of you talks about the NSC, National Savings Certificates. You might have seen in the IE and IFS subject when we were discussing the measures of money supply. There was one measure of money supply which was M4. Therein, we have studied that you have to exclude the National Savings Certificate or Kisan Vikas Patra. But here in this question, we are not talking about the measures of money supply. We talk about the type of security which will classify NSC. So let's see what the question talks about. Prakash Limited needs to avail a loan by pledging different securities to a bank. So there is a bank and it has various securities. Everybody knows that we have n number of securities being pledged to the bank by various customers. The company considers pledging NSC, National Savings Certificate, worth rupees 10 lakh along with the accrued interest as security for the loan. The overall, you have to understand that the company Prakash Limited has pledged the NSC worth rupees 10 lakh as the security for the loan which they have taken from this bank. The company's finance manager is required to complete the certain documentation and the assignments as per the bank norms. So you have various kind of assignments, like when you talk about assigning one FD, assigning some security instrument, or for that matter NSC. The bank will maintain custody of this particular NSC. Which of the following combinations correctly describes the process for pledging the NSCs as security for a bank loan? For a bank loan, which kind of security is required? That is decided by the type of loan. And here we know the security for sure, it is NSC. So you have to select the correct option which defines the correct combination for the process of pledging NSC. Option A, assignments of receipt, surrender value certificate, original securities with the borrower. Option B, pledge of security, because pledging NSC, that is written in the second line itself. Face value plus the interest, blank endorsement, or the transfer assignment, along with the originals with the bank, whether you will be going through that. Or is it about the hypothecation, which we do for the immovable asset? The invoices, hypothecation deed, originals with the customers. Last, but a very valuable one, that is assignment. The assignment, dematerialization, original certificates, they will remain with the customer, whether this is correct or not. What is the right answer here? Try to answer. See, it is not a very difficult question. You need not to calculate anything. If you know the concept of NSC, a very straightforward question. Correct answer is option B. The pledge itself, because the second line, as I told you, pledging the NSC, we are talking about the pledge only. Whenever we have the NSC being taken as the security by a bank. So B is the right answer. And how you have to remember? There's a table in front of you. Do remember at least the security type and the nature of security. These two things, they are very important for any examination which pertains to banking, whether it is your promotion exam, PPB exam, or for that matter, any lateral entry recruitment, right? So the security type, it is very, very important. Do not hesitate in learning all these types of securities, because ultimately you will find one alarming situation whenever there is an overlap. Like when you talk about the pledge, it is not only for the railway or the lorry receipt airway bill, but also for NSC, Indira Vikas Patra, government schemes. Right? So the pledge is not only for these, but also for the bank's own term deposits. You must remember that what kind of nature of security is there. There might be an overlap. LIC policies, it is for the assignment. It comes under the aspect of assignment only, the LIC policies. Then ornaments, also they are under the pledge arrangement, like in the gold loan, you have the gold ornaments pledged by the borrower to the bank. Then you have UTI, the Unit Trust of India, where we talk about the mutual funds. So UTI shares of approved COs, they are also in the form of pledge only. The book debts, they are kept as hypothecation, supply bills as assignment, plant and machinery as hypothecation again. So overall, these nature of security and the security type, these two columns you must remember. Stocks, again, they are for hypothecation or pledge. Right? So I hope that all of you will be remembering at least the first two columns of the table. Next, ABC Bank is conducting its annual review of loan accounts. So the review is happening on a regular basis. We know in the banks, the annual review happens. One account has been classified as NPA for 18 months. Upcoming 18 months, you will find that this particular account is under NPA. As per the RBI's classification, under which group should this account be categorized? Again, such kind of questions are not only important for your PPB subject, but also the promotion exam, but also in the lateral entry recruitment. So when you talk about such account which is classified as NPA for 18 months, today, let's suppose we are in August 2026, fine. From here till the 18 months, this account has stayed in the NPA category. Now, after the 18th month, what is the category you will classify this account into? Whether it will be substandard, doubtful category 1 D1, doubtful category 2 D2, or a loss asset. Try to answer. Simply 18 months, we have the correct answer as option C, doubtful category 2. Prior to this, it will be in D1. Correct answer is option C. So first of all, what is a standard asset? The asset when the account is in order, no out of order status is given, it is a standard asset. Then we have the substandard asset, wherein the account has been classified as NPA. Right? If no payment has made for 90 days, the account will be classified as NPA. And if it remains under NPA for a period less than 12 months, then it is known as substandard. Right? So less than 1 year, substandard. Then the substandard accounts which have remained under the NPA for up to 12 months. Now they will be transferred into D1 category, doubtful 1 category. And beyond 12 months, up till 36 months, 3 years, it will be under D2 category. Beyond 3 years, it will be in doubtful 3 category. And finally, it will become a loss asset if you are unable to recognize or recover the asset. So standard, no repayment has been deferred. Substandard, the account is NPA for minimum of 11 months, 29 days. Doubtful D1 category, the substandard account only, which is there as the NPA for up to 12 months. And after that, we have D2 till 3 years, D3 beyond 3 years. Next, Mr. Arun, an NRI living in Canada, wants to open a bank account in India to park his foreign earnings and repatriate the funds without any restriction, no restriction whatsoever. So the idea is Arun, who is an NRI, he will be opening a bank account in India. Right now, not residing in India being NRI, but account will be opened in India. Why? In order to park the foreign earnings, whatever the earnings Arun has uh, earned in Canada, and repatriate the funds without any restriction. If Arun wants these funds, he can redirect it to another source without any restrictions. He prefers to avoid exchange rate risk. No exchange rate risk is what Arun wants, and wants his account to be non-taxable in India. At least in our country, it should not be taxable. He is considering among NRE, the external account, NRO, the ordinary account, and the FCNR, the deposit account as we call it. Which account type best matches Arun's requirements? What will be the right answer? See, here we have 2 or 3 things. First of all, NRI opening account in India. Secondly, repatriability. Thirdly, no tax whatsoever. And when we talk about the options, we have NRE, NRO, or FCNR. The correct answer is option C again, FCNR account. You will be having the earnings within your account only, just like one FD account. The account will be replenished via the foreign earnings, and those earnings will keep on growing, just like the interest rate is given in the FD account. That account, you can repatriate the funds from that account also without any restriction, and it is tax free as well, non-taxable in India. So FCNR will be the correct answer. NRE account, we have the deposits in foreign currency, withdrawal in Indian rupee. NRO account, deposit in Indian currency, withdrawal in Indian rupee. FCNR account, deposit in specific foreign currencies and withdrawals is also in the foreign currency. No foreign exchange risk is there because both withdrawal and the deposit is in foreign currency. So no exchange as such is happening and thereby no risk. When we talk about the repatriability, fully repatriable. Whether they are taxable, not taxable, the deposit in the FCNR. And what type of account is there? It is the term deposit. And why this account is important this time? Because over the past 2 months, the government, along with RBI, they have shifted their focus into the FCNR account, promoted this FCNR account so as to replenish the forex reserves of our nation. Right? Next question. Rajesh Gems and Jewels Private Limited. It is a Mumbai-based firm engaged in the purchase, cutting, export of the polished diamonds and colored gemstone studded jewelry as well. The firm has been in business for 3 years now. Right? 3 years have passed and now they are beyond 3 years into the business. Business for 3 years and 4 months. achieved an average annual turnover of 5.4 crore over the last three licensing years. Last three licensing years, you can call it as 2022, 23, 24, 25, like that, or 23, 24, and 25. That will be the more apt description. Company now wishes to open the DDA, Diamond Dollar account, in order to receive payments from overseas buyers directly in US dollar. So we do not want any kind of payment which is having the repercussion for indirect buying the US dollar. We directly want to buy the dollar under the DDA account. However, one of the directors argues that the firm should wait for one more year to become fully eligible, while another insists that the company already qualifies under the RBI's DDA scheme guidelines. So, based on the latest RBI and Director General for Foreign Trade DGFT guidelines on DDA scheme, which of the following statements is most accurate regarding the eligibility of Rajesh Gems and Jewels Private Limited in order to open the DDA account? Try to answer this question, everyone. See, such kind of questions, case-based questions, you can very well expect from the examiner. Right? Chances are really high that this time around, most of the questions, they will be of this type only. Right? So what is the eligibility criteria? How you should go along that? Very, very important. Okay. So what will be the correct answer here? The firm is not eligible as it needs at least 3 years of track record, but already it has beyond 3 years, 3 years and 4 months here. Firm is eligible as it meets both the minimum 3 year track record and 5 crore turnover criteria. Yes. The firm is not eligible since it exports jewelry and not the raw diamonds. What will be the correct answer here? Yes, the right answer is option B only. The firm is in fact eligible because it has 3 years track record. Along with that, 5 year turnover criteria has been met. So DD account scheme, diamond dollar account scheme, in terms of which firms and companies dealing in purchase or sale of rough or cut diamonds, polished diamonds, meenakari, or any other stones. The track record should be at least 3 years in import export of diamonds. And when we talk about the annual turnover, average annual turnover should be 5 crore or above. That too during the preceding three licensing years. Right? So that's how you should try to remember things, because ultimately there will be one or two questions from the schemes part. Right? Always remember the schemes are very, very important. Now, Ayush Exports Private Limited, a diamond trading company from Surat, earns foreign exchange through exports of polished diamonds and gold jewelry. So you will find that polished diamonds are there. Along with that, gold jewelry is also being exported. The firm wishes to open the foreign currency account in India to receive the payments in US dollar directly from the overseas buyers and make payments to foreign suppliers. Foreign suppliers. Which type of account will you suggest Ayush Exports to open? Try to answer the question. When you talk about the type of accounts, various types of account can be suggested. What will be the right answer here? EEFC, RFC, RFCD, or DDA account, which we have just now seen. Yes, what will be the correct answer? Everyone. Foreign currency. Yes, so the right answer will be option D, DDA account again. Directly you want that the payments will be done to the foreign suppliers, right? So the firm, when we talk about the DDA account here, the diamond trading company is there. That is why directly you can answer as DDA account, specifically for diamond traders only. But nonetheless, let's just try to understand all these types of accounts one by one. Exchange earners foreign currency account. As the name suggests, we are talking about one earner who's holding the foreign currency account, EEFC. So who can open such kind of accounts or the foreign exchange? Resident individuals or the firms which are earning the foreign exchange through exports or services. Various export services, or for that matter, any other trade services. The purpose is to retain a portion or all the forex earnings without converting to INR. Right? So you have to acknowledge the fact that you do not want to convert it to INR. The similar thing which happens in DDA also. But in DDA, it is specifically for diamond merchants. What is the feature of EEFC? Non-interest bearing account in any convertible currency helps manage the forex exposure. Just to manage your forex exposure, you have opened this account. Then we have RFC account, the resident foreign currency account. Simply those residents who are now returning back, who were earlier the NRIs. So resident foreign currency account, it is to hold foreign exchange assets which they have earned abroad in the foreign land. This particular account can be maintained in dollar, pound, euro, all these currencies, and are freely convertible. Then we have RFC-D, resident foreign currency domestic account. Who can open? All the residents of India. The purpose is very simple, to hold foreign currency acquired legally. It's not that you are holding the foreign currency without any trail. Trail must be there. And the foreign currency can be held as gift, travel, or honorarium. Somebody has gifted it to you. You were traveling and now you have, let's suppose, $100 left in your account. So you can hold that so that in the next trip you can utilize it. Permits holding up to the limits prescribed by RBI, primarily for convenience and travel. Then we have DDA account. Just now we have seen in the previous question also, the diamond dollar account under the DDA scheme. Firms engaged in import or export of diamonds, gemstones, or some precious metal jewelry. What is the purpose? It is to facilitate the forex transaction, and that too in the diamond or jewelry segment. What are the key features? Requires at least 3 years of track record and 5 crore average annual turnover. Turnover is very, very important for the preceding 3 years, previous 3 years. Right? Now let's talk about some simple questions also. zero point 0.5 marks question. The Central Information Commission, CIC, may impose a penalty of rupees dash for each day until the information is furnished, subject to maximum of rupees dash after giving to the parties an opportunity to be heard. So Central Information Commission, CIC, imposing a penalty. What kind of penalty? Per day penalty? 250, right? And what can be the maximum penalty? It can be 25,000 for 100 days. So the right answer is option D. 250 is the penalty for each day, maximum number of days, 100 days. 250 multiplied by 100, you arrive at the overall maximum number as 25,000. Right? So D is the correct answer. The state information commissioners They are appointed on the basis of recommendation from which of the following? SICs, they are appointed on the recommendation of CM, leader of opposition in the legislative assembly, because we are talking about the state, cabinet minister, or leader of opposition in Lok Sabha. So Lok Sabha won't have any kind of repercussion while selecting the state information commissioners. The correct answer, what will be the right answer here? Correct answer is option D. All except 4. So D is the correct answer. Then Miss Meera, who is blind, approaches her local bank branch to open a savings account. You have to open the savings account, and she is blind also. Expresses a preference to manage the account herself, but is worried about signatures and passbook updates. The PM wants to ensure compliance with the rules regarding accounts for blind persons. Which of the following measures is are required as per the banking rules for blind persons? What will be the right answer? Yes, what is the correct one? Deny the account opening altogether due to her disability. Passbook entries and balances should be read out to her at each transaction. Allow her next of kin to operate the account only if proper letter of authority is given, or both B and C. What is the correct answer here? The right answer is both B and C. Option D. D is the correct one. Here you can see there is no legal bar for a blind person to open the bank account. They can open the account freely, no issues. Due care must be exercised in account opening of the blind persons, as there may not be consistency in the signature. That is obvious. Where the BM is satisfied, he may allow a blind person to operate the account by herself directly. The BM can say that yes, you can open the account by yourself, no issues, or by the next of kin of the blind customer after taking proper letter of authority from the blind customer. Fine. Entries and the balances must be made up to date in the passbook at the time of each transaction should be read out to her. So directly, you have to acknowledge the fact that we will be reading out all the transactions whenever the transactions are updated. Next, for creating a pledge, which of the following can be considered valid delivery of goods as per the Sale of Goods Act? So valid delivery of goods under the Sale of Goods Act, what will be the right answer? Handing over the physical possession of the goods, handing over the warehouse receipts, constructive delivery through an authorized agent. Which of the following will be correct? Valid delivery of goods. So the right answer is option D, 1, 2, and 3. For creating a pledge, just in the gold loan, you can have the example of gold loan in your mind. The physical possession of goods must be handed over. Yes. Handing over the warehouse receipt, if at all we are talking about the Sale of Goods Act. By constructive delivery through an authorized agent also, we can go for a pledge, right? Whenever the valid delivery of goods is in under consideration. We are considering the valid delivery of goods. Yes, all the three will be the correct answer. Option D. This is the right answer. Fine. So goods may be delivered by one of the following methods: handing over the key of godowns in which the goods are kept, by atonement if the goods are in public warehouse, handing over the document of title of goods like the railway receipt, bill of lading, etc. So now let's move on to the next question, being the difference between lease and sale. Which of the following statements correctly differentiates a lease from the sale? Now, as you know that lease simply gives you the right to use, and sale gives you the ownership, the ultimate ownership of the asset. Try to answer the question. In a lease, ownership of the property is transferred absolutely to the lessee. When you talk about the ownership, yes, it is transferred in case of sale, not lease. In a lease, there is a transfer of right to enjoy the property, not the ownership. So you are having only the right to use the property for your good. In a sale, the right to possession is separated from ownership. The ownership differs, and when we talk about the possession, it is being taken by somebody else. Do you think so that happens in sale? In a lease, there is no transfer of any right to the property. So what kind of right? Right to use. Yes, definitely it will be transferred in lease. So D is also incorrect. Correct answer comes out to be option B. In a lease, there is transfer of right to enjoy, that is right to use the property. And you do not own this particular property. Absolutely right. So what is the description of lease? How is it different from sale? Let's see one by one. A lease is simply transfer of right to enjoy the property for a certain time period, a very expressly mentioned connotation that you must have the timeline in your mind. It is not for forever only. In some cases, yes, exception can be there, that until perpetuity you will be having the right to use the property. But mostly we find that the lease is for a set time duration, for a certain time only. And that too in consideration of the price paid or promised or any other thing of value, which is to be given periodically to the transferor by the transferee. So the owner might give some additional right also in case of lease. But overall, when we talk about the journal ID of lease, it only gives you the right to use that property or asset. So you can have the machine also, or for that matter, any property also on lease. And when we talk about the transferee is also known as lessee, and the transferor will be known as lessor. The price at which the lease agreement has been furnished, it is the premium amount, and the money or any other thing that is given is known as rent, just like the lease rental agreement which you have for your bank lease accommodation. Then sale is simply the absolute transfer of property, right? We do not say that only you are using the property for a while. No, you become the absolute owner in case of sale. A lease is simply partial or limited transfer of property. In case of lease, you do not have the entire ownership. In lease, there is transfer of right to enjoy the property. Thus, in case of lease, there is separation between ownership and possession. You are only possessing the property, and that too mostly for a certain time period. In exceptional scenarios, it can be until perpetuity. And for the ownership, we have sale. Next question. Now let's talk about the MCLR, the marginal cost of funds based lending rate. This concept we have seen in IE and IFS also, but in PPB also, it is very much important to learn under module B. So try to read out the statement. Statement 1 and 2 are given. Some floating rate rupee loans, they are sanctioned and renewed from April 1, 2016 and are priced with reference to the MCLR, marginal cost of fund-based lending rate, which ultimately serves as the internal benchmark, right? So when you talk about MCLR, it indeed talks about the marginal cost of funds which are being given to the banks. The banks are owning certain funds, and based on those costs only, the bank will be deciding the service charges. And it is done via the MCLR. Statement 2, the MCLR comprises operating cost, negative carry on CRR, and tenor premium. So operating cost, yes, the bank is running certain costs for its operation. Negative carry on CRR, the bank has to give the loan also, but the limited amount of loanable funds are present thanks to the reserve ratio which it has to maintain, thereby negative carry on CRR. And lastly, the risk which is involved in lending, it is calculated under the tenor premium. The right answer is option C. Both these statements are absolutely correct. So statement 1, yes, the floating rate loans benchmark to MCLR, the marginal cost of lending rate, and that too since 1st April 2016. Statement 2 talks about the MCLR, which includes marginal cost of funds, negative carry on CRR, the operating costs, and also tenor premium. And when we talk about the tenor premium, it is one of the most important criteria where different banks will have various rate of interest. MCLR replaced the earlier base rate system to determine the lending rates for commercial banks. So slowly and gradually, you will find that initially prior to 2016, the base rate system was applicable. And after 1st April 2016, we switched to MCLR. RBI has also implemented the MCLR on 1st April in order to determine the rate of interest for loans. So the ROI still in 2026 also, even after 10 years, you will find that certain bank products are having the rate of interest in line with the MCLR. It is an internal reference rate for banks. So many banks, they have their internal reference rate, and one of the internal reference rate is MCLR in order to determine the interest they can levy on loans. So all those internal reference rates, they are clubbed together and known as the ultimate rate of interest which the bank can charge to the customer. It is an internal reference rate for banks to determine the interest they can levy on the loans. It applies to scheduled commercial banks, excluding the RRBs. Because for RRBs, we have separate framework. Small finance banks also, they are covered under this setup, as well as the labs, local area banks. MCLR, it is calculated based on the loan tenor, the amount of time a borrower has to repay the loan. And this loan time period varies from one loan type to another loan type or from one particular customer to another type of customer. That is very important to understand, right? Then the next point, which is again one of the important pointers from where the question has already been asked, that this tenor linked benchmark, whether it is in internal or external in nature. So always remember it is internal in nature. The benchmark MCLR, it is internal in nature. The bank, it determines the actual lending rates by adding the elements spread to this particular tool. So you will find that the MCLR is just like a base interest, right? So adding some important spread to the MCLR will give you the final rate of interest. But definitely MCLR forms one important part of defining or finalizing the rate of interest. According to RBI's regulation, banks should publish their minimum loan rate or the MCLR for various tenures on monthly basis. Right? So on monthly basis, they have to publish it. Next question. Now let's move on to the multiple statement based question. The three statements are asked. Under the Tandon method 1, bank finance available is 75% of the working capital gap. Margin required from the borrower is 25% of the working capital gap. So when you talk about the first method, it actually has the direct linkage to the working capital gap. and the margin money, it stands at 25%. Then the second method, Tandon second method, bank provides finance equal to 75% of total current asset, the TCA as we call it. And the minimum current ratio, it should be 1.33 is to 1. This is very important, minimum current ratio. Lastly, the third method, eligible bank finance 75% of CCA plus the minimum 25% balance of the current assets will be your overall package. And when we talk about the third method, it is not practically applicable. It is just for theoretical purposes. So the right answer comes out to be option D. All these three statements are correct. And this question again was 2023. Fine. So you will find that the basis of calculation will change, but overall, the percentage of bank finance or the margin money, the borrower's contribution will remain the same. In Tandon first method, the basis of calculation will be working capital gap. 25% of working capital gap, that will be the margin money. Bank finance, 75% of the working capital gap. Second method, total current assets is the benchmark. 25% margin money, 75% the bank finance. And here the important part is minimum current ratio should be 1.33 to 1. Then we have Tandon third method, which is for study purpose, for the theoretical purpose only, not applied to the real life application of loans. So we have core current assets CCA plus the balance amount. That is the ultimate benchmark for the third method. When we say the margin, it stays at 25%. The bank finance or the loan as we call it will be 75% of CCA plus the 25% balance as well, because here the margin money is taken alongside the bank finance. That's the reason why it is just a theoretical concept, not applicable to the practical loan applications. Fine. Now let's move on to the point 5 marker question. Only simple questions you can expect in point 5, at least in PPB examination. Which of the following is not a cardinal principle of lending? So you have 6 cardinal principles of lending. Which of the following is not one of them? Safety, liquidity, profitability, or speculation? The right answer will be option D. Speculation is not at all a cardinal principle of lending, because speculation you cannot just do for the loan asset, the loanable funds. Either you give it to the particular borrower or you won't be providing the loan. So we have safety, liquidity, profitability, purpose, then risk diversification and security. All these 6 are the cardinal principles of lending. Then let's talk about the 7 C's. There are 7 C's defining the borrower's investment. Which of the following C refers to the borrower's own investment in the business or project, indicating their commitment? So whenever we talk about the 7 C's framework, it will be character, capital, collateral, and creditworthiness. But which of those 7 C's principle defines actually the borrower's investment in the business, indicating the commitment, investment in the business? The character of the borrower, the capital invested, the collateral offered, or the credit worthiness? Right answer is option B, the capital or the margin money invested by the borrower. Fine. So the 7 C's of credit, we have character, capacity, capital, collateral, conditions, credit worthiness, and compliance or control. So all these are very important for our examination. Do remember them, because 0.5 marks direct question will be asked here. Now let's talk about one of the case study. Here you will find that we have 5 borrowers. And all these five borrowers are covered under the CGT MSC because they are MSC borrowers, micro and small enterprise borrowers. A commercial bank sanctions term loans to five different MSC borrowers under the CGT MSC CGS1 scheme. The bank wants to assess its total unexpected guarantee coverage, the total expected guarantee coverage from CGTMSC based on each borrower category and sanctioned amount. Right? So you have to tell me that what will be the total CGTMSC guaranteed amount for all these five borrowers, not one but all. So try to answer. So the first borrower is a micro enterprise. Borrower B is SC entrepreneur in Northeast region. Borrower C, the woman entrepreneur in aspirational district. Journal MSC, no special category is there. And when we talk about the last one, micro enterprise with ZED certification, zero effect defect certification. So all these types of category are there, and you have to tell me the important CGTMSC guaranteed for all these A, B, C, D, E borrowers. And once you have that, simply add all these A plus B plus C plus D plus E. From where you can gather the exact CGTMSC coverage from the table given by the CGTMSC itself, right? So for different kinds of borrowers, we have different limit which can be availed by those borrowers. The right answer here will be option B, 216.75 lakhs. How? Let's see. So you will be able to understand this only when you know the extent of guarantee coverage. And this guarantee coverage will be equal to something which is not at all being characterized, fine, not characterized. So when we talk about the overall category, here you can see the micro enterprises are there. We have various micro enterprises, right? And micro enterprises along with that, the MSCs which are located in Northeast region, the Union Territory of J&K and UT of Ladakh also. So all these MSCs along with the micro enterprises, women entrepreneurs having the MSC, the role in MSC, promoted by the Agniveers also, the SC/ST entrepreneurs, person with disability also, transgender entrepreneurs, all these are there, right? Now just try to answer the question. Now you have all the limits, the extent of guarantee coverage here. So for micro enterprises, we will be having the extent of guarantee coverage up to 5 lakh, 85%, above 5 lakh and up to 50 lakh, 75%. And when we talk about the overall criteria, overall criteria for the above 50 lakh and up to 10 crore, it will be 75%. So that's how you should go through each and every detail, right? What will be the correct answer? See, micro enterprises, we have the sanction limit as 6 lakh. So the applicable coverage above 5 lakh up to 50 lakh, 75%, 75% of 6 lakh, 4.5 lakh. SC entrepreneur in the Northeast region, 15 lakh. Applicable coverage, 80%. Northeast region, up to 50 lakh, 80% will be there. And the coverage, the sanctioned loan is 15 lakh. So it falls under this particular category. Then we have the calculation for the women entrepreneurs. 55 lakh is the sanctioned loan amount. So 90% of this amount will come out to be 49.5 lakh. Journal MSc, 65 lakh is there. 75% of 65 lakh, 48.75 lakh. Lastly, we have the micro enterprise with zero effect defect certification. Sanction limit 120 lakh. Overall, calculation will give you 85% of 120 lakh, which is 102 lakh. Simply add all these and you will get 216.75 lakh as the right answer. Right? Now, try to answer the question which is in front of you based on contract. So, contract. Simply the agreement enforceable by law. So contract means an agreement enforceable by law. Yes. Agreement must be between two persons or more, definitely. The agreement must be enforceable by law, made by free consent, lawful consideration, lawful object, not declared void. Absolutely right. Agreement without consideration is always void, regardless of the circumstances. Do you think so that for any circumstance, this agreement without consideration will be the void one? There must be lawful proposal by one party, acceptance by other for an agreement to become a contract. So one party gives the proposal, another party accepts it. Consent is said to be free when it is not caused by coercion, undue influence, fraud, misrepresentation, or mistake. What will be the correct answer here? Yes. Again, a very simple question. Correct answer is option A. 1, 2, 3. 5 and 6. Fourth, you have some circumstances, right? It cannot be just like that regardless of the circumstances, agreement will be void. No, it is not always void. Correct answer 1, 2, 3, 5, and 6. A is the right answer here. Fine. So contract, it means agreement enforceable by law. It has two major constituents. First of all, agreement should be between two or more persons. Agreement must be enforceable by law, made by free consent of all the parties, made for lawful consideration, lawful object, not declared as void expressly in the Contract Act, Indian Contract Act. All the agreements are contracts if they are made by free consent of the parties. The competent, uh, the competency of the parties must also be seen under a particular contract for a lawful consideration with a lawful object. Now, garnishment order. What do we mean by garnishment order? Try to answer this question now. Which of the following statements is true regarding the procedure a bank must follow upon receiving the garnishment order or the garnish order? Try to answer this in 10 seconds. So garnishment order, the bank immediately appropriates the funds for its own use. The bank wants that these funds must be utilized for its own purpose. Whether this statement makes any sense to you. The bank must freeze all the affected customers' account. Inform the customer about the court order. Yes, in fact, that's what is happening. Correct answer is option B. So under one garnish order, you have to understand that it is being given by the court. Right? The court will issue this garnish order. An order nisi is provisional court order that will become final or absolute at a future date unless the affected party presents a satisfactory objection or reason why it should not take effect. When you talk about the party who is an aggrieved one, the aggrieved party as we call it, it will be filing a case against the perpetrator that yes, this person has not given me the money, not returned my money. Now the court will intervene and court will pass the order known as order nisi. And this order nisi is simply the provisional order, the first order. And this word nisi, it comes from Latin, meaning unless. So unless you obey this order, we won't be letting you use the funds which are there in your account. Right? In practice, a court issues the order nisi when it thinks a particular action should be taken, but it gives the affected party an opportunity to be heard before the order is made final. So once the order is made final, then nothing can be done. And that's the reason why the court wants to hear it out from the party. If the affected party does not appear or fails to show sufficient cause against the order nisi transforms into order absolute, thus becoming fully enforceable. The order will be fully enforceable if the party is not appearing in the court. So this order, the order nisi, means what? The ultimate order will be provided, the final verdict will be provided to you unless you obey to this initial order. In the context of banking and garnishment, receipt of order nisi, the preliminary order, means the bank must immediately stop the payments from the affected accounts and inform the customer pending the final decision. So once the order nisi is being passed, directly the banks are advised, directed that they must stop all the payments from the customer's account, whose account has to be now recovered for the dues which that customer owes to the person who has filed a complaint. In summary, an order is simply a conditional or temporary order that protects the interests of all the involved parties by allowing for objections before becoming permanent. So if you are the aggrieved party, you think that a false case has been filed against you, then you can directly appear in the court after the order nisi. But what if you do not appear after this order nisi? The order becomes absolute and it will be fully enforceable, thereby giving you no chance to represent yourself. Right? Next question. We have Nandini, a village artisan who applies for a small loan from the commercial bank. One commercial bank is there, and Nandini, being the village artisan, has applied for a small loan from the bank. Her credit requirement is 1.5 lakh rupees. Okay. She intends to use the funds for expanding her cottage industry. The overall idea is to expand the business. The bank evaluates the eligibility under various government and RBI priority sector guidelines. Under which of the following priority sector categories can Nandini's loan be classified? So remember that we have Nandini as a woman entrepreneur. The credit requirement is 1.5 lakh, below 2 lakh. And ultimately, she wants to expand the cottage industry artisan category. What is the right answer? Scheduled caste and scheduled tribes? Nothing of that sort is mentioned here. Artisans, village and cottage industries where the individual credit limits do not exceed 2 lakhs. Yes. Distressed farmers indebted to non-institutional lenders, no farming whatsoever. She is in the cottage industry business. Beneficiaries under the DRI scheme, differential rate of interest scheme. What is the correct answer? Right answer is option B, the artisans, village and cottage industries category. Next, when does the importer apply for a letter of credit in the letter of credit process, the LC process? So we have initially two parties in different countries, country one, country two. There is one seller who sells, also known as the exporter. Then in the other country, we have the buyer or the importer. Right? So the question says, when does the importer apply for the letter of credit in the entire LC process? So minimum two banks will be there. Bank one to support the seller and bank two to support the buyer. So the LC process is initiated by the importer before the shipment of goods, after the shipment of goods, after receiving the documents from the exporter, or after the contract is completed fully. What will be the right answer? Simple. Correct answer is option A, before the shipment of goods. The buyer, the importer, will approach the bank, and on behalf of the buyer, this bank will open up the LC. So before the shipment of goods, A is the right answer. Then, which bank issues the letter of credit on behalf of importer? Advising bank, issuing or the opening bank, confirming bank, or central bank, the RBI. Yes, again, simple question. Right answer is option B. The issuing bank, the opening bank, will be ultimately providing for the LC for importer. B is the right answer. So here is the real deal letter of credit process. You have the exporter and importer both agree on a contract, and as soon as the contract is agreed, the importer applies for LC, letter of credit. Now this letter of credit will be issued by the opening or the issuing bank. And to whom it will be issued? To the advising or confirming bank, which is ultimately the bank supporting exporter. Now once the issue of letter of credit is done to the advising bank, this advising bank will verify the LC, letter of credit, and ultimately forwards it to the exporter. Now what the exporter will do? Exporter once verifies and checks all these parameters which was there in the contract, it will ship the goods. The shipment will start in the fifth step. And the documentation for the shipment will be provided by the exporter to the advising bank, which further forwards it to the issuing bank in the seventh stage. And finally, the issuing bank again verifies it and sends it to the importer, indicating that yes, the goods are shipped and now the payment is to be initiated by the importer and initiate the payment. Right? Okay. When you talk about the priority sector lending guidelines, the important table which we have seen in case of Nandini, one village artisan having the requirement of 1.5 lakh loan. So she was categorized under the priority sector lending weaker sections. So all the artisans, village, cottage industries where individual credit limits do not exceed 2 lakh. That is where we can adjust them under the priority sector loans. Another important aspect will be the small and marginal farmers. So the small farmers having the threshold below 2 hectare, marginal farmers below 1 hectare. So overall, the operational land holding will guide us that whether we are looking for the small farmers or the marginal farmers. So SMF category, yes, they fall under the weaker sections. Then we have beneficiaries under the government sponsored schemes like NRLM, National Rural Livelihood Mission, National Urban Livelihood Mission, NULM, and self-employment scheme for rehabilitation of manual scavengers, SRMS. All these will be having the direct implication under which the beneficiaries are being issued some kind of help. Then we have scheduled caste and scheduled tribes, SC/ST category. They will also be a part of this particular overall setup. Apart from this, you will be having a direct implication for the DRI scheme beneficiaries. Right? DRI, differential rate of interest scheme. Very, very important. DRI scheme, more or less, it is for the weaker sections only. And mostly you will find that the scheduled caste category people, they will get the good amount of interest subsidy in case of housing loans as well under the DRI scheme. Then we have SHG and JLG, self-help group and joint liability groups. The category here will find it very, very important again. Then when you talk about the individual members also of the SHG, JLGs, they are also a part of the entire setup which is under the weaker sections. Right? So yes, that's how you should remember all the important types of weaker sections. But apart from these also, we have two more important categories. One is individual women beneficiaries up to 2 lakh per borrower. This is very important. The limit, it has been revised. Earlier it was 1 lakh. Now it was revised to 2 lakh in the previous year. Distressed persons other than farmers, loan amount not exceeding 1 lakh per borrower. This has also been negotiated from very long time, since the 1960s only. Because we normally feel that the distressed farmers are provided for the loan amount, but to your surprise, the distressed persons other than farmers, if their loan exposure is not exceeding 1 lakh, they also are considered under the weaker sections category. Right? Now let's talk about the next question. A grandmother draws a bearer check for 25,000 in favor of a minor granddaughter. Again, we are looking into the module A. So such kind of questions, yes, they have already asked in the previous attempts, and we are expecting that this time also same kind of case based questions will be asked. Now IIBF is moving towards more application based scenarios, not only for the concepts, not looking only for the concepts, but also moving forward they are going for the application of such concepts. So signing the back of the check and giving it to the minor daughter, minor granddaughter. The minor granddaughter presents the check at the bank for encashment. Now, as the banker, what should be done when processing this check across the counter? So, supposedly you are sitting at the counter where this minor girl arrives. What you will do? The check can be paid directly to the minor after simple verification, as she is the bearer. Directly you will be paying the amount. The bank must obtain the name, signature, and address of the minor at the back reverse of the check, since the bearer is not the account holder. Whether the bearer is the account holder or not, that matters a lot. The check must be processed, as a minor can never receive or endorse a bearer check, so it cannot be processed altogether. Or the bank should ask for written authorization, co-signature from the grandmother, the guardian, before making the payment. The right answer is very simple, option B. The bank must simply obtain the name, sign, and address of the minor on the back of the check, and ultimately you will be able to give the amount of rupees 25,000 to this particular girl. So some kind of sections which you need to remember for this question. Yes, section 26 of the Negotiable Instrument Act, the NIA 1881, it simply prescribes that the capacity of a minor to deal with negotiable instrument, it is well defined there. It states minor can draw, endorse, deliver, negotiate all these instruments, cannot be held personally liable on the instrument. That is very important. Everything, yes, the ultimate minor can do, but liability does not lie with the minor. In essence, while a minor can practice in transactions involving promissory notes, bills of exchange, checks, they cannot be sued for failing to fulfill the obligations associated with those instruments. So you have to acknowledge the fact that minors are not bound by any kind of law, or for that matter, the contract. So although they can receive the payment, but they cannot be held personally liable for that instrument. Now let's move on to the IPA, Indian Partnership Act 1932. Try to answer this question, try to read it quickly, and then we will have a discussion. So, Indian Partnership Act. A sleeping partner actively participates in the daily operations and management of the firm. What do we mean by a sleeping partner? A sleeping partner is simply an individual who is under some kind of partnership firm, one of the partner, but is not at all active in the daily operations. Only the partners allowed to operate the account can revoke the authority for account operation. So all those partners who are there operating the account, only they can revoke the authority for account operation. If some partner is there who is just a sleeping partner and is not having any kind of obligation, can we involve that partner into providing certain authority or revoking the authority for account operation? Any partner can stop the payment on behalf of the partnership unless restricted by the partnership deed. So you have to remember one important point, that always the partnership firms are marred by n number of rules because the partners are personally liable for the action of the partnership. Revocation of authority cancelled by one partner can be reinstated solely by the partner's signature, only by the signature of that partner. What is the right answer? Yes, what will be the correct answer here? So the right answer stands at option C. Any partner can stop the payment on behalf of the partnership unless restricted by partnership deed. Okay, right? C is the right answer. So under the Indian Partnership Act, sleeping partner does not actively participate in the daily management. No issues here. Fine, everybody knows that. Any partner has the authority to stop the payment unless the deed specifies. Fine, the partnership deed is to be read out loud and clear. Revocation of mandate requires the signature of all the partners for reinstatement, not just the one. Right? So when you talk about the reinstatement, every partner must sign. You cannot just say that yes, I am the single partner here and the other two partners are out of station right now, let me just sign it. No. Always remember, revocation will be done only when we have signature of all the partners involved in the partnership firm. Right? Now let's just try to answer this question. This is also one PYQ. It goes way back in 2023 when the syllabus was changed. A very simple one, although six statements, but fairly simple. Consider the following statements regarding the definition of banking under Section 5B of the Banking Regulation Act 1949. So 1949, what will be the right answer? You have the definition of banking with you. Deposits, they should be accepted only for lending and investment purposes, whatever the lending scenario is there, or for that matter, investment purposes. These two uh, are the primary reason by which the deposits can be accepted by the bank and not for trading or manufacturing. Yes, that is correct. Banks can only accept for lending purposes or investing those deposits for the business purposes. The deposit should be from the public, not just the members of a society or association. So always remember, the public will be providing the deposit. Fine. No member of the society or the association as such. Whether this is correct or not. Acceptance of deposits must be in the form of money only, not like some barter system. Any company can use the word banker, banking company in its name. No, that is not correct, right? Only those companies which are actually providing the banking services, they can use these terms. Banking company means any company transacting the business of banking in India. Or only the public limited companies can be classified as banks in India, whether there is some categorization for the limited companies or not. Try to answer. If you have read the definition of banks, a fairly simple question, right? Yes, the correct answer is option A, 1, 2, 3, and 5. 1, 2, 3, and 5. This is wrong, as well as public limited companies. Otherwise, every other statement is correct. Deposits for the purpose of lending and investment. Deposit from public, not from society or any association. Acceptance of money only should be done. Fine. In the form of money only, you will be able to accept the deposits. And banking company means any company which is transacting the functions, businesses of banking. Right? So 1, 2, 3, and 5 are correct. But beyond this section 5C, there are certain more sections which you need to remember. So we have a company incorporated under the Indian Companies Act 1956 or the Companies Act 2013. It can be a bank, banker, or a banking company. Under the section 5C of the BRA, Banking Regulation Act, a banking company means any company that transacts the business of the banking, right? The banking business is being transacted by this banking company mentioned under section 5C. Then section 717 clause 1 of the Banking Regulation Act prohibits the use of words banker, banking, or banking company by any other company other than the banking company. So always remember banker, banking, or the banking company. These must be refrained to be used by any other company apart from the banking company. Lastly, section 7 clause 2, it further prohibits use of such words by an individual or group of individuals or a particular firm. The right answer, as we have seen, was option A. Now, we have seen the Tandon method in the previous questions. Let's just talk about the first method and calculate the MPBF, maximum permissible bank finance. A very simple question, right? So given below, we have the following data here. Current assets 370 lakh worth of current asset is there. Liabilities rupees 150 lakh. 25% of the working capital gap, it is 55 lakh. Now using the first method, what is the MPBF? Maximum permissible bank finance for the firm. 220 lakh, 165 lakh, 128 lakh, or 72 lakh. The right answer, option B, 165 lakh. So you already have this amount, 25% of working capital as 55 lakh. The remaining portion will be the MPBF. Right? So 165 lakh will be the correct answer. So step 1 will be to calculate the working capital gap. Working capital gap is equal to total current assets minus current liabilities. So you have the liabilities as 150, assets as 370. Overall, the working capital gap will be 220 lakh. Now, when we talk about 25% of the working capital gap, that will be the margin, and it will indeed come out to be 55 lakh. So simply, the MPBF will be what? 220 minus the 55, which you can directly answer even without calculating this. Simply just subtract these two, and once you have the number 220 with you, subtract this from 55 lakh. Directly you will be able to answer as 165 lakhs. B is the right answer. So here again we have the Tandon first, second, third method. The basis of calculation we have seen. Working capital gap in first, second, total current asset, third, core current assets. The margin money, 25% of working capital gap, 25% of TCA, 25% of CCA. Tandon method, third. For the bank finance, 75%, 75%. And when we talk about the third method, we have seen already in the previous questions also that it is just for the theoretical purpose, right? just for the theory, not practical at all. Now, consider the following statements regarding the monthly reporting obligations. So again, module A, it has numerous reports, numerous reporting obligations, various tables are there, and these tables are very important for our exam. Right? So try to answer this question. Just give me a moment, guys. So a non-profit organization, NPO, must file a report for any single receipt of 10 lakh or more. This is correct or not? Whenever you are having the transactions beyond 10 lakh, you have to provide for the reporting obligations. Yes. Counterfeit currency report, CCR, required to be submitted only for counterfeit notes of a certain value. Yes, definitely for a certain value it will be there. But only for the counterfeit notes of a certain value. No. The keyword which will eliminate this option is only. Then we have CTR, cash transaction report must be filed if a series of connected cash transactions in a month aggregate to 10 lakh or more. It's 10 lakh, that is the amount. All the four reports must be submitted by the end of the month in which transactions occurred. No, not all will be submitted by the end of month. We have some different timelines also. So 2 and 4 will be gone. Correct answer is option B, that is 1 and 3. These two are wrong. Okay. So reporting obligations quickly. The four reports, CTR, CBWTR, NTR, CCR. These are to be submitted each calendar month by 15th of the following month. Right. So for the month of August, the report will be published by 15th of September, like that. Right. So although you can say that the obligation is there for monthly reporting, but the reports are published by 15th of the following month. Right. The CTR, cash transaction report, all those transactions of cash of 10 lakh or more or equivalent. And then we have the CBWTR, cross-border wire transfer report. Wire is what? Simply digital transaction. Right? Nowadays we call it as digital transaction, but back in the 90s, early 2000s, it was done via wire. Cross-border wire transfers of more than 5 lakh or equivalent, where either the origin or destination of funds is India. So whether you will be having it within the country or outside the country. In both the scenarios, CBWTR has to be published. NTR, non-profit organization report, receipts by non-profit organization of more than 10 lakh or equivalent, more than 10 lakh. Fine. Lastly, we have the CCR, counterfeit currency report, all the counterfeit currency notes, not only of certain value, but all the counterfeit currency notes, whether it is 1 note, 2 note, 3 note, the report must be submitted. Now, when you talk about the next question, KYC documents for NRIs, a very important question to answer. The KYC, everybody knows that we have to do know your customer. But what about the NRIs, the documentation for the NRIs? NRIs must submit a certified copy of their Indian passport for KYC purposes. Yes, certified copy must be there. It is having an equivalent e-document is not submitted. A recent photograph is required from the NRI. Photograph, whether it is required or not. The Indian passport alone is not sufficient for KYC verification. The passport itself, you cannot say that it is sufficient for the KYC verification. PAN or form number 60 is also necessary. So form 60 is also very important. Special permission from the RBI is required for NRI KYC verification. That you go to the NRI KYC verification, only when you have the permission from the RBI. Income tax returns are mandatory for KYC verification. So what will be the correct answer? Right answer is option A, 1, 2, and 3. So NRIs must submit certified copy, definitely. If the equivalent e-document is not submitted, recent photograph must be obtained. The Indian passport alone is not sufficient for the KYC verification. The income proof, PAN or Form 60 is also necessary. Special permission every time? No, not required. And income tax returns, they are also not mandatory for the KYC verification for the NRIs. Right? So the right answer is option A, 1, 2, and 3. NRIs need certified passport copies, yes. Recent photograph if the e-documents are missing. PAN or Form 60 because the passport alone is not sufficient. RBI permission and income tax returns are not mandatory for the KYC verification. You will not have any kind of mandate for the KYC verification if the RBI permission is not there. That is a wrong statement. Fine, because ITR is not required, no permission from RBI. Directly, you can go for the KYC verification. No issues whatsoever. Now, which of the following correctly describes the threshold for identifying a beneficial owner, BO, in different customer constitutions? So for the companies, any individual owning more than 15% of the shares, capital or profits is termed as beneficial owner. For partnership firms, beneficial owner is simply any individual partner with more than 10% ownership of the capital or profits. For unincorporated associations, threshold for beneficial ownership is set at more than 10% of profit, capital, or property. For the trusts, the trustee can be considered as beneficial owner. What is the right answer? The correct answer is option D. For trusts, you will find that trustees can be the beneficial owner. When you talk about the companies, 10%, not 15. That is why it is wrong. For partnership firm, it is 10%, right? And when we talk about beneficial owner, is any individual partner for the partnership firm? No. The particular designated partner must be there. For unincorporated associations, we have again for the unregistered unincorporated association, the percentage will be 15%. Right? So body of individuals or the association of persons, including unregistered partnership, societies or trusts. 10% of the ownership of capital or profit. Right? So 10, 10, 15 and 10. That's how you have to remember. And the trustees can be the ultimate beneficial owners. Then CKYCR. Which of the following statements is not correct regarding the central KYC records, CKYCR and KYC data uploaded by the banks? Select the correct statement. Very important. What will be the correct answer? CKYCR, simply a registry. So the banks must upload the KYC data for all the individual accounts opened on or after the 1st January 2017, and for the legal entities, accounts opened on or after 1st April 2021. Yes, not correct, incorrect. You have to tell me. For accounts of individuals opened prior to 1st Jan 2017 and the legal entities LEs opened prior to 1st April 2021, KYC records should be uploaded during periodic updation. Slowly and gradually, periodic updation will be there and we will be uploading it. Banks can delay uploading KYC information to CKYCR for up to 1 month after establishment of account relationship, whether it is 1 month or some other time period. Banks should communicate the KYC identifier KYCI to the customer after uploading the KYC data. The right answer is option C. Right? Banks cannot delay up to 1 month, and that is the reason why it is incorrect. So they can delay up to 10 days. Within 10 days, the upload of the KYC documents must be there. The KYC information should be uploaded within 10 days of commencement of account-based relationship with the customer. Right? So CKYCR, Central KYC Records Registry. Banks are required to upload regularly on CKYCR the KYC data pertaining to all the individual accounts opened on or after 1st Jan 2017. Banks are required to upload KYC records pertaining to accounts of legal entities opened on or after 1st April 2021. So for all the individual accounts, the time limit is January 1, 2017. For the legal entities, we have the time limit as 1st April 2021. Just imagine a scenario where the accounts are opened before these dates. So the KYC records again need to be uploaded once there is periodic updation. So the customer has opened the account, let's suppose in 2016, and now in 2019, he or she arrives at the branch. Now the customer will be submitting the KYC documents and ultimately you will be uploading those in the CKYC-R as well. Bank should communicate KYC identifier to the customer, KYCI. If for establishing an account-based relationship, a customer submits the KYCI to the bank with explicit consent to download records from CKYCR. Right? So directly the consent is also given by the customer to the bank. Then only the bank can utilize it for various activities. Now let's try to answer the question based on A and B, C. One numerical based question. Given the following financial details of ABC Bank as of 31st March 2025, rupees in crores, you have to calculate the A and BC of ABC Bank, adjusted net bank credit. Yes, so the bank credit in India, 1.8 lakh crore. Bills rediscounted with RBI, rupees 5,000 crore. In crores, it is mentioned here. Outstanding deposits under RIDF, NHB, SIDB, Mudra, rupees 3,000 crore. Eligible exemptions for infrastructure bonds, 8,000 crore. Advances against incremental FCNRB, NRE deposits, CRR, SLR exempted, 4,000 crore. Then we also have the investments in recapitalization bonds as 2,000 crore. Priority sector investments eligible for classification, it is 1,500 crore. And last but not the least, non-SLR bonds under the HTM category. Very, very important. That is mentioned to be as 1,200 crore. Simply, we must know that which components we have to add and which to subtract. Try to answer this question. Take 1 minute and try to answer. They try to focus on those components which you have to subtract. Bank credit and the bills rediscounted. Once you subtract them, you will get net bank credit, NBC. After that, outstanding deposits, adding them. And then we have to subtract certain elements. 3 elements will be subtracted. What will be the right answer? Yes, the right answer is option A. 1,66,700 crores. But how? See, the first step will be to subtract bank credit with the bills rediscounted. So 1 minus 2. You have the third as net bank credit. Then the outstanding deposits are also there. You have the outstanding deposits with you mentioned in the particular question. Simply you have to add it. Fine. So add this outstanding deposit. Then we have to subtract the eligible amount for exemptions on the infrastructure bonds, infrastructure or housing bonds. And also we have to subtract the sixth category, the sixth reference, which talks about the FCNR B, the advances against the FCNR B. Okay, fine. Apart from this, there are certain important elements like the investments in recapitalization bonds. So subtract this as well. And after that, you have to add two components, which are the other investments treated as priority sector lending. And another one will be the bond or debentures in the non-SLR category. So once you do this, 3 plus 4 minus 5 minus 6 minus 7 plus 8 and plus 9, you will arrive at the ANBC. Fine. So simply for our case, the bank credit is given as 1.8 lakh crore subtracted from the bills rediscounted with RBI. You will arrive at 1,75,000 crore. Now add the RIDF, NHB, SIDB, Mudra deposits. You will get 1.7 lakh plus 3,000 as 1.78 lakh crore. Less the deductions. What are the deductions? The infra, the FCNR, the recapitalization bonds. Simply you can add all these three and then subtract it from the RIDF or NHB deposits. So 1.78 lakh crore here we have calculated. Subtract it by 14,000. You will get 1.64 lakh crore. Lastly, you have to add the priority sector and non-SLR HTM. So 15,000 plus 1,200, we have 2,700, and this 2,700 will be added in 1.64 lakh crore. So 1.64 lakh crore plus 2,700 gives us 1,66,700 lakh crore. Right? This is in lakh crores. Right? Or is it in crores only? Yes, it is in crores, right? Not lakh crore, it is in crores only. Let me just erase it so that no confusion is there. The answer is in crores, right? Only in crores, no lakh crores, right? It is in crores. Okay. Then next question. As per the RBI's revised PSL guidelines, what is the minimum percentage of adjusted net bank credit, ANBC or COB credit equivalent of off-balance sheet exposure, whichever is higher, that the domestic commercial banks, DCBs, including RRBs and SFBs, and foreign banks with 20 branches and above must lend towards agriculture? And what key sub-targets applies within this? A very important question for this year's examination. Try to answer this. See, whenever we say na, this is important, we actually mean it. Right? Do not skip such questions. Directly, you will find them in the actual exam. A and BC, COB, whichever is higher, and the foreign banks with 20 branches and above, we are talking about. So the same obligation, just like the domestic commercial banks. So for agriculture, what is the overall target? The overall target is 18%, right? Then out of this 18%, 14% for the non-corporate farmers, NCF category. Of this 14%, 10% to the small and marginal farmers, SMFs, right? What is the right answer? 14% is the overall with 10% to the NCF. Wrong. 18 overall, 14 for NCF, 10 for SMF. Absolutely right. B is the correct answer. Okay. This is the table, the ultimate guide for us for the overall PSL norms. Specifically, this agriculture one is important. So 18% overall, 14% non-corporate farmers, which include the SHGs, JLGs, and the individual farmers as well. Then 10% for the small and marginal farmers. And when we talk about the small finance banks, the overall target is very important. It was amended in the last year, but yes, since then it has been in news. So 60% of ANBC or COB, whichever is higher. That is the total priority sector lending target for the small finance banks. Now, as per the MSME-D Act 2006, effective from 1st April 2025, what are the investment and turnover limits for a small enterprise? So whenever we talk about the small enterprises, we will find one important term is being utilized. That is, it falls between the micro and medium enterprises. Right? So it acts as a channel or the link between these two enterprises. Small enterprises, you will find the turnover as 25 CR. Simply multiply 25 with 4. You will get the investment. Oh, sorry. Here the investment is there. 25 crore. Turnover will come once you multiply it with 4. So the turnover will be 25 crore multiplied by 4. That is 100 CR. Right answer will be what? 25 crore. Turnover is 100 crore. So A is the correct answer. Apart from this, all the remaining two categories also you should remember. Micro enterprises, 2.5 crore is the investment limit, and 10 crore is the turnover limit. Small enterprises, up to 25 crore is the investment limit. Turnover limit is up to 100 crore. Medium enterprises, we have the investment limit as 125 crore and up to 500 crore is the turnover limit. Now let's move back to module A. Which of the following pairs correctly matches the relationship type with its respective parties, that is bank and the customer? So the respective parties, what all parties are we having? For the pledge, we have trustee and beneficiary. Mortgage, mortgagee and mortgager, yes. Hypothecation, agent and principal. Sale, purchase, trustee and beneficiary. Correctly, we have option B as the right answer. For the mortgage, for the setup of mortgage, the bank and the customer will have a relationship of mortgagee and mortgager, right? So when you talk about the banker customer relationship, various types of scenarios will be there. Like deposit in bank, bank will be the debtor, customer will be the creditor because the money belongs to customer. But when we have the bank's funds given as loan to the customer, bank becomes the creditor, customer remains the debtor until the loan is fulfilled. Safe custody, bank is the bailee, customer is the bailer. Locker, we have the lessor, the bank as the lessor, and the customer as the lessee. Collection of check, bank as the agent, and on behalf of the principal, that is the customer, the bank is clearing or collecting the check. Whenever a customer purchases a draft, the customer becomes creditor because money will be credited to the draft by the customer, and the bank will become the debtor. Pay of the draft, the trustee will be bank. Fine, you can trust bank with this service. Beneficiary will be the another customer. Pledge, we have pawnee as the pledgee, and we have the pledger as well. The customer as the pledger. Pawn and pawnee. Mortgage, we have mortgagee and mortgager. Bank being the mortgagee, the customer being the owner is the mortgager. SI, standing instruction, agent and principal. Sale purchase of securities, agent and principal. Shares given for sale, agent and principal. Hypothecation, bank is the hypothecatee and the hypothecator will be the customer. For the money deposited but instructions not given and the articles which are left by mistake, we have trustee beneficiary, customer, banker and customer relationship. Now let's talk about one of the simplest question. This question has been repeatedly asked by IIBF. So if you can answer this question, definitely you will be able to secure your 0.5 marks. Which of the following statements is correct regarding the type of security and possession in pledge, hypothecation, mortgage? So always in our class we say pledge, have the gold loan in your mind. Hypothecation, have the car loan in your mind. Mortgage, have the home loan in your mind. So in the hypothecation, security is usually immovable. Possession remains with the lender. Is it? In case of car loan, the security is movable, not immovable. And the possession is with the customer, not the lender. This is wrong. In pledge, the security is movable and remains with the lender. So the security will be there with the lender only, whether it is possible or not. Yes, security like gold, ornaments remain with the bank. Mortgage, the security is usually movable. No, mortgage is for immovable properties only. In pledge, the security is immovable, remains with the borrower. No. Correct answer is option D. Fine. B is the right answer. This B is correct. Okay. The type of security, when we talk about pledge, movable, hypothecation, movable. For immovable, we have mortgage. Possession of security, pledge remains with lender, hypothecation remains with borrower, mortgage, the possession of security will be with the borrower. Example, most important example, relatable example. For pledge, it is gold loan. Hypothecation, it is the car or vehicle loan. Mortgage is your housing loan, right? Then, according to the international agreements, banks are prohibited from opening or maintaining the accounts for individuals or the entities listed in which of the following. So when we talk about opening of the account or maintaining of the accounts for any kind of individual, what all prohibited or the listed international agreements are there? ISIL, Daesh or Al Qaeda sanctions list. Yes. 1988 sanctions list published for Taliban. Both A and B or only the entities associated with ISIL? The correct answer is option C. Both ISIL, Al Qaeda and Taliban. So when we talk about this list, who will be issuing or publishing this list? Banks are not permitted to open any kind of account or maintain the accounts for the ISIL, Al Qaeda, and also the sanctions list of 1988. It states clearly the individuals who are having association with Taliban. So for such individuals also, you cannot have any kind of tie-up. or any kind of agreement. Ultimately, when we talk about the measures taken by the Indian government, you will find that the government has prescribed certain rules. Whenever such kind of listed individuals or entities which are prohibited to have a relationship with the banks, it is found to be there in the banking setup, you have to advise FIU, Financial Intelligence Unit of India, and the Ministry of Home Affairs, MHA, all the details of such accounts as per the UAPA notification dated 2nd Feb 2021. So very important aspect is the procedures are already listed, that what they have to do, what banks need to do if they find out that a particular Al Qaeda group, or for that matter Taliban group, is having the relationship with their bank. Right? So the correct answer was both A and B. Now, when we talk about the last question, it is a case study based question based on the LLP, Limited Liability Partnership Act. So we have ABC Consultants LLP. It is formed under the LLP Act, Limited Liability Partnership Act 2008. As per its LLP agreement, there are three designated partners. We have Mr. Sharma, Ms. Kapoor, and Mr. Singh as well. These are the three DPs, the designated partners. All the designated partners have to obtain the DPIN, designated partner identification numbers. According to the LLP agreement, Mr. Singh is responsible for filing the annual returns and ensuring compliance with the statutory requirements. So as per the LLP agreement, you will find that who is responsible out of these three? Mr. Singh, for filing the annual returns and the compliance therewith. Now, based on this small case, let's just try to answer the question. Under which act ABC Consultants LLP is formed? Companies Act, LLP Act, Partnership Act, or SRA? It is under the LLP Act 2008. B is the right answer. Then, what is the minimum number of designated partners required in LLP as per the Act? So, the designated partners can be one only, two only, three, or four. Minimum number is two, right? So, B is the right answer. Always remember, under the LLP, minimum designated partners are two. What must these designated partners obtain as per the requirements? Whether they have to furnish director identification number, professional tax certificate, designated partner identification number DPIN, or GST registration. Yes, DPIN will be the right answer. Option C. Who is responsible for filing the annual returns and statutory compliance in ABC Consultants LLP? See, if you know for sure that the person who is designated will be providing for these annual returns, then so it is fine. Otherwise, you will get confused. So, what is the right answer? Any partner, all partners jointly, Mr. Singh, as specified in LLP agreement, or registrar of LLPs? What is the right answer? Correct answer is option C, as mentioned in the case itself. The LLP agreement has specified that Mr. Singh will be responsible for filing annual return and statutory compliance. The responsibility of designated partner in LLP include what? Selling the company assets, doing all the acts, matters, things that are required by the LLP agreement, only attend the partner meetings, or no specific requirements. See, if you have a mandate of two designated partners, you will be having something. So they will be doing all the acts, matters, or the things prescribed by the limited liability partnership agreement. Correct answer is option B. Okay, so yes, this was it for your principles and practices of banking, the PPP portion of today's mega marathon. Now we'll be moving on to the next subject, so stay tuned. And if you are wondering about the best offers on our JAIIB Mahapack, you can directly contact us on this number, or for that matter, use the discount code Y1003 while purchasing the Mahapack. Right now, we are offering 4x validity as well. Okay, so thank you everybody and stay tuned.
A very warm welcome to all the dedicated bankers and JIB aspirants who are joining us today. This is your official JIB CIB English medium channel by Adda 24/7. And my name is Sia Aarti. I'm going to be your mentor for AFM in JIB subject. Now, today is not just a day on our calendar. It is a reminder of the freedom, sacrifice, and the dream that built our nation. And today, we are going to celebrate this spirit of independence with a different mission, the mission of JIB success. So, if your mission is same, then watch this 8 hours JIB Mega Marathon. And remember one thing, for more updates related to JIB, do follow our channel. You can share this session's channel with your friends and colleagues also. So let's start our AFM Mega Marathon. First question on your screen. The accrual basis of accounting signifies which of the following in the recording of transactions? You have 4 options. A. Recording transactions only when cash is received or paid. B. Recording transactions when the right to receive or obligation to pay arises irrespective of cash flow. C. Recording only credit transactions. Or D. Recording transactions on a quarterly basis. Now, before we solve this exam, let me give you one quick overview. In accounting, when you're preparing books, you have 2 bases of accounting. How you can prepare the books? You have 2 bases of accounting. Number 1, that is cash basis. Number 2, that is accrual basis. Cash basis means when there is only actual cash inflow and outflow. No credit transactions you are going to record. That is about cash basis of accounting. Accrual basis of accounting means whether you receive the cash, whether cash inflow is there, outflow is there, whatever condition is. If you get right to receive or there is a transaction in which right to pay arises, you are going to record in books. Cash flow, inflow, that is a totally secondary thing. If there is a transaction with monetary value, whether on credit basis or on cash basis, you are going to record in your books. So that is what accrual basis. Cash transactions also you will record plus credit transactions. Credit transactions means you purchased goods but you promised to pay after 1 month. So here obligation arises on you to pay this amount. So this is also recorded in accounting. So right answer is which one? A. A is not the right answer. Only cash is received or paid. No. C. Recording only credit transactions. Totally wrong. D. Recording transactions on a quarterly basis. No. Right answer is answer B. See, remember one thing. This is your practice session. This is your module A revision. So I hope that you have done your conceptual, understanding, and then only you are watching it. Okay? Chaliye. Next one. Under sum of years digits method, for an asset with the 5-year life, the denominator is 10, 15, 20, 25. Now, what does this topic means? Sum of years digit method. Let me tell you, this topic is from depreciation. And remember one thing. In your exam, you will get 1 or 2 short questions based on numericals from this unit. That is depreciation. In each and every attempt, we have observed this. Okay, so make sure you are reading conceptually this depreciation unit. Now, depreciation means here your assets value will decrease over the period of time because you are using it. Yes, because of passage of time. Now, to calculate how much amount we need to reduce, we have 4 methods. First is SLM method, that is straight line method. Second is WDV, written down value method. Third is units of production method, and the last one is sum of years digit method. So in this particular question, they are asking about the fourth method. Don't worry, today we are going to solve all these four methods. Okay. Now, what is the sum of years digit method? So now, as per the name, see, they are saying years. Hana means for how many years you are going to use this asset. Basically, this years is representing about the life of the asset. And here it is 5 years. Okay? So right answer is not 5. One more thing you need to see, before this years, you have the sum. Now, what to add here? In maths, you used to take now factors. I hope you remember your maths concept. If I ask to write the factors of 2, you will write 1 into 2. If I ask to write the factor of 3, 1 is to 2 is to 3. Yes, 4 factors, 1 is to 2 is to 3 is to 4. Remember this concept? I hope this is known as factors only. Now, I'm very weak in maths, so please don't judge me. Yes, same concept we need to apply here. We need to break this into factors. But the change is we need to add here. Sum means what? Multiplication. Add. Anna. So first thing we need to take the factors. 1, 2, 3, 4, 5. But don't multiply here. You need to take the sum. So 1 plus 2 plus 3 plus 4 plus 5. So here equal to, this is 6, 10, 13, 15. So right answer is 15. But what is the use of this 15? How it is in denominator? Now, this is the first step to calculate the sum of years digit. So this is your 15. Second step is to calculate depreciation. Okay. So whatever amount of your asset is, just you need to multiply with the, biggest value. That is 5 by 15 for the first year depreciation. Second year depreciation, take again the amount and multiply with next highest fraction, that is 4 by 15. Third is going to be again next highest value, that is 3 by 15. Fourth one is amount into 2 by 15. And last one is going to be again that amount and 1 by 15. As you solve this, you will get the depreciation amount for each year. But remember, for the first year, you are going to allocate higher fraction of the asset because you are going to use it, and the asset will also give you the maximum benefit in initial years. And as years will pass, that, capacity, that function of your machine will reduce over the period. That is why we are taking highest fraction in initial years and then we are reducing it. So as per that, now can you see here this fraction, which is your denominator value, that is 15. Yes, so right answer is answer B. I hope this point is clear now. Next question. Which of the following best illustrates the convention of conservatism, that is also known as principle of prudence? Again, you have 4 options. This is your JAIIB pattern, everyone. Okay? So, first is recording all future profits in advance to present a better financial position. B. Valuing stock at lower of cost or market price. C. Ignoring provisions for doubtful debts to increase profits. Or D. Showing joint life policy at its maturity value in the balance sheet. Now, what is the meaning of conservatism? But let's discuss about this concept. See, let's say here is your business. Okay, this is your XYZ Private Limited. XYZ in financial year 26-27 approached your bank. Bank. Please give us some loan. Okay, in 2026-27, XYZ Private Limited approached bank. Bank, please give us some loan. So bank said, what business you are doing? What is your income? What is your profitability? Correct. You are asking for the loan, then submit some documents. So now in documents, what details, what documents here XYZ company will submit, that is going to be ITR copies, balance sheet, P&L, and so on. Yes. Now, let's say while checking the balance sheet. So here, now you are just seeing the 25-26 balance sheet. Previous year balance sheet already prepared by the company. So as per the balance sheet, you have seen that, okay, financial position is okay. Now while reviewing P&L account, you have seen income is equal to 1000 and minus expenses there is equal to, let's say, 600. Okay. And let's say this is equal to 900. Yes. And here profit is only equal to, that is 100 rupees. Okay, this is your financial year 25-26. And again you ask for the financial year 24-25 because somewhere you have observed that their profit is not very high, but their loan amount is very huge amount. So we cannot trust on only one financial year. So you asked, one more balance sheet of that previous to previous year. Again, you have seen the balance sheet, and again, while reviewing the P&L, you have observed they have written income equal to 800, and this time expenses equal to 1200. So now tell me, profit or loss? Quickly, loss. Rupees 400. Okay. And now you asked for, okay, then again provide one estimated balance sheet for financial year 26-27. What is your target? So again you have seen the estimated balance sheet, and here P&L income statement. Now this is the estimated one, because financial year is going on. So this is your estimated balance sheet and P&L. So now company is saying that we are aiming to achieve 2500 crores. And we are thinking our expenses are going to be only 1000, in amount. Then, what is the profit we are expecting? That is only 1500. Yes. Now, company is saying, based on this 1500, can't you provide us loan of 200 crores? Now, tell me, what is your decision? Just based on current financial estimates, are you going to provide loan to this company because of their estimates that their income will just multiply by 100 times, more than 100 times? Are you going to trust on this particular financial year estimated P&L account? The answer is no. Yes. So this is the point you need to remember. Companies are not allowed to add any estimated income in their P&L. To get whatever scenario they have observed here, based on that they can predict it, but unnecessary window dressing, they cannot do it. So here it is given under convention of conservatism that if you are having any future anticipated profits, just ignore it. Yes, because if you are not ignoring it, no one will show the actual face of the business. Yes, so anticipated profit should be eliminated. You are never going to record. But if you are aware that, let's say, one court case is going on, and because of the court case, there might be 50-50 chances that if you lose, you need to pay 60 lakhs. 50-50 chances, not 100% sure. So if there is any, estimated liabilities related to future, then you need to record it in your book. That is what given as per convention of conservatism, principle of prudence. Recording all future profits and advances to present better financial position? No. Otherwise, everyone will, prepare falsely. Everyone will show wrong amount. Then, valuing stock at a lower of cost or market price. Now, these are the examples that as per conservatism, as per prudence, what companies are required to do. Okay. Then, C is ignoring provisions for doubtful debts. No. Doubtful debts means when you are 50-50% sure that you will get the amount or you will not get the amount. है ना? Like let's say I have purchased goods from you worth rupees 1 lakh. Now after 1 month, because of some problem, I lost my job also. I don't have any amount. So now there is 50-50% that I can pay you or I will reject it. So that is what doubtful debts. Okay. So you cannot ignore because it will lead to losses in your business. 1 lakh loss will be there. So that is what ignoring is not at all allowed. Then showing joint life policy at its maturity value. So right answer of this question is that is option B. So this particular concept, that is convention of conservatism, this is applicable for the creation of provision for doubtful debts, creation of contingency reserves, 50-50 court case, then value the stock in hand at lower of the cost or market value. This is what given as per AS2 also. Okay, then the fourth one is show the joint life policy at surrender value. Here you are not allowed to show at maturity value. You need to write as per surrender value. So as per this, right answer is answer B. Okay, next. What are drawings in accounting? A. Withdrawals made by the business for expansion. C. Withdrawals made by the owner for personal use. C. Withdrawals made by creditors to settle liabilities. D. Withdrawals made by customers for refunds. Yes, what do you think? What is the meaning of drawing? If you think drawing means we need to make one house, we need to make the mountain. No, that is not the drawing here we are talking about. Yes? So, what is drawing in accounting? See, listen. Let's say here is Mr. Ravi. Now, Mr. Ravi wants to start one business known as Ravi Private Limited. Okay? So, initially when he started this business, correct, he will use his own savings, correct? Cash plus own assets he will also put in this business. Yes. So whatever owners are putting in the business, that is known as capital. That is known as capital. Okay. Now, for daily personal expenses, he must be taking some amount from the business also. So whatever amount he is taking out from the business for his personal use, that is known as drawing. That is known as drawing. So remember, when owner is investing, that is known as capital. When owner is withdrawing, that is known as drawing. So as per this, which option is correct? A is wrong. They are saying the expansion of business. No. C is wrong. Creditors to settle liabilities. Customers for refunds? No. Right answer is answer B. When withdrawals made by the owner for personal use. Right answer is B. Next. Recording a capital expenditure as revenue expenditure is an example of error of omission, error of principal, error of commission, compensating error. Now, first we need to understand what is the meaning of expenditure. Okay. Expenditure means what? When cash is going out. है ना? Cash outflow. ठीक है? Yes? Means whatever expenses you are incurring because of purchase of goods, because of purchasing your day-to-day activities. So that is what expenditure. Expenditure means cash is going out. Expenditure means cash is going out. Okay? Now, next term you need to understand, that is capital and revenue. Yes, capital and revenue. Capital means expenditure you have done for your long-term benefit. Long-term benefit. Okay. Revenue means expenditure you have done for your day-to-day activities. Yes. For example, let's say I'm starting one Aarti furniture store. Aarti furniture store. Yes. So what I'm going to sell here on day-to-day basis, I'm going to sell chair, table, sofa. Along with this, I will be paying salary, rent, electricity, है ना? all these things are going to be my day-to-day expenses. Yes, all these things are going to be my day-to-day expenses. But on chair table, so I'm going to purchase from some third party now. So for purchasing also I need to incur some expenses. So all my day-to-day purchase, purchase and salary, rent, electricity, these are going to be my revenue expenditure. Yes. Now, for my business, let's say I purchased one building. Yes, I purchased one building. I purchased one machine. Yes. So all these assets which I'm going to use for more than 12 months, these are going to be capital expenditure. These are going to be capital expenditure. Okay? So capital expenditure and revenue expenditure. Now, you have different errors. Errors means you have made some mistake. You have made some mistake because of which your trial balance is not matching. Your debit is not equal to credit. Because of some errors, your debit is not equal to credit. Now, errors are divided into two parts. Okay, let me explain you very quickly. Here we have two types of major errors. First one is your clerical errors. Second one is your principal error. Okay, clerical and principal one. Now, clerical error is again subdivided into omission, then commission and compensate. Whereas your second type is, that is error of principal. Yes. Now remember one thing, so many bankers make one mistake. Here I didn't say principal is again divided into omission, commission, compensating. No, I didn't say this. Hannah, so please don't assume it that this principal is also again divided into omission, commission, compensating. No. Only clerical errors are subdivided. Okay. Now, let's understand this errors one by one. Omission means, see, here is one term that is omit. Here is one term that is omit. Omit means what? Omit means what? You have forgotten to record the entry. And there is no entry in your books. That is what omit. Okay? No entries in your books. Means no transactions in your books. Oh my god, I forgot to record it. Oh my god, I have forgotten to record it. Okay? So that is what omit. Now, commission means what? Here your errors in your totaling. Okay? Here you have wrong amount or wrong side. This is your commission. Now, compensating means because of one mistake and then you make the next mistake, both the mistakes got compensated. First you made one mistake, then you made the next mistake and both the mistakes got compensated. So that is what compensating error. Yes. Now, principal error means your basics are only not clear. Yes. If your basics are not clear, you don't know what is capital, what is revenue, then you are going to make the mistake of principal errors. Yes. You are going to make the mistake of principal errors. All your capital expenditure you are writing under revenue, revenues under capital, if you don't know this concept. So which type of error you will make here? Principal one. So as per the given question, they are saying recording a capital transaction as a revenue. You purchased land, so land is a capital expenditure, but you are recording under your P&L account. So that is wrong. So this is your error of principal. Again, right answer is that is B. Okay, chal, next. From the journal, the amount payable to or receivable from a particular person can be calculated by adding all the entries, which is a difficult task. Now, this made easy by which of the following books? What is the meaning of this, ma'am? See, in accounting, first we need to identify the transactions. First, we need to identify what? Transactions. Okay? If these transactions are having monetary value, means you can measure in terms of money, then only you will start recording in your books. Yes? If you can measure this in monetary value, then only you will start recording in the books. Now, first book you will maintain here, that is journal. That is journal. Now, after this journal, you will prepare ledger. But what is journal? See, this is your day-to-day book, because we cannot remember all our entries here. We don't have that much capacity to remember all these entries here. So what we are doing, we are preparing one separate book. We are preparing one book through which we are writing day wise, chronological wise entries. Okay, all your 14th August entry, then 15th August entry, 16th August, 17th August, all your day wise entries. Now, in a single day, are you going to perform only one transaction? The answer is no. Now, there are so many different transactions. Let's say you paid salary also, rent also, and you purchase some goods. On 15th here, you again sold, you have sold some goods. Then you have purchased again some goods. Yes, you paid some interest also. On 16th, again, there are some different transactions. On 17th, again, you have sold some goods and then you purchase some goods. Yes, so there are n number of transactions in a day you are going to perform. Let's say on 31st August, I asked you that in a month, how much you have purchased your goods. So what you will be doing? You will take your book, where you have recorded day wise. Now what you will do? You will take this book and now you will just flip these pages. Oh, acha. 1st August, 10,000, okay. Then on 1st August, only 10,000. Then 2nd August, okay, 2nd August, we have 15,000, okay. Then on 2nd, no, there is no entry. On 3rd August, also we have an entry, acha, okay. I'm just looking at your face, hai? Then on 3rd August, you said, ma'am, there is no transaction, okay. Ma'am, 4th August, 20,000, ma'am. Then on 5th August, let me check, ma'am. There is one entry for 60,000. Acha, on 6th August, okay, there is no entry. No, there is no entry. So what I mean? This is a wasted of time. This is a very time-consuming process. Just imagine if this is what Reliance company, Tata companies are going to perform, or your bank will start performing like this. Are you going to complete any task? The answer is no. So what we need to do? How to simplify this journal entries? How to know that in your purchasing, what is the total amount that you have purchased? In salary, what is the total amount that you have paid? Rent, what is the total amount that you have paid? Correct. So for that we prepare ledger. So based on your journal, you will prepare which account? That is ledger. Now ledger means here you are going to classify each and every transactions as per the same nature. Rent, all rent under one account. Salary, all salary details under one. So that is what you are going to prepare. You will simplify your transactions based on your ledger. So as per this, which is the right answer here? Ledger. Answer A. Got it? Next question. Which of the following is an example of a non-current asset? Now this was asked in your May 2026. So tell me. Cash in hand, accounts receivable, machinery, inventory. Non-current assets. See, current assets means which you can utilize within 12 months. That is your current assets. Non-current assets, or you can say fixed assets, which you are going to use for more than 12 months. So that is non-current assets. So here cash in hand you will utilize within 12 months. Accounts receivable, that is the combination of your debtors plus your bills receivable. So that is also your current assets. Then inventory, again you will use on day-to-day basis, but machinery you will use for longer period of time. So here right answer is answer C. Next. A bank reconciliation statement, that is BRS, is prepared by A, the bank to verify the customer's account, B, the customer account holder to reconcile the cash book balance with the passbook balance, C, the auditor after audit, D, the income tax department. Income tax department won't do all these things. They are very busy. They are not going to prepare any BRS. Then the auditor, no, auditor is just coming and checking and taking out the faults. So auditor is not doing. Then why, means who will then prepare this BRS? See, BRS prepared by accountant. Yes, BRS is prepared by accountant to match cash book with passbook. Yes, to match cash book bank balances with passbook balances. So here the bank to verify the customer account? No. Right answer is again answer B here. Here the customer to reconcile the cash book balance with the passbook balance, they are going to prepare it, BRS. So right answer is answer B here. Next. Goodwill, trademark, patents. Oh, sorry. This was asked in your May 2026. Okay. Now tell me goodwill, trademarks, patents are example of what? Tangible, intangible, nominal, representative, personal accounts. Now goodwill is a part of intangible real accounts. These are assets. These are of course your assets, but these are not having any physical existence. You cannot see them, but they are giving you benefit for longer period of time. So right answer is answer B. Yes, not tangible. Tangible means having physical existence. Nominal account means where you will be recording all your expenses and incomes. Representative personal account means you are going to record outstanding entries, advances, prepaid, all these things are coming under representative personal accounts. See, if you have done your one-time conceptual understanding now, then you are going to find these questions, easy. But if you haven't started your preparation, then of course you might be faced some problem because these concepts you can solve only after knowing it. And these are not very common concepts. So please don't take your JAIIB AFM lightly. Again, I'm saying, start your preparation and work on day-to-day basis. Be consistent with your preparation. Yes? Now, next. Revenue expenditure refers to, just we discussed here. See? Already I told you, expenditure means cash outflows in simple terms. Now, you have two types, that is capital and revenue. Okay? Already we have revised this concept. So now tell me which option is correct here. A. Cost incurred to run daily business operations. B. Investments in acquiring long-term assets. C. Expenses related to increasing the value of fixed assets. Or D. All the above. Now if you see the B option, they are saying long-term assets. But long-term assets are not used on day-to-day basis. They are going to be used for more than 12 months. So this is wrong. So if B is wrong, D is also wrong. How you can say all above are correct? So eliminate the D1. Then C is also wrong because expenses related to increasing the value of fixed assets. Both the points are related to capital expenditure. But right answer is answer A. Revenue expenditure means all your expenses that you are incurring to run your day-to-day business. Yes? Next. What is a primary source of income for a business? Now this is a very common question. A. Borrowing from creditors. B. Sales of goods or services. C. Stock valuation. D. Selling long-term assets. Now in your business, which activity you will do on day-to-day basis to generate your income? Are you going to sell all your long-term assets? Let's say here I started furniture business. Yes. Now, my day-to-day business is what? My day-to-day business is going to be selling, purchasing table, chair, sofa, dining table. Yes. But along with this, I also purchased fixed assets like building, machine, and a car, computer, all these things. Now here, am I going to sell all these assets on day-to-day basis? No. So this is not my day-to-day basic primary source of income. Then borrowing from creditors. Every day I will go and borrow from my creditors. Please, please, please give me some amount. No. So A is also wrong. Stock valuation is not a source of income. Right answer is that is B. Selling of goods or services through which you will generate your primary income. Now, next question. Now this is again very important question. This was asked in your May 2025. So please solve it very carefully. Sunrise Paints Limited consistently issues for production the materials that were purchased earliest, using up older stock before newer purchases. a practice that helps prevent expiry or deterioration of raw material. Which inventory valuation method is being followed here? You have again 4 options. Please tell me which option is correct here. A. Weighted average method. B. First in, first out FIFO method. C. That is first in, last out method. Or D. Last in, first out method. That is LIFO method. Yes, everyone, now it's your turn. Please tell me. Yes, everyone, which option is right here? See, Sunrise Paints Limited, what they are doing, they are consistently issues for production of materials that were purchased earliest. Let's say here, on 1st August, they purchased 100 units. Okay. On 2nd August, they purchased 300 units. Then on 3rd August, they purchased 400 units. On 4th August, they purchased 500 units. Now, on 5th August, they got the order for 400 units. Now, what do you think? Which unit they will use first? See, read this line again. Consistently issues for the production of materials that were purchased earliest, using up older stock before newer stock. A practice that helps to prevent expiry or deterioration of raw material. So instead of using directly 3rd August raw material, here first they are going to use 1st August raw material plus 2nd August raw material. And this is your first in. First in. Hana, first you purchased 1st August. First in, so they will first go out. So this is your E option. First in, first out. FIFO method. So correct answer is your answer B. Yes, correct answer is answer B here. I hope this point is clear. Next. A machine was purchased for 6 lakhs with an estimated salvage value of 50,000 and the total estimated production capacity of 1,10,000 units. In the first year, it produced 22,000 units. The depreciation expense for the first year under the units of production method is. Initially, when we discussed about the depreciation, I told you we have 4 methods of depreciation. One method already we discussed, that is sum of years digit method. Now this is your next method, that is units of production method. So here, how you are going to calculate depreciation based on actual production, based on actual usage of your machine. Yes, so for calculation of depreciation, we have a formula. Yes, your total estimated production units in denominator, in numerator, actual production in your current year multiplied by depreciable amount. What is the meaning of depreciable amount? This is the amount on which you need to charge depreciation. And even this was asked in your November 25, I think, or in November 24. Somewhere they asked this term. What is the meaning of depreciable amount? So depreciable amount means this is the amount on which you will charge depreciation. How to calculate depreciable amount? You need to take the cost of asset, yes, minus scrap value. Scrap value. And this gives you depreciable amount. Yes. Now, actual production. If you see here, in the first year, it produced 22,000 units. 22,000 units in numerator. Then, what is the total estimated production capacity? That is 1,10,000. Yes. Now, as per your third factor, you need to write depreciable amount. So, what are you going to write here? Directly 6 lakhs. If you are writing directly 6 lakhs, you are wrong. Just I told you what is the formula for this depreciable amount. That is cost, that is equal to 6 lakhs minus scrap value, that is 50,000. Yes. So 6 lakhs minus 50,000. That is 5 lakh 50,000. 5 lakh 50,000. Yes. So if you solve it, what is the answer? 22,000 divided by 1 lakh 10,000 into 55,000. So right answer is 1 lakh 10,000. So for the first year, what is the depreciation amount? That is 1 lakh 10,000. Now if you know this formula, this is a very easy question. Otherwise, if you don't know this concept, you don't know this formula, of course, you cannot solve it. Hana? So please everyone, it's again reminder to please start with your conceptual understanding. Next, the original cost of an asset is 2,50,000. Its useful life is 10 years. And the estimated residual value is 50,000. Under a straight line method, the depreciation for the first year is. Now, clearly they have given you which method of depreciation you need to use. Straight line method. This is your SLM method. And again, depreciation based method. Now, as per this SLM straight line method, your depreciation formula is cost minus scrap value divided by life. So what is the cost of your asset? That is equal to 2,50,000 minus. What is your residual value? Residual value, or you can say here scrap value. Scrap value, residual value, they can use any term. That is 50,000 divided by life, that is 10. That is estimated life. So this is 2,50,000 minus 50,000 divided by 10. So right answer is 20,000. Now remember one thing. If they ask to calculate depreciation for 4th year, okay, then don't go to don't solve this question again, because as per the straight line method, every year depreciation will remain same. Yes, every year depreciation will same. So don't calculate it again and again. So just say for the 4th year also 20,000. If they ask for the 6th year, 20,000. If they ask for the 9th year also 20,000. If they ask for the 15th year, don't say 20,000. No, but you only just told na 20,000. No, not for the 15th year. You said you will use your asset for only 10 years. Then how come after that you are applying the depreciation? Your asset value will completely over till your 10th year. So please don't say 20,000 again. So these are very tiny topics which are very important from exam point of view. Yes. So right answer here is that is okay. Next. A machine is purchased for 10 lakhs. Additional expenses incurred: freight 40,000, non-refundable import duty 60,000, installation expenses 30,000. As per AS 10, what is the actual cost of the machine to be capitalized? Now, AS 10 talks about property, plant, equipment. Remember, very important topic from exam point of view, that is accounting standards and Ind AS. Very important. Yes, at least you will get 3 to 4 marks question in your exam. Yes. Now, for calculation of your assets value, as per PPE, you are going to apply this formula. Whatever purchase amount you have incurred, you will take that also, plus whatever direct expenses you have incurred to make your asset ready to use, like your freight expenses, plus non-refundable import duty, then installation expenses, all these things you need to add. Let me give you one very simple example. Let's say here I purchased one AC. Okay, this is your seller. Okay, this is AC showroom. I purchased one AC from the showroom. Okay, now this is my home. This is my home. Now, I purchased this AC. Still, this AC is in this particular shop of seller only. So, can I just use this AC in that shop only, and I will get that cold air in at my home? No, Hannah. First, I need to bring that AC to my home. Yes. So, what I will do, I will ask from one truck or that particular matador that please bring my AC. Okay, so see, now they are bringing this AC. Yes. So here I paid freight expenses. Here I paid freight expenses. Now this matador is coming. Okay. Now matador, with the help of this, I got this AC, and still this AC is lying on the floor. Can I still use it? No. How you can use it? That is already packed in a box. You need to fit that AC also, no, on the wall. So what you are going to do? You will ask from some experts, okay, that please fix this AC on that window or on wall, whatever it is. So you called one boy, okay, this boy came, service boy, and installed this AC here on the wall. Yes. Now after installation only you can use it. And before this step you can never use it, though you have purchased it, but your asset was ready only when they fixed it on the wall. Yes. So remember this part. Correct. So here all these expenses which you have incurred to make your asset ready to use. Ready to use. Whatever expenses you have made to make your asset ready to use will become part of your AC. Okay. So as per AS 10, not only the purchase amount, but apart from that, all your direct expenses also will become part of your asset. So here actual cost is not just 10 lakhs. That is incomplete answer. You need to add 40,000 also, 60,000 also, and 30,000 also. Yes, and this is going to be your actual cost. 10 lakhs plus 40,000 plus 60,000 plus 30,000. So this is equal to 11 lakhs 30,000. Yes, so right answer is answer B. Correct? So this is how you need to calculate one by one for the actual cost. Always remember, don't just say purchase amount is your actual cost. No, as per AS 10, that is property, plant and equipment, you need to add all your expenses, and that is how you need to calculate here. So this is your one very important question, very important concept from exam point of view. Now next, legal fees paid to acquire a property is treated as A, revenue expenditure, B, capital expenditure, C, deferred revenue expenditure, or D, prepaid expenses. Now again this topic is related to your AS 10 only. Okay, that same concept you need to apply here. But check one thing, here you have purchased one property. Let's say I want to purchase one land. Okay, and land valuation is equal to 50 lakhs. Correct? Now this is the valuation of land, but for taking the ownership, here I need to take the registry also. Yes, let's say registry costed me 60,000 rupees. Yes, so this is what the legal fees I have paid. Now, I don't know how to make the registry papers now. So, I will go to the advocate. Advocate, please prepare this registry. So, now he charged, let's say 10,000 rupees, whatever it is. Yes, so to get this land ownership, whatever expenses I have done to take the control, that is going to be a part of land only. Same, AS 10. Yes, apart from purchase price, all your direct expenses you need to add in your calculation. So here, this land, of course, I'm just not going to use for 1 day, 2 days. No, I'm going to use this land for more than 12 months also. So this is going to be capital expenditure. This is not revenue. Revenue means your day-to-day expenses. Okay. So just remember it. This is not deferred revenue expenditure. In your AFM, you don't have this concept. Just leave it. Then prepaid expenses is also not a part of your capital or revenue expenditure. Just leave it. So right answer here again is answer B. Yes, next question. Now what happens when there is an increase in revenue or gains? First, it is debited. B, it is credited. C, it is ignored. Or D, it is recorded on the left hand side. Yes. Now, as per your modern rules of accounting, you need to follow one concept for debit and credit. All your assets and expenses will come on debit side. Generally, they have debit balance. Okay? Generally, their balance will come on which side? Debit side. Plus, if you want to increase this assets or expenses, again, it will come on debit side. But if we talk about LIC, what is the full form of LIC? Liabilities, income, capital, LIC. So if we talk about this LIC, their balance generally will come on credit side. Plus, if you want to increase it, you need to use credit side. Okay? Now, if I talk about revenue or gains, that is a part of I from LIC. This is a part of revenue or gain. So if you are increasing it, which side you will use? Debit or credit? Credit. So it is credited. So right answer is answer B. Okay? A is wrong, C is wrong, and D is wrong. How you can ignore when your liability is there or when your income is there? And you cannot ignore it. That is not accounting tells you. So here again right answer is that is next. What is the rule for personal accounts? Now this question is based on your golden rules of accounting. Golden rules of accounting. Now let's quickly revise it. Now as per this golden rules of accounting, we have 3 rules. First is our personal rule. Second is real. And third one is nominal. Yes. Now as per debit and credit, debit means receiver, credit means giver. Yes. Now personal means when we are talking about individuals, when we are talking about companies who are having legal status, or representative personal account. When we talk about your outstanding amount, advanced amount, like that. Okay. Then real. Debit means what comes in. Credit means what goes out. Here we are talking about assets. Now, all your expenses and income will be part of nominal. So debit means expenses or loss. Credit means income or gain. Okay, so this is your golden rules of accounting. Now, here they are asking about the personal account. So which option is correct? Debit what comes in, credit what goes out. B, debit all expenses, credit all incomes. C, personal account is not going to talk about what comes in, expenses, or here, see the third point, debit the receiver, credit the giver. So right answer is that is C. So C is your right answer. Next question. Which statement is true about the relationship between the journal and the ledger? Again, you have 4 options. First, data from the ledger is posted into the journal. B, data from the journal is posted into the ledger. C, the journal and ledger are independent of each other. Or D, both record transactions only in chronological order. Yes? Now, what is the relationship between journal and ledger? Always remember, both are not recording in chronological order. No. This chronological order is only and only for journal. Chronological order means day-wise. So day-wise we record in journal. And in ledger we do classification. We do what? Classification. That is what we are doing here. Now, journal and ledger are independent of each other? No. Data from the ledger is posted into the journal? No. First journal and then ledger comes. So right answer is answer B. Data from the journal is posted into the ledger. So right answer is here B. Then next. What is the primary purpose of maintaining a petty cash book? Yes, we have one main cash book, and for small transactions, petty means for small transactions, we prepare this petty cash book. So to record large payments? No. To replace the main cash book entirely? No. To manage large cash flows? Right answer is answer B. Basically, we are preparing this to record our small expenses. Okay, next. Who is responsible for maintaining the petty cash book? Always remember, petty cash book is prepared by petty cashier. Yes, not head cashier, accountant or auditor. No. Petty cash book related to petty cashier. And main cash book is prepared by cashier. Yes, so these are the two different things which you need to remember. Now, next question. Vijay sold goods to Preetham on 1st September 2022 for 1,06,000. Preetham immediately accepted a 3 months bill on due date. Preetham requested that the bill to be renewed for the fresh period of 2 months. Now Vijay agrees, provided interest of 9% per annum was paid immediately in cash. Now to this Preetham was agreeable. Now the second bill was met on due date. You need to give journal entry in the books of Vijay in case of renewal of bill. Okay, so let's quickly draw some images so that we can easily understand it. Vijay sold goods to Preetham. Okay, so here is Vijay. If Vijay sold goods, so here Vijay became the seller. Okay, and Preetham, who is who is a buyer, is going to be your buyer. Okay. Now they prepared one bill for equal to 1,06,000. Okay. So who is drawer here? Drawer is equal to Vijay. Okay. And Preetham becomes here drawer. Yes. Now. Okay. So they have prepared their first bill. This is the first bill for 3 months. But on due date, okay, on due date when Vijay asked for the payment after 3 months, Preetham denied it. I don't have any cash right now. Please provide one new bill. Okay. So this old bill now here will end. Okay. On due date it will over. Now here they are going to prepare new bill again for how many months here? Yes, for the next 2 months. Okay, this new bill is for next 2 months. Okay, so now here they are asking to write a journal entry in case of renewal of bill, and in whose book? In the books of Vijay. In the books of Vijay. So first of all, you need to cancel your old bill. Cancel old bill. Yes, cancel old bill. So while accepting this bill, what entry Vijay passed? See, here Vijay will write BR debit to Preetham. Okay. This was passed on 1st September when they prepared the bill. So here, for the cancellation, you need to just reverse the entry. So this is going to be Preetham debit to BR. Because on due date, the legal value of this BR is now over. So this is 1,06,000, 1,06,000. Okay, this is cancellation of your old bill. Now on the same day, here Preetham asked for the new bill. Yes, Preetham asked for the new bill. So here it is new bill debit for 1,06,000. But now Vijay says that if you want one new bill, if you want one more chance to repay this amount, here you need to pay interest. Yes, interest at 9% per annum. Yes, So what will happen here? Here Vijay will get cash on immediate basis, because see, they are also saying you receive cash on immediate basis. So cash account debit, and this total amount belongs to Preetham. But what is the cash amount? What is the interest amount? So take 1,06,000 into 9%. Yes, into 9%. Now tell me, here are you going to take 2 months or 3 months? Yes, now it's your turn. You need to tell me. So now here, so what is your final answer? Here your final answer is that you need to calculate this 9% for your next period. That is going to be 2 divided by 12. So 106 into 9% into 2 divided by 12. So this is 1590 plus 1,06,000. So total amount 107,590. Correct? So this is your journal entry in case of renewal of bill. Because here on due date, Mr. Preetham said, no, I cannot make any payment. Please make one new bill. Correct? So this is about your journal entries. Remember, it is very important. Yes? Next question. Under the WDV method, or you can say diminishing balance method, depreciation is calculated on what? Original cost of the asset every year, residual book value of the asset at the beginning of each year, number of units, or market value. See, market value is never used. Number of units is used in case of units of production method. Now already we calculated one numerical based on it, so eliminate it. Original cost means they are saying to use straight line method. Or now we also know what is SLM. What is the formula also. Right answer is answer B. Residual book value of the asset at the beginning of each year. Means every year you need to calculate this answer. Okay? Next. What type of error occurs when a transaction is completely omitted from the ledger accounts? When you omitted complete transaction from your books. Already we discussed what are the types of errors. So if I talk about the commission one, commission means wrong amount or wrong side. So this is not they are asking in the question. Principal means you are writing capital expenditure as revenue expenditure. That is also not the right answer. Compensating means you made one error and then you made the second error and both got compensated. Right answer is answer C. Yes, next. Which of the following facilitates the preparation of profit and loss account and trial balance? Journal, ledger, trial balance, subsidiary books. Remember, this session is for your practice. This session is for your boost, your confidence. So remember one thing. If you have recently completed your concept, so with this you can at least get your confidence that yes, I can solve, conceptual based questions. All the questions are conceptual based. So remember, for, tackling difficult questions, first you need to go through with the simple questions. Because if you don't know the concept of directly going for the difficult questions, it will not help you. You don't know the concept also, and you cannot, solve difficult questions also. So please make sure first you are practicing with the basic questions so that you can recall your concepts again and again. Okay, next. Which of the following here facilitates the preparation of P&L? Means based on which type of account you are going to prepare final accounts. That is P&L and balance sheet. Yes. So first you prepare journal, then ledger. After ledger you prepare trial balance. And based on trial balance, you are going to prepare final accounts. So right answer is answer C. Yes. Next. An accommodation bill is drawn for the purpose of genuine trade transactions between two parties. B. Without any consideration, only to provide mutual financial help. Or C. By a bank for financing a customer's import. D. To record sales made on credit. So tell me here, why you are going to use accommodation bill? This is not for actual genuine trade transaction. No. Yes. This is not prepared by a bank for financing customers' import. No. To record sales? The right answer is to provide mutual help. Yes, to provide mutual help. Let's say here is Mr. A. Here is Mr. B. Okay? Mr. A wants 10,000 rupees and Mr. B is in a requirement of 15,000 rupees. Now they asked from different friends, everyone denied. They went to the bank for the bank overdraft. Bank rejected it. So what they decided that let's make here bills of exchange on each other. Okay? And what they will be doing with the help of this BR, they are going to the bank and as a collateral asset, they are going to take the amount on immediate basis. So this procedure is known as discounting. So they will be using this discounting procedure to generate the funds. Here Mr. A, Mr. B, they are not a buyer and seller. They are not creditor and debtor. But to help each other to generate the funds, they have prepared this bill. So right answer is answer B. Okay, next. Which of the following is not a cause of depreciation? Wear and tear from usage. B. Obsolescence due to technological advancement. C. Passage of time. Or D. Increase in the market demand. What are the reasons of depreciation in assets? Because you are using it. That is one factor. Because of changes in technology. Okay. Because of old machine, new technologies, passage of time. But increase in the market demand will increase the value of your asset. So this is wrong here. This is not the cause of depreciation. So right answer here is that is answer D. Next. A bill is drawn on 12th August 25 for 3 months. Find the maturity date if 14th November 25 is a public holiday. Now here, let me tell you about grace period. Okay, how to calculate the date of maturity. So first of all, you need to see the actual date as per your bill. So here you have drawn bill on 12th August. Okay, this is your starting date. For what time period? For 3 months. So if you calculate 1 month, this is going to be 12th September. Then second month, this is going to be 12th October. And 1 month again, this is going to be third month on 12th November. Okay, 12th November. Now, see. First, here, we have calculated the actual date as per date of maturity. So this is equal to 12 November. And always remember, you need to add 3 days of grace period in each and every situation, every time. And after adding this, so 13, 14, 15. 15 November is your date of maturity. This is your date of maturity. But ma'am, in question they are saying 14th November is a public holiday. So what? So what? They can write anything. But you need to calculate which is your final date of maturity. Okay, always remember they are going to give you the twisty questions. Because of this, you might say, "Arey madam, here it is given a 14th November is our date of maturity. So let's say if it is a public holiday, let's take directly 13th November as our date of maturity." So you will say answer B, but no. First calculate as per the bill. Now this is just your calendar. This is just your calendar. Okay, this is just your one information. This is not the question, or this is not the actual question that you need to solve here. Calculate it. So as per that, right answer is 15. Be very careful when you are solving it. Okay, and yes, in exam they can give you extra information also like this. So not every information is useful. You need to calculate. Yes, and these are the mistakes that we make, and because of which we are facing problems during our exam time. So please practice it again and again so that you are not going to fall under that trap. Yes, next. Suspense account is opened when a transaction is completely omitted from the books. B. The trial balance does not agree and the exact location of the difference is not immediately known. C. A fixed asset is sold at a loss. D. Closing entries are passed at the year end. So see, suspense account is opened just to tally for temporary basis. Yes, if you want to tally for a temporary basis, you are going to use this suspense account. Okay, so right answer here would be answer E. Next. Now this question is from your module D. Now let me tell you, this topic you will cover in AFM also, in your RBWM also, and in your, I think, May 2025, they asked in your Indian economics also. So I will tell you how to retain this. Okay, I will tell you how to retain this. These are the deductions available when you are filing income tax return as per old tax regime. Okay, when you file income tax return ITR as per old tax regime, these are the deductions which are available to you. Now, as per section 80D, you get the deduction when you are taking medical insurance. Okay, when you take medical insurance. Yes, so here, deduction in respect of health insurance premium, you get the deduction under 80D. So A is going to be fourth option. Next, 80G. Yes, 80G means related to donation. Yes, in respect of donation. So that is B equal to 2. Now, how to retain 80D and 80G? 80D is related to what? Medical. Health insurance. Health insurance, why we are taking? So that in case any medical emergency arises, we can take the benefit of insurance. Medical is related to doctor. So 80D, doctor. D equal to doctor. Insurance, health insurance equal to doctor. Then G. Here we are talking about the donations. Yes, donations, or you can say grant. Okay, grant. All the donations that you are giving to any charitable institutes or any, political parties, you will get the deduction under 80G. This is how you can remember these two. Now, 80U. 80U means if you are a person with disability. You are disabled person. Okay, so 80U. 80U here is C is equal to 1. Then 80E. 80E means if you have taken any loan for higher education. You have taken a loan for higher education. And if you take a loan, you need to pay interest. So on that loan, whatever interest you are paying, yes, that will come under 80E deduction. Now how to remember? For what purpose you have taken this loan? For education. For education. So 80E equal to education. So D is equal to 3. Okay, just give one more. Now you can see here. Okay, fourth option is your right option. Yes. So here A4, B2, C1, D3. So right answer here is here answer. Always remember, this is very important and this is a trick through which you can remember this section numbers, yes, and their benefit, because they can ask in any subject, Hana, if it is given in your syllabus. So don't just think that in AFM, if it is given, so it will be asked in AFM only. No, nowadays they are asking in different subjects also. Okay, so be ready for that. So here, these are the mnemonics through which you can retain it for longer period of time. Yes, 80D means doctor. D means doctor related to health insurance. 80G means grant related to any donation that you have given to any political parties or charitable institutions. Or 80U. 80U means when we are talking about that you are a person with disability. Yes. So, and the last one is that is section 80E. 80E means when you have taken a loan for your higher studies. I hope this part is very much clear. Okay, chal. Now coming to next question. When a transaction affects both the cash column and the bank column of a three-columnar cash book, example, cash deposited into the bank, it is called a compound entry, contra entry, rectification entry, or opening entry. Now, first, let's talk about cash book. Yes, so cash book is your again T-shaped account. Yes, so it is like this, debit side and credit side. All your inflows of cash will come debit side. All your outflows will come on credit side. Yes. Now here you are going to use cash book for journal also plus ledger. Okay, this is one cash book you will use in both the steps. Okay, one cash book is used for journal also, ledger also. Now here, when you apply the real account rule, yes, debit what comes in and credit what goes out. Yes, so when money is received, it will come debit side. When money is going out, it will come on credit side. Now there are three types of cash book. Three types of cash book. Number one, that is single column cash book. Yes, in which you have only, this is the example. This is the table that I have drawn here. Okay, this is your single column cash book. Yes, then second type is double column cash book. Now double column cash book, here you have again debit side and credit side. Debit side, credit side. But this time you have two columns, okay, on both the sides. So here you will write cash book, cash balance, and next column, in your book it is given discount. Okay, but remember, as per businesses, you can also write here or bank. If you have more number of bank transactions, then you will prepare second column as bank. Yes, but in your book, it is given discount. As per business, you can change it. Same in credit side, discount or bank. Yes, this is your double column cash book. Now, third is your triple column cash book. Means now you will prepare three columns again on both the sides, debit, credit. Here cash book, then you have means cash column, okay, then discount column, and bank column. Yes, now here debit again will record all your inflows and credit again will record all your outflows. Now the point is, see, as per the given example, cash deposited into bank. means, let's say here ABC Limited, ABC Limited Company's cash book we are preparing. Okay. So till now ABC in their business used to hold cash rupees 50,000. Now they want to deposit this 50,000 into the bank. Yes, so what they will be doing, they will be taking this cash, either they will go to the deposit machine or they will go to the bank, है ना, to deposit in their bank saving ABC account, है ना, ABC's bank saving account or current account, whatever it is. So what transaction accountant will pass? See, from the cash book, this 50,000 is going out, so it will come here under the cash book. Yes, and it is deposited in the bank. So here it is an inflow in our bank account. So for the same, means for the one transaction, you have affected debit also, credit also of the cash book. So if you affect debit also, credit also at the same time because of just one transaction, you will say this is your contra entry. This is your contra entry. Yes, or when this ABC company withdraws from the business, withdraws from the bank, है ना? Let's say from the bank you have withdrawn 5,000 rupees from ATM machine. So now from the bank balance you will deduce and cash in hand it will increase. So same company cash book is decreasing and cash book is increasing and pass book is reducing. So if same transaction affects both the books, then you will say it is a contra entry. Okay, this is not a compound, rectification or opening entry. No. Right answer here is, that is answer B. I hope this point is clear. This is very important point from exam point of view. Okay, this is your contra entry. Now next. Column A, you have machinery account, outstanding salary account, commission received account, Rajesh capital account. Column B is nominal account, real account, representative personal account, and this is personal account, that is natural. This question is based on your, again, golden rules of accounting. Okay, this is your golden rules of accounting. Let me again revise this golden rules of accounting. See, for accounts, this is the first step that you need to remember. Okay, if you don't know this, you cannot solve any questions based on your accounts, especially journal entries, ledger, debit, credit, which account is debited, which account is credited. That is very confusing if your golden rules of accounting is not clear. So first we have personal. Yes, then we have real account, and last one is nominal. This is nominal. Okay. Now, as per the personal, we are going to talk about person. As you can see here, one term, that is, we are talking about person. Now, person can be natural human being like you and me, or it can be artificial also. Artificial? Robot? No, not robot. It means who are having legal status. Legal status like companies. Reliance company, Tata company, they are having legal status. In your bank, you are opening the company's account also. Yes, you are opening the company's account. Yes or no? Reliance company's current account, Tata company's current account. Why you are opening it? Because they are having legal status. And they have their own PAN. They have their own, legal status in the eyes of government also. Yes, your bank is also a legal status. So when we talk about artificial person, yes, it is a part of personal. One more classification we have under this, that is representative. Representative means you are representing something. Okay, you are representing that your amount is still outstanding. You have taken advance in your salary. You have prepaid telephone bill. Correct. Prepaid recharge you can do. So these things are representing something. So this is your representative personal account. Yes. Now, second is your real one. Real means when we talk about assets. Now, as per accounts, if I classify about the assets, okay, here we are talking about tangible, intangible. and even your current assets also. Now, here tangible means which are having physical existence. Intangible means no physical existence. Yes, physical existence means you can identify which is your land, you can identify which is your building, which is your machine, your vehicle. But intangible means which are not having any physical existence, like goodwill, patent, trademark, copyright. Yes, all these are not physically present, but they are giving you benefit. So here it is covered under real. Okay, cash is again a part of assets only. So you apply here debit and credit. What comes in? Whenever your assets are coming in, debit. Whenever your assets are going out, so what goes out? In person, see, in person you will not apply what comes in, what goes out. When person is coming in, let's say debit, when person is going out, no, not like that. In case of a person, we say who is a giver, who is a receiver. Okay? So if I give you this pen, you will become receiver because you are receiving the pen. I am giving you the pen, so I will become giver. What I will become here? I will become giver here. Okay? So as per this, debit means all your receiver, credit means all your giver. Now, nominal. Nominal includes all your expenses, all your losses. Nominal includes all your nominal includes all your expenses and all your profits, income. Okay. So that is a part of nominal. Your day-to-day activity, salary, payment, rent, payment, commission, receipt, commission, paid, interest, charge, interest, receipt, whatever it is. It is a part of nominal. Now, if you see the rule of nominal, debit means all your expenses or losses. Credit means all your income or gains. Okay? So now if you see machinery account as per these three rules will come under real. So first is equal to Q. Then outstanding salary. See, if you just see the salary account, if just salary account is given, so this is your nominal because this is your day-to-day expenses. But as it is saying outstanding salary, means this is representing now that your salary is still unpaid. Outstanding salary, unpaid salary. This is showing. So this becomes the representative personal account. It is representing, this outstanding word is representing that your salary is still unpaid. So here outstanding salary will come second R. Then commission receipt. See, commission receipt, this is not your representative. Okay, this is already saying that you have received your commission. This is your income. This is your income. So this is your third P. Then Rajesh capital account. Rajesh is one person. Okay, so this is going to be your personal account. So fourth S. Now let's check which is your correct option here. 1Q, second R. First option is only right. Yes, so here answer is equal to A. Okay, this is the right answer. Next question. A businessman purchases a calculator worth 300 and expenses it off instead of capitalizing it. Now, this treatment is justified on the basis of prudence, consistency, materiality, or full disclosure. Yes. Yes. So one by one now we will be discussing about each of these terms. See, prudence already we discussed, है ना? If there is any anticipated profit, ignore it. Ignore it. But if there is any estimated losses, yes, record it. You need to record in your, statements under notes. Then, this is your prudence or also known as conservatism. Next is about consistency. Consistency means you need to follow same steps. For example, if business applies SLM method for depreciation, okay? SLM method, depreciation method. So for every year, they need to follow that same method only. They cannot change it. They cannot do it in first year they applied the SLM method. In second year, let's apply the WDV. Oh no, we don't like this too. Let's apply in the third year units of production method. I know this is very tough. Let's apply SLM only. No, this is not you can do. Hana, whatever method you have selected once, apply it throughout the period. This is what consistency. Okay? Then next is materiality. Now this is very interesting concept. Materiality depends business to business. Yes, what is important for you might not be important for your friend. Yes, so that is depend that situation, that circumstances depends from person to person. Now let's take one example here. Let's say here there is one small shopkeeper. Okay, this is the same example I used to take in my paid classes also. Let's say this is a toy shop. Okay, this is the toy shop and their yearly income is equal to, let's say, 2 lakhs. Yes, and there is, let's say, Reliance toy shop that is known as Hamleys. Yes, you can see the store in big malls. Correct. So now, of course, their income for any financial year is going to be in crores. Let's say 100 crores. Yes. Now, let's say during this financial year, this is the financial year 26-27, because of some issues, let's say in both the toy shop, because of the short circuit, fire happened. So because of the fire, in small toy shop, goods destroyed worth rupees, let's say, 90,000. Okay, this is the goods destroyed, 90,000. Similarly, again in Reliance store, okay, that Hamleys store, goods destroyed worth rupees 90,000. Same goods were destroyed in both the stores. Okay, now tell me, this is your A, small shopkeeper, this is the B. Okay, Reliance Hamleys store. Tell me, whose financial stability will be affected? Whose financial, position will be affected? A or B? Tell me, what do you think? A or B? So here, if you see this 90,000 will affect A more. Of course, because they are earning in crores, so these are some, you can say, small disaster for them. Correct. So this is not going to affect Reliance, but yes, this is the same amount which will affect the small shopkeeper. Correct. So this is what you can see. For some business it is important, but for some business it is not important. Yes. So here this is what materiality. This is what materiality. Now next is your full disclosure. Full disclosure means you need to be transparent. Yes. You need to show each and everything related to your business in your final accounts. While preparing it, show your actual profit, show your actual loss, show your actual assets value, liabilities, obligation amount, and your equity. Show it correctly without any fluctuation. This is what full disclosure. So here, as per the question, now let's read it. A businessman purchases a calculator worth 300. Now what happened here? One businessman purchased worth rupees 300 calculator. So though calculator, of course, every time you are not going to purchase it, yes, but the value, this value is only 300. So 300 compared to even 2 lakhs is a small value, no? Is a small value. Anna. So instead of capitalizing it, see why you can capitalize it, because that same calculator you are going to use it for more than 12 months, long period of time, long term. But here you are not capitalizing it. You are not saying this is a capital expenditure. You are saying it is your revenue. This is your revenue expenditure. Yes, because this expenses that you have incurred here, that is very small. Yes, that is very small based on materiality. So based on materiality, instead of going for the capital expenditure, you are writing it under revenue. So correct answer here is, that is answer C. And this is one very important concept in your book. I hope this concept is clear. Okay? Please revise all these concepts. This is given in your unit 2. These concepts tells you that how to do accounting, how to record it, how to report it. So this is very important for every business. Yes. Now, next question. Which accounting principle assumes that an entity will continue to operate till indefinitely? Now, if I talk about one by one all these options, first is business entity principle. It says that owners are different from business. Okay? Here business is also having a legal status. So you cannot just combine them. No, this is wrong. You cannot combine them. Owners are separate and businesses are separate. That is one. Then consistency, just we discussed. This is not the answer. Then going concern. It means that whenever you start any business, your main objective is to continue your business till infinite period. Till infinite period. So that is what going concern. Concern means entity. Concern means business. And what type of business we want? Going business. Going means like a running business. Okay. Then D is matching principle. D is what? That is matching principle. Matching principle means always all your expenses must be equal to your income. Okay. Whatever you are incurring in a financial year, whatever expenses you are incurring in a financial year, that must be equal to your debit and credit. Means all your expenses you need to write in that same financial year. Suppose you have paid salary in August 2027. So in which financial year you are going to record this? In financial year 27-28 and not in financial year 29 and 30. No. Whatever expenses or incomes you are incurring in a current financial year, record in that financial year only. And always remember why I'm saying debit will always be equal to credit, because every transaction that you are going to record in accounts, that is going to follow dual accounting concept. Yes, dual concept we follow. Dual means two. Means for every transaction you have two sides. One, that is your debit side, and the second, that is credit side. So because of this nature, your debit is going to be equal to your credit. So that is your matching concept. Yes, but as per the question, they are asking that your entity will continue till indefinite period, and that is your going concern. So right answer here is, that is answer C. Next. Under the accrual basis of accounting, revenues and expenses are recorded only when cash is received, when the transactions are related to, when they occurs, whether it is cash flow or no cash flow. Yes, but if there is any actual, transfer of your ownership or generation of any, means you are generating your liabilities, you are going to record on immediate basis. So right answer is answer B. See, already we discussed about the accrual concept. So I hope now you can tell which option is correct here. Okay. Now, next. A debtor of 10,000 has been declared insolvent. Now, it is agreed that 45 paisa in the rupee will be recovered from him and the balance will be written off as bad debts. Now, what is the correct journal entry? Now, first, let me tell you what is the meaning of 45 paisa in the rupee. See, if I tell you, tell me 40% of rupees 100, it means what? You need to say 100 into 40%. And that means I'm talking about 40 rupees. Okay? Let's take one more example. I am saying 60% of rupees 200. What you will do? You will say 200 into 60%. Isn't it? So you will say 120. Correct? This is equal your 120. Yes? Now, you are going to replace this percentage. Correct? Now, how you are going to write? Sorry, let's take one more. Let's say 25% of rupee 1. It means what? 25% into 1. Okay, so that is going to be 1 into 25%. 0.025. Got it? One more example. Last one. Okay. 45% of rupee 1. So what you will do? 1 into 45%. So that is 1 into 45%. 0.45. Yes. Now, replacing this 45% with paisa. Replacing this percentage with paisa. 45 paisa of rupee 1. It means we are talking about 0.45. Okay? This is one way to tell you to calculate how much amount is recoverable. Instead of writing percentage, we are using paisa. Yes? Because in a 1 rupee, you have 100 paisa. Hana? You have 100 paisa. So this paisa, or you can write percentage. Here they are using alternatively. They can use alternatively. And this is very important concept. Now, as per the given question, they are saying a debtor. Debtor means what? Debtor means customer. Hana? A debtor, a customer of 10,000 has been declared insolvent. Let's say here is a seller. Seller supplied goods worth rupees 10,000 to this customer. Customer said, I will make the payment after 1 month. Okay? Now today is due date. Today is that day after, that is the due date, means today is the due date. Now, here on due date only, it is known by the seller that now this person is insolvent. Means this person is not earning, not having any assets. Now you cannot recover single amount. But they are saying it is agreed that here this person will give 45 paisa in the rupee will be recovered from him. So how much is recovered? 10,000 into 45 percentage or paisa. Okay, just see the P. P means paisa, or you can say percentage. And in simple terms, you remember percentage only. Okay, so it means 10,000 into 45%. So that is 4,500 you have received. And the balance will be written off as bad debts. Bad debts means it is not at all recoverable. Yes, bad debt means it is not at all recoverable. Yes, so this is going to be how much amount? Minus 10,000 means 5,500 is going to be your bad debt. Now, bad debt is your income. This is your gain. No, this is not gain. This is your loss. Because it is not at all recoverable. So which concept of golden rules you will apply here? That is going to be nominal. That is going to be nominal. Yes, nominal debit expenses or losses. Credit income or gains. So credit is not at all your answer. Debit is your answer for bad debts. So of course, bad debts will come on debit side. Okay? Bad debts will come on your, but recovery means somewhere in future, this person paid you the amount. But here they're not saying that in future, this bad debt person will make the payment. They're not saying anything like that. And so how you are predicting it and writing the recovery amount, this is totally wrong. Then provision for bad debts. Here also my bad debt is there, but one more term, provision. provision you make when you have 50-50% surety. 50-50 chances are there that this person will make the payment or not. You are not sure 100%. But when you declare bad debt, it means you are now 100% sure that this person will not pay any further payment other than 4,500. So provision is not at all required here. Now D or A. Okay, because in D also they are saying bad debts. In A also they are saying bad debts. But if you check the A1, bad debts equal to 5,500 and bad debts for the D is equal to 4,500. So here bad debts is equal to 55. So right answer is answer A. Now why cash on debit side? Because cash is coming. We follow real account rule. Debit side, what comes in? Cash comes in. What comes in? Cash comes in. And from whom it is coming? Debtors. Hai na? So now you are removing the debtors. So you will write it on credit side. So this is your journal entry. Now remember, if you know this journal entry, especially with the help of golden rules of accounting, you can solve any type of question. Now this 45 paisa in the rupee is very important concept, even they asked in your PYQ. Okay, so remember, with this simple example, this is a simple example. Through this you can solve any question based on this 55 means 45 paisa, 55 paisa, whatever, or in percentage basis. Yes, okay. So with this we complete our today's session. But remember one thing, if you want to join my Telegram group, this is the QR code through which you can scan it. You can join it. And if you want to purchase any paid courses, you can use one coupon code Y895 for the maximum discount. Recently we started our AFM English batch. You can join it and you can clear all your concepts. Okay. Now one more thing. In today's session, I discussed module A. Yes, why I discussed module A? Because we have completed in our paid course. So already if you are in my paid course, it means your concepts are also clear. Now your practice is also completed. Okay. So for the practice I have done in today, practice we have done for our module A. But if you haven't started, then please start it early. What are you waiting for? You don't have much time. And after today's session, at least you can see about your preparation. Yes, where you are standing, how much you have completed. Then also you can take your decision. Already your registrations are going on. After registration, your next step is to go for your conceptual understanding. In today's session, I am only telling you that I have taken very, simple to average questions. Yes, hardly 2 or 3 questions were difficult. But if you see exam level, some questions are going to be easy one. Some questions are going to be difficult one. Some are going to be above difficult level also. So in this session, I have discussed all your concepts. Conceptually, we have discussed. Because when we take difficult questions, now we cannot discuss, different concepts which are applied there. But in simple questions, at least you know the, concept. So I can discuss relative concepts also. That is the reason. Okay, and let's wind up this session. Once again, Happy Independence Day to each and everyone. And make sure you complete your, syllabus before time, so that during your November month, you can easily revise it. Yes. So thank you everyone for joining. Bye-bye and take care.
Wealth management process involves the following steps: assessing the current financial situation of the client, identifying the financial goals, designing a customized solution to achieve the goals, implementing the financial strategies into the plan, monitoring the results and reviewing the plan. So now, which is the correct sequence? So the correct sequence over here is what? All of you check this. Is it A, B, C, D, E? Same as given. Or is it A, C, B, D, E? Means assessing the current financial situation first. Then C, designing a customized solution. Then B, identifying financial goals. Then D, implementing the financial strategies. and E, monitoring the results. So which one is correct? Or is it C, BADEC? Now we can read this. Or is it D, CADBE? Check it. Everyone kindly check this. What will be the answer over here? Is it ABCDE or is it ACBDE or is it BADEC or is it CADBE? What do you think is the right answer? See, it can be anything. Depends on what you do, what you follow. Whenever you do a wealth management process. What do you mean by wealth management process actually? What do you mean by this process? It is basically the client's money we are dealing in. So, assessing the current financial situation of the client. Obviously, first step should be that only. What is the current situation of the client? Where the current, the client's means what is the level, financial level of that client. Now, here you will understand the risk-taking ability of the client. Okay, in stage number 1. Identifying the financial goals. What is the percentage of risk again the client is ready to take? What is the returns which are expected by the client? So if somebody requires higher returns, it means that client is ready to take the high risk. Simple logic of wealth or investment is very clear. Simple logic of investment is high risk equals to high returns. Okay, simple logic. High returns. If you want high risk, you will require, if you want high returns, you will have to take high risk. Means like, suppose if you invest in FDs, you will get a fixed return, 6.5. But if you invest in mutual funds, in that case, you will be getting higher returns. Means there is a risk involved. Mutual funds are subject to market risk. Read the offer documents carefully. Same thing over here. In business also, in client, everywhere. So, assessing, identifying the financial goals, defining a customized solution to achieve these goals. See, now here lies your skill, your and my skill. Who are the financial advisors? Right? Designing a customized solution to the client. So, customized means what? Depending on the client's behavior and the client's risk appetite. Everything depends on that. Behavior and risk appetite. Okay? So, designing a customized solution to achieve the goals. Some client might be requiring a mixture. See, some of them are very risk averse. They say no risk at all. So, for them, FDs is the best, debt funds are the best, or liquid funds are the best. Some clients are risk taking. So, for them, you can go for higher risk events, right? So, designing a customized solution, implementing the financial strategies. Now, once you design, see, everything is good on paper, okay? But when it becomes practical, devil lies in the details. When you go on implementing strategies, there you will find the difficulties, isn't it? So, implementing the financial strategies into the plan. And last one is monitoring. Monitoring and reviewing. See, very important words these are. Monitoring and reviewing. It may happen that after doing all these steps, you may go wrong. The market may turn reverse. So, in that case, you have to always monitor what is happening, as well as, if possible, suppose if you want that some stocks are not working, some of the assets are not working, in that case, you'll have to review it, change them. Isn't it? So, change is the way of life. Simple. So, what are the steps? What is the correct strategy? What is the correct process over here? In the comment section, it is A, B, C, D, E. Correct? A, B, C, D, E. Same sequence. Nothing change is required. Got it? Next. Which of the following is correctly matched definition? See, which is the correctly matched definition now you want? Which of them is correctly matched definition? Okay. So, let's look at it. Asset allocation management. First, asset allocation management. You have to check which one is correctly matched definition. Okay. The asset allocation management is an investment advisory fully dedicated to managing investment portfolios with the only focus on initiating the income generation. It aims to balance the risk by moving among investment categories. So, check this. Is it correct? Is this correct? Yeah, what do you think? So, is the first definition correct? Asset allocation management. See, as an investment advisory fully dedicated to managing investment portfolios with the only focus on initiating the income generation. See, main point is income generation. If the client gets income from you, only then the client will repeat your services. Otherwise, the client will never repeat your services. It aims to balance the risk by moving among the investment categories. Now, what do you mean by this? It aims to balance the risk. See, firstly, understand income generation. This word is very important. Income generation. If you generate income for the client better than the expected one, what is expected by the client, then only the client will be back. Otherwise, the client won't be back. Okay? It aims to balance the risk by moving among the investment categories, various investment categories, right? So, is this definition correct? Which one is correctly matched? Number one, this. Number two, tactical management. Diversifying the diversifier management team helps its clients in providing flexible model which helps in meeting the need of the client. So diversified, you can call it diversified management team. Okay, helps the clients in providing flexible model which helps in meeting the needs of the client. So needs of the client, whatever are the needs, tailor-made solutions are given, right? Diversified management. What do you mean by this? Tactical management helps in selecting the appropriate ways to achieve financial strategies by choosing the best alternatives and tactics. So which one is correctly matched over here? See, one thing was remaining, moving among the investment categories means what? See, moving among the investment categories means, suppose right now I am invested in shares. Now, if the fund manager feels that no, shares are now going down, market will go down, the fund manager will shift the money from shares to debt fund or liquid fund. This is moving among the investment categories. And what about this? See, if you check these two definitions are right, very good also. But the problem is they are just reverse. Means tactical management definition is given over here and diversified management definition is given over here. Otherwise, they are right. If I join this tactical management to this, then it's correct. Look at it. Tactical management definition. Tactical management helps in selecting the appropriate ways to achieve financial strategies by choosing the best alternatives. Isn't it? And diversified management means diversified management team helps in its clients in providing flexible model which helps in meeting the need of the client. So only the matching is not done correctly. So which one is correctly matched then? A. A is correctly matched. Okay? A is correctly matched. Got it? All are correct is out. Okay? Common products and services which are generally offered by wealth management professionals are. So which are the common products which are offered by the wealth management team? Now one thing always you note, wealth management, many of us confuse that it is only limited to insurance, mutual fund, FD, some gold, that's it. But it's not that. Wealth management is a plethora of investments. Plethora means huge, kaleidoscope, huge, rainbow. There are many things involved in this, in wealth management. Means it includes this also, insurance, mutual fund, bonds, gold, silver, all this is included. But other than that, check these. Alternative assets. What are alternative assets? It can be anything. It can be your painting also. It can be your hobby also, some stamp collection. It can be anything which the world prefers. Means suppose if I am having some painting of some great Picasso, I am having a painting of Picasso at my home, let's say. So it means what? It's a wealth. It's a property because its cost is huge. Then bonds, corporate fixed deposits, fixed maturity plans and debentures. Do we offer this to the client? Insurance and mutual funds. Do we offer this or is it all of the above? What do you think? Is it all of the above? Do we offer this to the client? All these? Correct? That's the main job of wealth management. So all of the above is the answer. Okay? These are the common products which are offered. Generally, there can be other products as well. There are many other products. Stamp collection. Some stamps, old stamps are also very costly. Some paintings, they are also very costly. You can suggest property also. Anything. Okay, flats. So, anything which can be sold later can be used. Art and antiques, precious metals, wines, rare coins, sports cards are example of what? So these are example of what? Arts and antiques, precious metals, fine wines, rare coins. Coins, there are very rare coins available, and sports cards. These are examples of what? Regular investment assets, alternative assets, common person's assets for investment, and none of the above. What do you think should be the answer over here? Does a common person invest in art, paintings, anywhere? Does a common person invest? No, no. So it's basically what? Alternative assets, correct? Alternative assets is the right answer. Alternative assets. Again, got it everyone? Next. Which of the following is true? Kindly note, see this, true. You want a true answer. Convertible bond. A convertible bond gives the purchaser a right or an obligation to convert the bond into shares of the issuing bank. So, convertible bond means it will give the right to the purchaser. See this, purchaser. A right or an obligation. It can be a right or an obligation. Compulsion. Obligation means compulsory, you have to convert it to shares. To convert the bonds into shares. So, is this correct? You want true. B. Regular convertible bonds. Regular convertible bonds come with a fixed maturity date and predetermined conversion price. So, regular means fixed maturity date. This is the date and predetermined conversion rate. So, it will give you that so and so is the rate at which you have to convert. No change in it. A regular convertible bond. Think of this. Is this the right one? A is right, B is right. C. Mandatory convertible bonds. Unlike regular convertible bonds, these bonds obligate the investor to convert them into equity shares of the issuing company upon maturity. So, regular convertible bonds, it's not compulsory. You may or may not convert it into shares. But mandatory convertible bonds, you have to convert it. You have to compulsorily convert it. So, what does it mean? So, which one is true over here? All of them? Convertible, regular convertible, mandatory convertible. Which one is true? Think of this. Is regular convertible bond correct definition? What do you think? Is it correct? Right? The answer is yes, all of the above. All of the above is the answer. Got it? Clear? Next one. So let's move on. This is a real tough one. 6.5% GOI 2024 implies means, what does it say? Suppose if you get this figure in exam or anywhere, 6.5% GOI 2024. What does it mean? That's what is to be checked. Check this. A rate of interest applicable on the face value amounting to 6.5% with the Government of India being the issuer and year of maturity being 2024. Does it mean this? 6.5% on the face value. Remember, on the face value. 6.5% means this is the interest rate given on the face value of that. Okay. B. A rate of interest applicable on the face value amounting to 6.5% with the Governor of India being the issuer and the year of maturity being 2024. Everything is same in A and B. Only difference is governor, government. That is the only difference. Remaining everything is same. Third one, C. A rate of interest applicable on the face value amounting to 6.5% with the Government of India being the issuer and the year of issuance is 2024. See, here it is issuance. Everywhere it's maturity. Now here it's issuance. And D is none of these. So all of them are wrong. So now tell me which one is correct. 6.5% GOI 2024. What does it mean? This question comes in exam many times. And you must know, as a banker also, you must know what does it mean. You must always know what does it mean, because these descriptions are given when RBI issues the bonds. Okay? Sometimes they don't even give 6.5%, they just give 6.5. So what is the correct answer in this? A, B, C or D? Yes, the answer is, kindly note, governor is not the authority over here, secretary is the authority. Okay? So the correct answer is A. The year 2024 is always the maturity year. It's never the issuance year. So the answer is A. Okay? GOI means Government of India. 6.5 means 6.5% coupon, we call it. Interest rate, coupon, which we give to the bondholder. Okay? Got it? Next. Which of the following is true about sovereign gold bonds, SGBs? Now see this. SGBs are issued by whom? SGBs are issued by whom? SGBs are issued by RBI, Reserve Bank of India. Okay? SGBs are issued by Reserve Bank of India. Okay? What does RBI say in this? See, why does RBI issue SGBs? Because instead of purchasing this physical gold, RBI says purchase our bonds. There is always an IPO. It's not available every time. They'll issue once only. And you will buy the bonds and RBI will have real gold for each gram of this SGB. Okay? Got it? So, which of the following is true about the SGBs? Under this scheme, entities are allowed to invest in digitized form of gold for an extended period. Okay, for an extended period of time without having to avail the gold in physical form. So, you can purchase, okay, the physical form of this e-gold means plain form, paper form of gold, but from RBI, not from anywhere else. Okay. Interest generated via these bonds is tax free. Is it so? Interest generated is tax free. Is it so? Right? So, the nominal value of SGB is arrived at by calculating the simple average of the closing price of the gold that has a purity level of 99% 3 days prior to the issuance of the bond in question. So, the value is calculated. How to calculate the value of the gold? That has purity level of 99% 3 days prior to the issuance of the issuance of the bond in that question. So how do you purchase? On what basis will I purchase? The value is calculated this 3 days prior. Kindly note this word 3 days. And all of the above. Which one is true over here? Is all of the above true? Yes, all of the above is true. All of them are correct regarding SGB. And you will get this question in exam regarding SGB. Okay? Which are the types of municipal bonds in India? Municipal bonds. This question is every exam you will get this municipal bond question. General obligation bonds. These bonds generate the finance for various projects in general, and therefore their repayments are made from general revenues of municipality. So general revenues of municipality, everything is general for all the projects. Various roads, various sewages, various means whatever is comes under the municipality, all the projects. So returns are also from all the taxes which we get from house tax, right? House tax is generally given to the municipalities. So the returns are from that house tax only. From various other purposes also, means there are various sources of income for general bonds. And revenue bonds. These bonds are focused on generating funds for specific projects, and the repayment and the interest issued to the bondholders are processed via revenue explicitly generated by the projects declared in the bonds. What do you mean by this? See, in your area also, those who have gone to Mumbai, you might have seen that Atal Setu. Atal Setu was a combination of central government, state government and municipal BMC. So the revenue generated from that Atal Setu, the toll which they take, is distributed accordingly. So A is correct, B is wrong, and both A and B are correct. What do you think? Both A and B are correct over here? Comments. I want it in the comment section. So the answer is yes, both A and B are correct. Both the points are correct regarding the bonds, municipal bonds. There are two types of municipal bonds, general and revenue. Okay? Among the below mentioned statement, which of the following is not correctly matched? See, in exam, always focus on the question. What do they want? Not correctly matched. Okay? The first stage of the product life cycle is called as introduction. So final stage of the PLC is called as decline. Predominantly horizontally organized model is mostly product oriented model with common customer information for some product. PH we are talking of. For designing a retail, and see this, the question, this is false over here. Huh? So this is false. Okay. For designing a retail banking product and services, customers can be broadly brought together based on the need pyramids, and that is false again. So which one is not correctly matched? So let's go one by one. Let's go one by one. First stage of the PLC is called as introduction, correct? Introduction, growth, maturity, decline. These are the 4 stages. So last stage is decline, that is also correct. So these two are correctly matched. But we want not correctly matched. This is not our answer. Our answer is not correctly matched. PH means predominantly horizontally organized model is mostly product oriented with common customer information for some products. For some products it is common customer information is available for this. So that is also true. So this should be true over here. But what is given over here? False. So this is not correctly matched. So my required answer over here is this one. Okay? Got it? So the point over here is this is the right answer. Because this should be true over here. True. Predominantly horizontally organized model is a mostly product oriented. That is right. It's a product oriented because horizontally is product oriented. And this is also mostly maximum, and with common customer information for some products. So that is true. For some products, there is common customer information. So the answer over here should be true. Here it's given as false. So this is not correctly matched. Got it? Move on. Among the below given statements, which of the following is not correct in context of deregulation and Regal Neal Act of 1994 gram? No, it's not asked to you now. This question is gone. Among the below given statements, which of the following is the reason responsible for emergence of retail banking business in India? So emergence, reason for emergence of retail banking. Okay, why did retail banking come in India? Now we call it Bharat, isn't it? Strong economic fundamentals. Always remember, we must call our country nowadays Bharat. We shouldn't call it India because India was a name given by the Britishers. We must call it Bharat. Okay? So strong economic fundamentals, growing urban population, higher disposable incomes, and all of the above. Why is retail banking existing in our country? Why it is so flourishing? You see, every bank is coming into the retail banking. Why? Because of huge business. Why is the business so huge? The reason is strong economic fundamentals. That's right. We are growing heavily now. Okay, our growth rate is around 6.57%. Growing urban population, more urbanization. Okay, many of us can debate on this, is it good or bad? But urbanization is happening throughout the world, not only in our country. High disposable income. People are having more income, at least in the city areas. And even in the rural areas now you are having it. Better than what was it earlier. So the answer is all of the above. Okay, all of the above is the answer. Okay. Banking facilities like collection of checks, safe deposit lockers, standing instructions for carrying out the instructions of the customer on a periodic basis, merchant banking services in the area of capital market, issue management in the capacity of lead manager, co-manager who issues etc. comes under the category of, my God, it comes under the category of. These are all the jobs done in the banking. Kindly note. Now some of them, let's see one by one. Okay. Some of them you already know. Collection of checks. We already do this. Okay. Collection of checks for, nowadays we have all CTS checks, but earlier we had outstation checks. So that was a major part at that time. Then safe deposit locker. This you know it, right? Safe deposit locker. SI, standing instructions. So that also, this you know it. Okay. Now something new parts which you don't know is this. Merchant banking services. What is merchant banking service? What do you mean by this? See, this merchant banking is a part of your banking. Okay. You are having a subject in wealth management and investment management. Merchant banking is a banking which provides the relationship between the companies and the investors. Companies and the investors, kindly note. Okay, means company needs money always, and investor will have excess money. So meeting them, making them meet is the job of the investment banker. Okay, or merchant banker. Got it? Then issue management in the capacity of lead manager, co-manager to the issues. Okay, so this is what was a new term. Merchant banking. You are having many terms over there. Merchant banking is also called, investment banking is also a separate term. Merchant banking is a separate term. These two will always merge with each other, means they'll talk to each other. Because investment banking or investment management will always have higher funds, huge funds, where to put those funds. And merchant banker will always have lesser funds because he is in contact with the companies. So these two should talk to each other, and they are always made to talk to each other. Okay. So this comes under what services? Savings, current, term, other. Yes, it is other services, right? Other services. You have a separate chapter, other financial services provided by the bank. You have a separate chapter in your RBWM. Okay. So it is all the part of that. Got it? Read this. Non-fund based business of a bank is a part of other services. This includes which of the following? Now, non-fund based business. What is a non-fund based business? Anyone knows? Anyone knows what is fund based and non-fund based? Type in the comment section. Fund based means what? CC term loan. If I ask you, CC cash credit, it's which type of loan? Non-fund based or fund based? Okay, I'll explain you. See, loans are always of two types. Kindly note. In banking, loans are of two types. One is fund based, second is non-fund based. Fund based and non-fund based. Okay. Fund based means where you actually give out the cash. Where you actually give out the cash. Okay. Where do you give out the cash? Again, see this fund based is of two types again. One is overdraft type, second is loan type, term loan type. Overdraft and term loan. OD means what? What can be OD? It can be cash credit, it can be gold loan. Okay, cash credit, gold loan. Then KCC, right? Cash credit, gold loan, KCC. These are all OD type of loans. There can be many others. LAS is also OD type of loan, loan against securities. Okay. Then what about the term loan? Term loan is basically your home loan, personal loan, car loan, wherever you have EMIs. Wherever you have EMIs, that is a term loan. Wherever you have only interest, that is a cash credit, means OD type. So this is both fund based. There is another type that is called as non-fund based. This is the question over here. Non-fund based means what? You have LC, bank guarantee, standby LC, where there are many others. There are almost 8 to 10. You have this in your CAIIB. You don't have it over here. Okay, there are almost 8 to 10. Okay, takeout financing is another non-fund based finance, isn't it? Clean LC is another this non-fund based finance. So there are many. Okay. No cash is given in this. Kindly note. Only word is given. मेरा शब्द ही है मेरी जुबान. नहीं, what? मेरी जुबान ही है मेरा वचन ही है मेरा शासन. Mahishmati. Right? Same thing. Here only word is given. No cash is given. But in future, it can be converted into cash. Okay, if I give guarantee, bank guarantee on behalf of somebody, and if that person does not perform, then I will have to give the cash as a bank. That is the meaning of bank guarantee. Okay. Same thing in LC, letter of credit. Letter of credit. I give a surety to the seller that you send me the documents, I will make you the payment. I, not the buyer. I will make the payment. So here again I am taking the responsibility, primary role. So letter of guarantee, letter of credit, both A and B and none of the above. So which are non-fund based? Both of them, letter of guarantee and letter of credit. Both are non-fund based. I told you there are more than almost 8 to 10. These are only 2, 3. Okay. Got it? So this is non-fund based. Got it? How does a guarantee? See, this guarantee non-fund based can become fund based. I told you just now. How will it become? See this. Suppose if I am the bank, I give a guarantee to somebody, let's say government. Okay. Then it is based on the customer who is building a road. He is a contractor of mine. Okay. He is a contractor, he is a customer of mine. So what will I do? I'll take a FD of 110% of that guarantee amount. Suppose if I have to give the guarantee of 1 lakh. So I'll take the FD of 110 lakh from this customer. This FD will be with me. Tomorrow if this customer does not do the road construction, then the government will come to me, kindly pay me. In that case, what will I do? I'll break that FD and pay to the government. Okay, this is how the guarantee works. So this is a future related payment. You don't pay it right now. Okay, got it? Read this. Among the following, in which of the following accounts interest rate depends upon the period of deposit, and these are offered with facility of getting monthly, quarterly interest as well as deposits with a cumulative interest at the end of the deposit period. So in which of the products do we give monthly rate interest, quarterly interest, half yearly interest, yearly interest, or at the end? Savings, current, term and combination. In which of them do we do this? Savings, current, term and combination. So this is available in FDs, isn't it? Term is the answer, correct? Term is the answer, FD. Term deposit, kindly note, term deposit is the answer. There only you have all these monthly, quarterly, isn't it? Combination means what? Combination is a mixture of, say this, it's a mixture of FD and savings. There can be many combinations. There can be a sweep in account, there can be a sweep out account, and there can be a FDOD also. FDOD is also a part of combination deposit only. So sweep in, sweep out, FDOD, any two products when they are combined, it's called as combination. Okay, so the answer is FD over here, term. Among the below given, which of the following benefits gives benefits of both the deposit as well as saving or current deposit? Means both the term deposit as well as saving plus FD, saving or current. So what is the question? Say this, which product will give me the advantage of FD also and current account also? Simple meaning. So FD plus current account, which will give me this combination? Savings, current, term and combination. So I told you, when two or more products are combined, it's called as combination deposit. Okay, combination. So combination deposit can be FDOD. Okay, I can have this FDOD. In FDOD, what do? We give 9%, means some banks, depending on bank to bank, some banks give 85%, some banks give 90% of that FD amount as loan. Okay, so that can also be given. Or you can do the sweep in account. Sweep in means what? If tomorrow there is a check in your savings account, the FD gets broken and funds are transferred and check is cleared. Okay, that is known as your sweep in. Okay, there is also a reverse sweep or sweep out. If you have extra balance in your savings account, extra balance means greater than your MAB, constantly you are having constant higher balance. Means, let's say my savings account says that MAB is 10,000 and my constant balance is 90,000, constant in the savings account. So bank tells me that instead of keeping this in the savings, kindly convert this 70,000 out of this in your FD. Automatically. So whenever the balance goes above, let's say 15,000, the bank will automatically transfer it to FD. Automatically, isn't it? So it's one of the best things. Because of this, what happens? I get the benefit of savings also and I get the benefit of FD also. And I can attach sweep to this. So if I attach sweep in, then this FD will remain as FD, and whenever I want, it can be transferred to the savings if there is a check. So this is the whole game of combination. Among the following, in which of the given stages there is more growth and sales volume peaks? So among the given following means introductory stage, growth stage, maturity stage, and saturation stage. Which of them there is more growth? Growth is more, and sales volume peaks. Now, firstly, you have to check, are these stages correct? See, we are giving, we'll be giving the concepts also as well as numerical, this objective answers also. You first have to check, are the stages given over here correct? Okay, are these the real stages in PLC? In any PLC, the stages are like this. This is introduction, intro, then growth, then maturity, and last one is decline. Okay, I'll extend this. This is decline. So these are the phases. Okay, kindly note this. There is no phase called as saturation phase. So this is out. Okay. Now only three remain: introduction, growth, and maturity. Now here, introduction, growth, and maturity. Where is the maximum? See, this is all sales. Okay, versus time. Okay. So sales, more growth. Maximum, there is more growth and sales volume peaks. See, sales volume is peaking in this phase. So it is maturity phase. You must always know the 4 stages of the PLC by heart, and what all is there in every stage. Okay, means I'll give you some example over here, because see, this also is very important. Only answer is not important. Suppose if I say if I look at these stages, okay, here only we'll write it here. Okay. Now let's write some important parts about this. Like, for example, suppose if I want investment, where will be huge investment will be high? Where the investment will be high? In which phase? Sales, already you know, sales is high in this peak phase. Okay. So investment will be high in which phase? So here it will be high, here it will be medium, here it will be low. Okay. And here again it starts going high. Because my sales are declining, so I'll again have to invest. Okay. So investment is always high in this introductory phase. Also the important part is profit. If you look at the profit is always negative over here. Profit. Okay. Profit is always negative over here. Negative. Here it is positive. Here it is highest. And here it is going down. Okay. Negative. See, it's like this. This graph will go, if I draw for profits will be like this. It will be like this. They will grow in this way. Something like this. This will be the profit graph. Profit. And this is the sales graph. Okay. So this is the sales graph. This is the profit graph. Got it? So that's why knowing the theory is also important. Knowing the concept is also equally important, rather than just getting the answers, isn't it? Next. Among the following, in which of the given stages the product becomes less attractive for the consumers due to the various reasons and results in drop in sales volume and profit? Now this is obviously known to you. Just now I showed you. Right? Declining. See, once the concepts are clear, then all the remaining questions become very easy. Okay? Among the following, which of the following account includes value additions like internet banking, mobile banking, tagged insurance, personal accident cover, sweep-in, sweep-out facility, other concessions like free remittances? So which account will include all these parts? Savings, current, term deposit, combination deposit, all of the above. Means where can a bank give internet banking, mobile banking, tagged insurance, personal accident cover, sweep in, sweep out, other concessions, free remittances? In which does the bank give? Does it give in savings, current, term, combination? What is combination deposit? What is combination? Yes, combination deposit. That is again known as, is there anything given? Sweep. Sweep is given here, no? Yeah, this. Combination means sweep. It's called as sweep in and sweep out. Okay? Sweep in and sweep out. Means if I am having a FD, see, I'll show you. Combination. This is basically sweep in and sweep out. Both are there. Okay? If I am having a FD and I am having a savings account with you. Now there is a check. Balance is less balance. And there is a check for clearing. Then what does it do? In this case, the FD is broken. FD broken, breaks. Okay? And this amount goes to the savings account and the check is passed. This is known as sweep in. Sweep in. Whenever funds come into the savings account, it's in. The reverse is also true. Savings account, FD. Now your minimum balance or MAB for the savings account is, let's say, 10,000. Okay? So MAB is 10,000 and I'm constantly having in this account, let's say, 2 lakh rupees. Constantly 2 lakh. 2 lakh. Then what does the bank say? Bank says that, see, you earn hardly 2.5% now, roughly, in this savings account. So bank says, what you do is, keep this minimum balance, MAB, plus something if you want. You want 15,000 extra, 10,000, keep 20,000. So 20,000 in savings and remaining account amount of 180. Okay? 180, 1.80 lakhs. You make it a FD. We'll make it auto FD. Auto FD. Okay? Because of this auto FD, what happens? I earn higher rate of interest. I'll give them in writing. Make an auto FD for any of these funds for, let's say, 3 months. So I'll earn some higher interest. So that is the basic logic. Sweep in, sweep out. Okay? So, but you give, the real question over here is, in which of the facilities accounts are these facilities given? It's all of the above. Okay, all of the above. Some of you have written this as current account. It's not compulsory that I should give it for current account only. If I am feeling, if my board bank management feels that the savings account have to be sold more, then they'll give it for savings. If they want the term deposit is to be sold more, we are falling back in FDs. So they'll give all these facilities for FDs also. Okay? Anything. It depends on what you want to sell. Simple. So all of these. Okay? Financial planning seeks to. So what is the use of financial planning? Why do we have financial planning? Financial planning seeks to offer investment advice, offer tax advice, assess the transmission plan, and all of the above. What is this financial planning for? What does it do actually? See, financial planning is a part of your module D, investment management and wealth management. Okay? Financial planning offers all these 3 services: investment advice, tax advice, transmission plan, and all of the above. So the answer is all of the above. All of them. In fact, it gives more services. Rather than these 3, it gives many other services also. Will writing is a part, transmission plan, will writing is there. Then you have separate others also. Will writing is there, the mutual funds, insurance, all these, everything is given over there. Okay? So that's why financial planning encompasses everything. Got it? Next. In today's money terms, the investor needs 20 lakhs and the goal is likely in 6 years with the inflation of 10%, then the future requirement of the funds for the goal is given as. Now see here we don't want the answer. Kindly note, we don't want the answer over here. We don't want the answer over here. We want, do you know the formula? Do you know the concept? Here the answer is asked, is it asked what is the amount? No. It is asked what, which is the, do you know the concept over here? See, the future requirement, you want the future value of money. Okay, you want the future value of money. Okay, so what will be the future value of money? Yes. Next one. Yeah, that's what I've just now solved it. Which of the following statements are correct? Statement 1. In early stages of one's career, the client is in the transition phase. Withdrawal plan is suitable for retired investors. Both the statements are correct. Only statement 1 is correct. Only statement 2 is correct. None of them are correct. So which of them are correct? In early stage of one's career, the client is in the transition phase. Is it so? What are the 3 phases? What are the 3 phases? See this. The 3 phases of anyone's life are these. One is accumulation phase, second is transition phase, third is distribution phase. Okay? Accumulation, transition and distribution. Accumulation phase is generally up to the age of 35. Generally. Okay, here the person goes on buying new flats, new SIPs, new insurances, goes on buying the properties. Accumulation phase. After the age of 35 till about 60. It depends. Sometimes we write it 40 also. This can be 40 also. So up to the age of 60, generally the person is in the transition phase. In this phase, person does not buy anything new. Means some things he might buy, but not that much as he or she was purchasing over here. Right? So the person will not buy anything new. He will just maintain whatever is there. Because by this time he has family expenses. Right? All the family expenses are there, children growing up, okay? So that's why he doesn't go for anything new. He just maintains whatever is there. And last phase is transmission or distribution. This phase, this is also called as transmission phase. Huh? So in this phase, the person knows now 60 age, 10, 20 years. So this person goes on writing for the will. This person goes on distribution of wealth to his next generation or whomsoever he or she may require. Okay. So, distribution phase. So, these are the 3 phases. So, as per this, in early stages of one's career, the client is in the transition phase. Is it so? No. That is false. The client is in the accumulation phase. Withdrawal plan is suitable for retired investors. So, that is true. Retired investor means distribution phase. This person requires money. Okay. So, only statement 2 is correct. Statement 1 is wrong over here. Got it? So, these phases are very important. Concept is also important. Always remember. Accumulation, transition and distribution. Which of the following best defines the bottom of the business cycle? Bottom. Firstly, what is the business cycle? How does the business cycle work? Business cycle is like this. Like this. Okay, this is how the business cycle works. Okay, first is this. See, prosperity over here. Prosperity, or you can call it from here. Anywhere you call it, it's one and the same. First is recovery. Recovery. Then prosperity. Prosperity. Okay. Then depression. No, depression is over here. Depression, last stage, depression. And here it is, this one is different. This one is recession. Always, all the businesses move in this cycle only. Okay? Many times you can start it from anywhere. You can start it from prosperity. First, the business is flourishing. Everything is good. Then the recession comes. Then depression comes, down, totally down. Then again recovery comes. Again it moves to prosperity. Samay ka chakra, right? So same thing. Samay ka chakra. Same thing goes over here also. Got it? So kindly remember, these 4 phases are always there in any business. Any business you call it. Everyone passes through these phases. Okay? Next. Which of the following statements are correct? Consumer confidence index is the lead indicator. Tight monetary policy is a feature of high inflation scenarios. Difficult one. Both the statements are correct. Only one is correct, 2 is correct, none are correct. Very tough ones. Consumer confidence index is the lead indicator. Is it so? What is CCI? Consumer confidence index. It means that consumer confidence index means that how much the consumers or the common person is having confidence in the economy. That is the meaning. Always every quarter they give this consumer confidence index. How much the consumer, common person is having the this confidence in the present economic situation of the country. So it's a lead indicator. Is it so? Tight monetary policy is the feature of high inflation scenarios. If the inflation is high, then monetary policy will be tightened. Means CRR will be up, repo will be up. Tight monetary policy means what? CRR and repo up. So what is it? Answer? Kindly note this. There are 2 types of indicators. One is lead indicator, second is lag indicator. Lead, lag. Okay? This will predict the future. This will predict the future. Okay? So, does this predict the future? Consumer confidence index? Yes. Because if the consumers are having confidence in the banking system or in the economy, it means what? It means that the consumer is okay and the economy is also growing well. Everything depends on this index only. Then consumer confidence, this is right. What about 2? Tight monetary policy is a feature of high inflation. So what is this? High inflation is a feature of high inflation. Okay? You can write it same. Okay? See, I'll give this. I'll change this answer over here because this is right. Both of them are right. Okay? Both of them are right over here. Got it? See, this is also right. This is a lead indicator. True. And this is also true because when you have high inflation, then only tight monetary policy will be means given by the RBI. So this is also true. Okay? So the answer is both the statements are correct. Both are correct. Okay? So this is a feature of high inflation scenarios. Whenever you have high inflation, this repo rate, repo and CRR will always be taken up by RBI. They'll go up. Always. Okay? Next. Among the below mentioned, which of the following is a profit ratio that demonstrates bank's capacity to produce a return on all the assets they have invested in the banking sector? Now this is the question of your branch profitability, module A. Think everyone. Which ratio will give the Capacity, return on asset. Basic logic over here is return on assets. All the assets. Okay, this one. So obviously the answer will be this, ROA, isn't it? What is the formula for ROA? Everyone, what is the formula? ROA equals to net income upon assets. Okay, net income upon assets. Simple. What is net income? But see, I'll go up to the depth. I won't just give you the answer and move out. I'll go up to the depth because that's what is required. You must be clear in the concepts. What is net income? Net income equals to, there are three parts to net income. Kindly understand. Three parts to net income. One is your NII, this NII, or we call it spread. NII, spread, net interest income. This is net income, that is net interest income. So this comes only from where does this come? I'll give you later. Plus other income, means you call it other income, means you can call it TPB. Other income. You can call it TPB, third party products also. Okay, other income minus operating cost. Okay, so this is the formula for your net income. Now what is NII then? NII means your average loan interest minus average deposit interest. Average loan interest minus average deposit interest. This is the formula for NII. So kindly note, we are not here to just give the answers. We are here for the concepts as well, right? So that's why first follow this NII, then follow this NI, then follow this ROI. After this, there will be many other ratios also. ROE is also there, leverage ratio is also there. Okay, we'll cover them as the topic comes. Which of the following is or are not the correct regarding the requirements of a well-designed chatbot? So which are not the correct ones regarding the well-designed chatbot? Think of it. Chatbot. See the options. Chatbot should provide different experience in different channels. Is it so? That is mobile, web, you should have a different experience. It should be available round the clock for conversation with customers. So you want not correct. Kindly note, the question is not correct. It should be available round the clock for conversation with the customers. It should be capable of remembering the customer preferences and use order history to suggest the products. So which one is correct over here? See, you want not correct over here. First you have to know the correct ones, then you'll know the incorrect ones. Okay? So it should provide different experience in different channels. Means, do you mean to say that if I am watching it on mobile, I must get a different experience? If I am watching it on laptop, I must get a different experience. Is it so? So it should never happen like this. Okay, so this is false. This is not correct. So 1 is not correct. Now let's look at 2 and 3. It should be available round the clock. Okay, for conversation with the customers. So available round the clock. So that is true. If throughout the means 24 hours it should be available. Next one, it should be capable of remembering the preference, customer preference, and use order history to suggest the products. So it must be capable of remembering the customer preferences. Means what did I say? What did I want when I approached through the laptop? Now I am through the mobile. So the chatbot should remember what I had opted for when I was working with the laptop. Now I am on the mobile. So it shouldn't get changed. Okay, so this is also true. So 2 and 3 are true. So what are the options over here? So we'll make this as 2 and 3. This is the right option. A, 2 and 3. Okay, only 2 is not correct. 1, only 1, that is obviously not correct. You want not correct one. Okay, so, okay, that's right. Let's make it not correct one. Not correct one is only, which one is not correct over here? So the not correct one here is only 1, not correct. 2 and 3 are correct ones. Okay, so only 1 is not correct. Got it? Housing loans with low premium falls under the which needs as per the Abraham Maslow's theory? So housing loan with low premium falls under which needs? Social needs, safety needs, physiological needs, and all of these. So it falls under which needs? Everyone. Social, safety, physiological. Low, see here, specifically it's mentioned low premium. Otherwise, what happens? See, firstly, what are the Maslow's hierarchies? What are the Maslow's hierarchies? So it starts from the lowest level, physiological. Okay, then goes safety. Okay, then goes social. Then is esteem, and last one is actualization. So these are the 5 needs of Maslow. Generally, any human being moves in this direction. Generally, not always. Okay, generally, human being or any society moves in this direction. Lowest one to highest one. Okay, but it's not always. There are many exceptions to this. So coming to, we are not into that Maslow's hierarchy today. We are not going to discuss what it is and what it is not. What are the limitations? We are not over here for that. So the question over here is, what does this low premium say? Low premium means this. Actualization and esteem are the rich persons. But they also require home loan. Home loan can be given to them also. So when I say low premium, it means I am talking of these 2 categories. Physiology and safety. So, which one will be the options over here? Physiological needs, safety needs, and social needs, and all of the above. So, low premium will be basically for physiological. See, if the answer of safety was not, physiology was not given, then it would have been safety, or the combination is given, physiology and safety. Okay, then it's okay. So low premium, when we say, it's actually for the lowest category. Okay, physiological needs. Among the below causes, which of the following does come under the category of limitations faced by the retail banking? So you want the limitations of retail banking. Which are the limitations of retail banking? Inadequacy of MIS, managing the risk, continuing growth, and all of the above. So which come under the limitations? What will be under the limitations of your retail banking? See, retail banking has very pros and cons, some advantages and disadvantages, or limitations you can call it. Okay. The major advantage of retail banking is, what is the major advantage of retail banking? Very first one is less NPA. Advantage is less NPA. Okay, very important. Diversified, risk is diversified over here. Okay, diversified, very important. Then you can charge higher premium. Premium can be high. Premium can be high. Okay, so these are the advantages. But what are the disadvantages? Inadequacy of MIS means MIS is less. Why MIS is less? Because daily the population is growing and retail banking is all about population, right? So daily population is going. So you make any data, it is definitely going to be inadequate. So this is true. Managing the risk, that is also true, because risk is also to be managed, because as the population grows, number of customers grow, your risk also grows. Continuing the growth, huge competition is there, huge. You see so many banks, so many NBFCs, so many private players are there in retail banking. So there's a huge competition. So continuing growth is also a problem. So the answer is all of the above. D, all of the above is the answer. Okay, because it's really difficult. Got it? Among the below given causes, which of the following does not come under the category of limitations faced by retail banking? Does not come, does come. Why am I so much engrossed with does not over here? Does come. Already we have done this, okay? When retail loan proposals are received, processed and sanctioned and disbursed at the branch level, this is called as the dash model. Hybrid, standby, centralized, standalone. Kindly note, this is the part of your retail assets, okay? Retail asset chapter. There are two types of models in banking for loan processing nowadays. Even for liabilities, there are two types of models nowadays. These are used in liabilities also nowadays. Mainly in nationalized bank, they use it in this loans. So one is standalone, and second is CPU, central processing unit, standalone and CPU. Okay, what is it in standalone? If you look at standalone means what? Everything is done at the branch level. Everything, right from receiving the proposals, then processing the proposals, sanctioning, disbursement, even monitoring. Everything is done at the branch level. Everything, all. So standalone is all done at the branch level. All things are done at the branch level. In CPU model, what happens? In CPU, basically, in this model, branch acts just like a collecting agent. Okay, branch will act like the collecting agent and pass on the documents to CPU. So branch acts like the collecting agent. Branch, okay? Branch will act as a collecting agent only. Branch will act as a collecting agent. Collecting agent. Okay, collecting agent. Got it? So this model is known as standalone. Okay, one is standalone, second is centralized. Centralized means CPU. Centralized processing unit. Got it? A co-branded card is issued by banks. What is co-branded card? Firstly, understand the meaning of co-branded card. There are two types of cards. Okay, one is there are two types of cards. One is solo. Okay, solo you can call it solo, and second is co-branded. Co-branded. Solo and co-branded. Okay. So what do you do in solo brand? Solo means what? It's like the credit cards we get from the banks. SBI card, PNB card, HDFC card. Okay. Single card. Single name. There is a single name given over here. Okay. Only one name of the bank. Only one name. What is co-branded? Co-branded means what? Here they have two names. One is the bank, and second is some other company, not a bank. Means it can be your shopping malls, it can be your HPCL, HPCL or BPCL. These are co-branded. But remember, one is a bank and second one is a non-bank. It is not a bank or not in financial business. Okay? It can't happen that SBI and PNB co-branded. It can't happen. SBI with HPCL, SBI with the PVR, Inox, anything. That can happen. Bank and non-bank. Okay? Not non-financial. Okay? So, a co-branded is card issue is issued by the banks when two or more banks join together, two or more service establishments join together, when the banks tie up with the service providers like hotels, oil companies, etc., and all of the above. So, answer already I have given. It is right. Bank plus other service provider. It's not a bank. Okay. Which of the following statements are true? Loss in stock trading gives FD a sense of stability. Deposits are preferable if the interest rates are going down. Okay. So, which statement is correct? Loss in stock trading gives fixed deposit a sense of stability. What will happen? Here we are talking from the general customer's perspective. If generally there are too many losses in the stock market, what will happen? People will shift towards FD or will not shift towards FD. What do you say? You think, what do you say? If there are too many losses in the stock market, people will shift towards FD or will they not shift towards FD? Will they not shift? What do you say? They will shift, isn't it? So this is true. This is true. Loss in FD will definitely give rise to this FD shifting. Deposits are preferable if the interest rates are going down. See, general tendency I am talking. If the interest rates are going down, what will happen? People will come for more FD or people will not come for FD. Look at the present situation. The FD rates are going down, saving rates are going down, right? So in this present situation, what do you see? People are more interested in making FDs with you, or are they more interested in alternate investment plans like SIP, mutual funds? What are they more interested in? What do you say? So it relates to this part. Whenever remember the rates are going down, like present situation. Presently the rates of savings are going down, plus your FDs are also going down. So in that case what happens? People tend to move towards other instruments. For example, FD, see if rates are down, people will shift their money from, they'll shift it from FD and savings plus SB. They'll shift the money from FD plus SB to, mainly I'll tell you, presently, they'll shift it to either gold or stock market, stocks, and mutual fund. Stocks means you can call it mutual fund also. Okay? So when the rates are going down, people will never prefer FD. Okay, so this part is again false. False. So which one is true? Only statement 1 is correct. Okay, only statement 1 is correct. Got it? Perpetual debt is valued as. So perpetual debt means what? What is perpetual debt? It means that debt, that loan, which does not have a maturity period. There are two things. One is annuity, and second is perpetuity. Okay. So what is the meaning of this? Annuity and perpetuity. Annuity means what? In annuity, kindly note, you have an end date. End date is there. Okay. In perpetuity, no end date. No end date. There is no end date in perpetuity. Got it? There is no end date in perpetuity. So, this perpetuity is, how is it calculated? For calculating the annuity, See, suppose if you want the present value of annuity, what is the formula? Formula for that is C into big one. 1 plus R raised to n minus 1 upon R into 1 plus R raised to n. This is for annuity, present value. But for the same for the perpetuity is A upon R. Very simple formula. A upon R. So this gives you this answer. A upon R. This is, you call it R or Y, anything. Okay. So A upon Y or A upon R. So the answer over here is P equals to A upon R, rate of interest. See, R is rate of interest. Kindly understand. R is rate of interest. Okay. You want to buy a house with a market value of 80 lakhs. The bank's valuer appraises the property at 75 lakhs. The bank offers a maximum LTV of 80%. Property value is 75 lakhs, lower of this market value or appraised value. Right? So now, maximum LTV given is 80%. Now see this, while sanctioning the loan, any loan, there are two methods which are given in your book also. One is based on the property, second is based on the income. Okay? One is based on the property, second is based on the income. So you have to solve this using both. See, I'll be solving separate numericals. On property we'll be solving first, and then on second numerical will be based on the next one will be based on the this income. So let's solve this first. So what is it given? 80 lakhs. See, property value is 80 lakhs. Okay. Now, but market, the valuer has given the value as 75 lakhs and bank is giving maximum 80%. Now this is quite easy. Yes. All of you can solve this. Try this, everyone. This is a bit easier, isn't it? What do you say? Maximum LTV is 80%. Okay. And loan percentage is not given here. Yeah. Loan percentage, anything given? No. Generally, see this. So bank is allowing maximum LTV as 80%. 80% means what? Whatever the valuer says, whatever the valuer gives the value, 80% of that much will be given by the bank. Then what about the remaining one? The remaining amount will be given by you as a margin. So in this case, see this, bank loan will be how much? See, this is based on property. Kindly note, bank loan based on property. Based on property. Property value. Okay, so that is equal to what? Whatever is the property value given by the bank's, this valuer, into 80%, because the LTV is 80%. So that will be 75 lakhs. 75 lakhs into 80%. So it comes to 75 into 80%. Think, everyone, give the answer. I think so, 60. Yeah, 60 it will be, right? So it is rupees 60 lakhs. So this much will be the bank finance. Bank finance. Okay. What will be your share or margin? So your margin will be margin. That is equal to, what is it? 75 lakhs. Minus 60 lakhs, right? This much will be bank finance. So 15 lakhs will be your margin. See, this is based only on the property. We are not solving here based on your income. This is only based on the property. Got it, everyone? Clear? It is based only on the property, not on the income. Clear? Move on to the next one. See this. Next one. You have a net monthly income of 1 lakh. You have an existing car EMI of 15,000. The bank allows maximum EMI of 40% on your net income. Your spouse also has an income of 1 lakh. So, see, spouse means if husband is the first person is husband, wife is second. Spouse. If first person is wife, husband is second. Okay? So, spouse means anyone. Counterpart. Okay? You can say. So, now what is the rule over here? See, kindly understand, as per our books, for net income we have, means home loan is always based on income now. See this, home loan based on income. Okay? Home loan based on income is what? See this, home loan based on income. Based on income is what? If it is gross income, see this, gross income, gross into how many times? Gross into how many times? Gross income into how many times? As per the book, it is 36 times. Net income into 60 times. Okay, whichever is higher. Whichever is higher. Now here, in this problem, gross income is not given. Net income is given. 1 lakh. See, net monthly income. And also your spouse income is given. 1 lakh. So spouse is also there. So net total income is how much? For you as well as your spouse. Yes, total income. So total income, if you calculate, total equals to 1 lakh plus 1 lakh. So that is equal to 2 lakhs. So your net income, total net, is 2 lakhs, right? Net total income is 2 lakhs. Got it? Now what? Next what? Existing EMI is 15,000. So existing EMI, calculate 15,000. Okay? What is it given next? Bank allows 40% of your EMI, 40% of your net income. Okay? So bank will allow only 40% of your net income. Now you calculate the net income of both. So what is the total EMI allowed by the bank? Okay, total EMI allowed, EMI should be equal to 2 lakhs into 40%. 2 lakhs into 40%. So that becomes what? 80,000? Yeah. So 80,000. 80,000. So this much EMI bank can allow you. Means you can have any loan up to this much EMI. All the loans together. But you are having some EMI also, no? 15,000 EMI is there existing. So you will subtract it. So remaining EMI is what? Remaining equals to 80k minus 15k. So that is equal to what? 65k. So net is 65k, right? 65k is your net remaining EMI which the bank can allow. Now this 65k into 60 times. This 65k into 60 times. So what will be the answer? 65k into 60 times. So loan equals to 65k, because this is the net income, into 60 times. So get the answer, everyone. 65 into 60. Everyone. This much loan they can allow you. Okay, this much loan they can allow you. Bank can allow you. So what is it? Check this. Check the answer. 65k into 60. So it comes to 1, 2. Okay, 39 lakhs I am getting. Are you getting the same? 39 lakhs. Okay. I'm getting it as 39 lakhs. Lakhs. Okay. 39 lakhs I'm getting. Got it? So this much loan bank can give. This is very conservative side. Okay. This is very conservative side. See, generally what happens, if 2 lakhs is your income, means some banks do it this way. They carry out this 40% rule. 40% is what? 80. So 80,000. 40% 2 lakhs, 80,000, yes. Then 65k, oh, this much only. Yeah, you can't go beyond this. Okay, you can't go beyond this. This is the only way you can calculate. Okay. Some banks directly take this 2 lakhs and multiply it the 60 times. But then it becomes huge. Okay, then it becomes around 1 CR you can give the loan. Okay, some banks do this also. Your net income total multiplied by this. But there's a problem. The problem is your existing EMIs will also hamper you. So these existing EMIs will also need to be calculated. Also you will have monthly expenses. Suppose if I take this full 2 lakhs for my EMI, then what about my monthly expenses? Right? So this ratio 40% depends on bank to bank. Some banks take it 50%, some banks take it 40%. Some banks take it 60 also. Means they allow you EMI up to 60%, but that's very dangerous. Okay? Got it? Let's solve some other questions related to home loans.
Hello, everybody. Welcome to this special session of Independence Day. As you know, today is the Independence Day, the 15th August, and we have organized a special marathon class for all of you. As you know, that the JAB exam is scheduled in the month of November, and for that, now the question practice becomes very, very important. And that is the reason why we have this particular session, the Independence Day special. As you know that India is now been independent since 1947. More or less, we have completed 79 years and now moving towards the 80th year of independence. So one nation, one goal, and the theme talks about the JAB success as well. Stay till the end of this session. You will definitely find it useful. So let's start. Let's begin with IE and IFS. Then subsequently, the lectures, the session for PPB, AFM, and RBWM will also come in. So the idea is to give you the best questions here, best type of MCQs, and ultimately via those MCQs, you should be able to understand that what kind of questions IIBF is asking. So I will highly encourage everyone to reply to answer in the comment section, because only then we will be able to gauge the level of our preparation. Right. So first question in front of us, it is in the form of case study only. The RBI uses different measures to monitor the total stock of money in the economy. The measures being labeled M1 through M4. So starting from M1 till M4, we have the measures of money supply. These are classified based on their liquidity, how easily they can be spent. The most liquid part is M1, least liquid is M4, and whether they are considered narrow or broad money. So the narrow money stands at M1, broad money you can call M3. An economist is analyzing the financial health of a specific region. She gathers the following data from the local banking along with the post office systems as well. So the components are given here. Currency with public is given as 5,000 crore. Demand deposit with the banks, it is given as 4,000 crore. Other deposits with RBI mentioned as 500 crore. Saving deposits with the post office 1,200 crore. Time deposit, also called as fixed deposit with the banks, it is 8,000 crores. Lastly, you also have the total post office deposits excluding national savings certificates amounting to 2,500 crore. So this is the information, this is the case which you have to analyze. And now, based on that case, try to answer the questions. what is the value of M3 in rupees crores? So when you talk about M3, it is simply equal to what? It will be equal to M1 plus the time deposit. And what is M1? M1 is simply currency with public plus demand deposit plus other deposits with the RBI. This is the ultimate formula for M1. So simply in all the three components, add the time deposit, you will get the M3 as the right answer. So currency with public, it is mentioned as 5,000 crore. Add demand deposit. This will come out to be what? 9,000 CR. Along with that, you also have to add the other deposits with RBI. That is rupees 500. So add the 500 rupee 9,000, you will get 9,500 crore as the M1. You have to find M3. Simply in M1, add the time deposit, which is 8,000. So 8,000 plus 9,500. What will be the right answer here? You will get 17,500 crore as the correct answer. So the right answer stands at option A. Right? I hope that everyone will arrive at this right answer as option A. Right? Simple question if you know the formula. Consider the following statements. M1 excludes all the post office deposits. So here, not only you have to know the formula, but also certain kind of analysis also is required. Whenever we talk about analysis part, this is where you should hit. The application part is started by the IIBF now. You should not be at ease with the formula only, but also you must analyze that how we are arriving at a particular formula. So M1 excludes all the post office deposits. In M1, we do not have any kind of post office deposit. So this is a correct statement. M2 is always greater than M3 in the given data. So it is not true. Fine. You cannot just correlate two terms, M2 and M3, when they have different components. M2 has the component of M1 plus the post office savings part. M3 has M1 plus the time deposit. So although both these have M1 as a one component, but ultimately there is a difference between the post office saving component and the time deposit. So you cannot relate these two as such and cannot arrive at such conclusion that M2 is always greater than M3. This is a wrong statement. M3 does not include any post office deposits. Yes, nothing of that sort is mentioned in the M3. No component has post office as one of its parameter. So this is again a correct statement. M4 includes components that are less liquid than those in M1. In the first initial reaction only we have given you that M1 is the most liquid one, M4 is the least liquid of all. So what will be the correct answer here? 1, 3 and 4. Second is a wrong statement. Correct answer comes out to be option B. Yes, B is the right answer. Then if 2000 rupees, 2000 crore rupees is shifted from currency with public to demand deposits, what will be the impact? So when you talk about currency with public and demand deposit, you have two different components. Currency with public is a different component altogether. Demand deposit is again a different component, and both these components are a part of M1, right? So not only you will have to remember the formula, but also tend to analyze the formula. If you can analyze, then only things will change. Then only you will be in a position to answer correctly. What will be the impact? M1 increases. If we talk about M1, both of these are in M1 only. So whenever we talk about shifting the currency from currency with public to demand deposit, do you think so that any change will happen to M1? M1 is what? Currency with the public plus demand deposit plus other deposits with the RBI. If I add 2000 here or 2000 here, wherever I am adding, ultimately the cumulative aspect is that M1 is rising. M1 will rise, but it does not matter that whether I am putting 2000 here or here. If initially, let's suppose 2000 was in the currency with the public, now I eliminate this component and move the 2000 here in the demand deposit, which is mentioned in the question. So the net change is zero. Nil change will be there. So M1 will increase? No. M1 will decrease? No. M1 will remain unchanged. C is the right answer. Fine. Then which among the following statements is the most accurate? Try to answer this question, the most accurate one. All the components of M2 are included in M3. So do you think that M2 and M3 components, they are having some overlap, right? All the components of M2 and M3, they are having some commonality. So no, M3 has M1 plus your time deposit. M2 is having M1 plus the post office saving deposit. So all the components of M2 are included in M3? No, we have a difference of post office saving and time deposit. So this is a wrong statement. M3 is independent of M1. Again, no, M1 is indeed a part when we calculate the M3. So this is a wrong statement. M4 includes saving deposits twice. No, M4 is equal to M3 plus all the deposits under the post office. So it is not having doubly deposit of your savings deposits in the post office. So this is again wrong. M2 includes a component not present in M3. So M3, yes, we have the component as time deposit, which is not there in the post office saving deposit. So correct answer, the most accurate one is option D. D is the right one. Then M1 is the most liquid measure of money that everybody knows. It excludes the time deposit and post office deposit. Yes, when you talk about the liquidity, you will find that why M1 is the most liquid of all, because it's not having time deposit, not having the post office deposit. There is no long term deposit included in the M1. So definitely the reason is correct, the assertion is also correct, and reason is explaining correctly the particular assertion. So the right answer will be what? Both A and R are true, and R indeed explains A. Correct answer, option A. Fine. Okay, so I hope that this particular question is clear to everyone. It is very important to understand all these nitty-gritties around the money supply. We have seen in the past that many a times IIBF asks direct questions from formula, but sometimes you will witness such questions as well where you have to understand not only the formula but theory also. Now, this is a case, try to read it out, try to go through this particular case, and then we will be moving on to the answers. Try to read it out. Yes, so that's the speed which you should maintain. At least try to go through this entire passage within 1 minute, right? So this passage is all about law of demand. And law of demand, we have seen that the law holds true whenever the prices goes up, the demand falls. That is what is law of demand. And we have two exception to this law of demand. Exception 1, whenever we are talking about the inferior goods. Exception 2, whenever we discuss the luxury items. So scenario A and scenario B, two scenarios are given. One talks about the iPhone 16 and the second one talks about onion and bajra crisis. iPhone 16 considered as a luxury item, bajra onion considered as the staple diet. So whenever the prices of Apple products go up, we find that more and more demand is there. So long queues will be formed. On the other hand, scenario B, whenever there is a sudden spike in the staple diet prices, you will find that slowly and gradually people will shift from the bajra onions to consuming more bajra and onions because they want to have all their essential calories maintained. Now, when you talk about the luxury items like milk or meat for those people who cannot afford the milk or meat on daily basis, you have to acknowledge this fact that all these low income households will be shifting more and more towards onion and bajra despite of the fact the prices are high. So just imagine that onion prices move up by 2 rupees and simultaneously, since it's the inflationary trend, the milk prices are also moving up, that's by 3 rupees. So what will happen? Already the milk is expensive for these people who are living in the rural Rajasthan in this particular case. And ultimately they will fall for the more and more consumption of onion as well as bajra. They will stop consuming the milk altogether. Right? So despite of the fact that the price of iPhone is moving up, still there are long queues to buy the iPhone. Despite of the fact the onion and bajra prices are moving up, still their demand is picking up. So this law of demand, that price and demand, they are not having any kind of correlation. But in order to maintain the law of demand, there must be an inverse relationship between price and the demand. So we are looking at scenario A and B as the exception to law of demand. And in this exception, scenario A talks about the Veblen goods. This kind of exception for the luxury items is given by Thorstein Veblen. And in scenario B, you have the Giffen goods being described. And this type of exception is given by Robert Giffen. So two economists providing you with two different perspectives about the law of demand. Now let's just try to answer the questions here. Based on scenario A, why did the price, the demand of iPhones increase despite of the price hike? So the demand for iPhones, it rose definitely, but we also saw that there is a price hike. Why this happened? Because of substitution effect? No, substitution effect is indeed for law of demand. It is not for the exception to law of demand. Because it is perceived as a Veblen good representing the social status. So Veblen good, more or less, yes, we talk about the iPhones as Veblen commodities or Veblen goods only, representing the social status. So correct answer will be option B. Then scenario B, the behavior of rural households buying more staples as prices rise is a classic example of what? So whenever there is price hike, and the staples are in demand, still they are in demand. It is the example of law of supply, law of diminishing marginal utility, Giffen paradox, or consumer equilibrium. The correct answer is option C. That is Giffen paradox, because the prices of some staple are moving up. and this study was done by Sir Robert Giffin. Law of supply simply talks about the supply side of the money. It is not having any connotation, any relation, direct relation in this case. Law of diminishing marginal utility. It talks about the demand. Whenever you are using or consuming, let's suppose, one apple, when you are hungry, you find it very much attractive. Right. So when you talk about the apple, you are hungry, somebody feeds you with one apple, you are satisfied. Two apple, again satisfaction is there. As you consume three apple or more, you will find that it is not at all proper diet for you. You will not find the utility you were looking for. So as the consumption increases, the utility falls. That is what we are talking about in the law of diminishing marginal utility, which calculates the level of satisfaction. That is the law of marginal utility. Consumer equilibrium, more or less, it talks about the equilibrium when the supply and demand forces are in tandem. The market equilibrium talks about the supply and demand forces. Only the demand forces, if you consider, they are for the consumer equilibrium. So it has no relation as such in the scenario B. Correct answer, the simple one, Giffen paradox. C is the right answer here. And you will find C as the correct answer. Then, which of the following best describes conspicuous consumption as mentioned in the case study? Conspicuous consumption, more or less, we are talking about a noticeable consumption. And noticeable consumption is what? The one which you can easily notice, right? So, noticeable consumption, what do you think? That when somebody is buying bread, butter, wheat, then somebody will notice? Or for that matter, when somebody is buying the luxury cars, that becomes a noticeable consumption. Yes, so we are talking about the luxury items. So buying goods secretly to avoid taxes, nothing of that sort is happening in the conspicuous consumption. Buying goods specifically because their high price displays the wealth. So wealth is being displayed here. Yes, we can call it that more and more pricier the products are, you are buying that product. Ultimately, it showcases your wealth. Correct answer is option B only. Right? B is the right answer. We are talking about Veblen commodities. Veblen commodities. Right? Then, according to the income effect, why would a petrol price hike normally reduce the demand? So, demand will be reduced only when you have something else to purchase as compared to the original product. And that's what we analyze in the law of demand. That yes, I want to buy wheat, but its prices are really high. So I can directly buy rice and consume it. So I have a substitute of wheat in the form of rice. That's why the demand of wheat will be lowered. If I don't have any substitute, if I have to compulsorily eat wheat only, no matter what the price hike is, I will be demanding it again and again. Right? So law of demand will hold only when you have some substitute known as substitution effect. Then we have the second effect also, which is the income effect. As and when the prices of a product are rising, so what is your initial reaction? You will try to balance out your savings level, the level of savings. And ultimately, these savings are very much essential for the entire consumption. If you are having, let's suppose, rupees 100 as the consumption for the petroleum, and suddenly the prices rise to 110. So you have two options. One, start using the public transport, look for the alternate, look for the substitute, or for that matter, try to save more by curbing your other needs like shopping. Right? You want to save the rupees 10, so you can do what? Do less of shopping this month, or for that matter, do less of consumption which is not required. Right? So, like that, the income effect is being explained under the law of demand. So, according to the income effect, why would a petroleum hike normally reduce the demand? It makes the consumer feel richer. The consumer feels rich that yes, now I am having more money. It reduces the consumer's real income or the purchasing power. The real income is being reduced. Yes, that's what we are talking about. Actually, the income is what? Monthly income is same. You have the monthly income as, let's suppose, XYZ amount in this month, next month also XYZ amount is there. But what is the difference? The difference is rupees 10, which has increased in the petroleum price. So your real income will get a hit of rupees 10. And in order to curb this, you will be resorting to some alternate. Correct answer is option B. Fine. So income effect, you either resort to the substitute and go for the substitution effect, or try to save so that your effective income stays the same. Then, if the Indian government wanted to stabilize the situation in scenario B, what would be the most effective economic move? Just imagine a scenario wherein the Bajra, scenario B, the Bajra is the only staple diet.